or what will the government do in terms of the stance? Because you're looking at a tone which probably will turn hawkish. Now, in the scenario where we are, from where we started off in the last policy to now, where does this take you to?
Hi, good morning. I think the broad consensus is for a pause for this policy, broadly because for this quarter, we're looking at inflation in the range of 4.1-ish. It is from the next quarter that inflation starts to increase. And then for next 3 quarters, you're likely to see a print which is ranging between 5 to 6%. Although the average inflation will stay in the vicinity of 5 to 5.3%, as of now, given the pass-through that has happened in terms of petrol and diesel prices and other commodities. Now, taking into context of what this means for inflation targeting central bank, we do anticipate that there could be a very high likelihood of rate hikes in the second half of the current financial year. However, if there is a quicker resolution to the backdrop in the West Asian crisis, then the need for us to act very aggressively reduces because the situation is so fluid. And hence, for now, we are penciling anywhere between 25 to 50 basis points in the latter part of the financial year.
Okay. Garima, so if lower growth, higher rates, what is it that could append this, what seems to be a most logical hypothesis? Could it be a pause in the conflict and oil prices coming down? And despite the after effects of that staying on, can it enable the RBI to stay pat on the rates? Or could it be some action from the government side? Because what is being spoken about, we broke this story yesterday early morning about the possibility of FPI taxation being different. Could all of that also have an impact?
See, there is not going to be any one measure that is going to aid or help in the current crisis, because this is for the first time since 1991 liberalization, we actually facing a capital account problem. Till now, India always had a current account problem. So attracting flows or limiting the outflows, particularly of dollars, is the only solution that both policymakers, the RBI and the government will have to tackle with. There are certain measures on cards that can come, whether it's relaxation on ECB, or it is a possible announcement of a bond issuance, or possibly furthermore swaps from the government side, taxation, etc. Anything that can help you to limit the outflow of dollar and probably get any incremental dollar is going to be welcome. However, to believe that even if the current crisis ends, there is not going to be any policy action looks very difficult because the pass-through has already happened, not just on the petrol and diesel prices, but across the board on other kind of energy commodities, on metals. It's all reflecting in the WPI wholesale inflation. So the first and the second quarter, and more so the second quarter, is going to see a sudden spike in across the board in most inflation parameters and metrics. What is critical for a central banker to assess is this hike transient, or is this hike more permanent in nature and durable? If this leads to forever change in inflation expectations and forever change the guidepost or the goalpost with regards to inflation, then of course they will be far more hawkish than what Strait anticipates. For now, given the pass-through that has taken place, I believe a 25 to 50 basis point with some withdrawal of liquidity would be the right action.
Garima, hi, Tamanna here. Good morning. I'm wondering if there is any case at all. I know everyone believes that there is going to be no rate movement. So I'm asking a little bit of a contrarian question. Is there any case to front load a rate hike? Even a 25 basis point rate hike at this point? Because one would argue that even when the West Asia crisis subsides, a lot of the damage has already been done.
Hi, Tamanna. I think for an inflation targeting central bank, there needs to be evidence that the pass-through to inflation is looking more permanent in nature. It needs to seep in and needs to forever dislodge inflation expectations. Far now, at a sub 4% print that we've seen for the previous month, and the expectations of the June will also be somewhat more measurable. I do not think a central banker would like to preempt and hike rates, more so because this particular backdrop of West Asian crisis is also a crisis of external sector and also a crisis which is going to actually reduce your growth, I would say at least a 40 to 50 basis point, if not more. So it would rather be a better approach to wait and watch, something exactly what they did during COVID. They waited it out till they started to see signals that it is becoming more permanent and durable nature, and then they hiked. If you recall, we were among one of the last central bankers to actually take an action. We might argue that we were behind the curve, but I think given the thinking of the RBI, I think somewhat similar kind of approach might be adopted for what we did during COVID.
Okay, thank you so much, Garima, for speaking with us this morning. And I mean, the action is going to start in just a few minutes. If you can get that countdown up, you're going to have it in an hour and 23 minutes. You will hear from the governor. We'll take a very short break, but we're going to be coming back with all the top trading strategies on this very exciting morning. Stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you...
Welcome back. You're watching India Market Open. I want to quickly pull up the implied and give you a sense of what's happening. You're seeing 44 points up. Frankly, it's neither here nor there. What's going to matter is what the governor says in a short while. Kush Bora and Parag Thakkar joining us this morning as always. Welcome. Good morning, gentlemen. Kush, let's start with your Nifty take.
Sure. First of all, very good morning, guys. And I'll get to Nifty in just a bit. But before that, can the production team give me a mic or something?
You have a mic here.
Yeah.
I want to drop it by the end of these discussions.
Okay, why?
And you guys are going to enjoy this in particular, all three of you. Now, let me start with the Nifty bit and then I'll come to the updates. Impressive rally yesterday. We broke the lower high, lower low formation on the Nifty. There was a good up move. Mild long build up on Nifty futures, PCR at a harmless benign level of 1. And remember, we spoke of positive divergences and a recovery rally on the Nifty. We saw that and it might just continue. Bias mildly positive. But, the risk-reward ratio is not very favorable for a long trade because the immediate resistance is at 23,500 and 23,700, but the bias is turning positive. So if you're okay with that kind of a risk-reward ratio with a stop loss at 23,200, you can consider long on Nifty. More impressed with the Bank Nifty, 3 sessions of positive gains, 20-day moving average taken out, on the verge of crossing the 50-day moving average, and it's got still some momentum going for it. Now today's, of course, the big event. Once that is out of the way, hopefully favorably, then you can go out and hit 54,900 and 55,500. So that's still the index to go long. Stop losses at about 53,800, 900 kind of zones. So still prefer Bank Nifty over Nifty. Now for the calls, right? Going with all long calls today, RBL Bank, Reddington, and HCC. RBL Bank, by the way, this one's actually given a structural breakout over a long-term period. So this rally might sustain for some time. But from a near-term perspective, 363, 372 are your targets. 345 is where you keep that stop loss. Reddington's had a good move over the last few sessions, good momentum, a healthy volume accumulation. So 251, 255 are your immediate targets, 243 is where you keep that stop loss. Same applies to HCC, by the way. It's got good volume accumulation going for it and price action also following through. So 26 and 28, these are your targets. 22 is where you keep that stop loss. Are you ready for those updates now?
Yeah, we're wondering, mic drop kyun? We're wondering what.
Yeah.
Okay.
You've been selected to the Indian national team.
Gosh, I know I've passed that threshold now, so my expectations are paired now. But कल हमने एक stock discuss किया था, Olectra Green Tech. Went on and hit target 2. No big deal, right? But you mentioned a stock today, CG Power. We discussed that about 5 sessions ago for a second target of 949. That was hit. Fair? You mentioned the stock today, which is Panacea Biotech. 22nd May को हमने ये stock discuss किया था for a second target of 455. कल का closing देखो, ठीक है? तो ये आप दोनों का हो गया. You, by the way, mentioned Titan and the jewelry pack in general. Of course, I didn't pick Titan. I picked something else.
Thangamahil, yeah.
Look at what the stock did yesterday. Even though Panacea Biotech hit 20%, this one's up, just 15%, right? I mean, we discussed this for targets of about 4,400, 4,500 odd. Look at the moves in the last 5 days and the kind of run-up that it's had. And hence I said you guys will enjoy because it's just a coincidence that each of you either picked the stock or the sector that we've recently discussed and has done so well. So since I don't have that mic, it's probably an imaginary one. Peace out.
I am so good. Blah, blah, blah. That was quite a rally to that.
But kudos.
Yeah, kudos, Kush. Yes. And the art of displaying your success is something that one must learn from you. Excellent. And it's very, very important. But this is why you should tune in every day and watch NDTV Profit, watch India Market Open and Kush Bora's Qs. Parag Bhai, let's talk a bit about Titan to start with. Some run up already. What they're saying from their analyst meet and their communication to investors sounds very, very positive. But is there more juice to the story?
It might go up to 4,800, 5,000 or so. But I would say that at 51 times FY28 earnings, you are buying 16% EBIT CAGR. So it is costly, but it's a great company. And always, I would say that Kush has gone absolutely right in Thangamahil, and it is also a great company. But apart from that, before meeting Kush, I was never tracking any other jewelry company other than Titan.
Now you feel you should, huh?
But now Thangamahil is also gone. But a great call, by the way. Superb call.
That is true. That was an early spot.
In a genuine, great company, fundamentally also.
I respect this man a lot that when it comes from you guys also means a lot.
Let's end it there. Mic drop moment problem mein aa jayega.
Thank you so much.
No, I was wondering, so Parag bhai, you are not wanting to go on to Titan right now because it's not giving the valuation comfort to you.
Same quality stocks which are available at a much cheaper valuation.
In the non-jewelry space,
in
right?
Non-jewelry space.
In non-jewelry space. Okay, fair call. The momentum, Parag bhai, that is coming about in some of these pharmaceutical names, right? I mean, Panacea is a case in point, but we've spoken about so many of them in the last 2 months. And which is beyond the top 4 or 5, right? Leave out Sun, Aurobindo, Torrent, etc. But the others are really showing up. What have you analyzed in the last 1 or 2 months within that bucket?
So basically, I continue to like Mankind, Ipca, Ajanta Pharmas of the world, which are in the, you can say, like Mankind is now closer to 1 lakh crore market cap. But I would like this space particularly who are doing better than domestic pharma market in terms of within domestic market, IPM, they are gaining market share. For example, Mankind is now focused on growing their chronic business, which is a far more sticky business. Plus that BSV acquisition is doing well for them. That has a lot of specialty portfolio of women health, and that has good export potential also. So I would say that,
so
pharma space
Mankind you spoke about. What are you making about Wockhardt?
So Wockhardt, as you were discussing, right, that market was expecting a monetization very soon, and which has not come. But I think they should
monetization of Zenith.
Yeah, Zenith. Because anything which comes like this, which has a huge opportunity, generally Indian pharma companies tend to monetize, like Glenmark has done previously. Because Indian pharma companies don't have that appetite to take it to the market, go to market. I would say in US, kind of a complex market. But so I think Wockhardt is, as he said, at 83 he's beginning the journey of 2.0 Wockhardt. So I think he's very confident. Let's see.
Yeah, I mean, in fact, Neeraj, if you remember, probably 8 to 9 months back when we had spoken to Dr. Khorakiwala as well, he had mentioned that in the next 3 or 5 years, they will be sure that they will be able to achieve that peak that they had achieved back then in 2017, 18. When those were the highs of Wockhardt when we had seen. So that was his confidence that he had given on NDTV Profit itself, where he had mentioned that give me 3 years and you will see Wockhardt back there. Yeah. So that was very interesting to hear. One quick question, Parag Bhai, I have with you in terms of hospitals. Neeraj was talking about the conversations he's had where everyone is betting big in terms of the hospital space. Today I was just referring to a note by Citi on Max Healthcare as well. Do you think this is the year where valuations stack up, where their capex plans are, and now when you're talking about execution, you could see some good green shoots in terms of investments?
Yeah, possible. Plus, remember, see, this kind of bets, hospitals, healthcare, pharma, even my favorite Bharti Airtel, all this comes under investors' radar more frequently when this kind of conflict situation where oil is going up, your bond yields are going up, those kind of macro situation gets tough. You tend to look at safe havens like this. So generally, and within that safe haven, if some company shows a very good earning traction, then it definitely becomes a clean buy. So I would say that yes, hospital is figuring in that space where it is insulated from all this drama which is going on in the world, and it is a structural story. And as you rightly said, many hospitals have completed their big built-out phase or big capex phase. So now free cash flows can begin.
That's the point Hiral was making earlier today. But let's talk about those who have been trying to raise money. Ola Electric and Acme Solar Holdings have raised funds via QIP this week. And Acme, in fact, saw a sharp uptick on the day of the QIP opening amid strong demand. But how did they fare? How did both the issuances stack up finally? Pony joining in for more.
Well, thank you for that. Let's first focus on Ola Electric because the company has actually upsized its QIP amount. Now, they had mentioned a 500 crore original plan to raise that fund via QIP. The total amount raised has been 780 crores on the back of investor interest. So that's one. Original QIP shares were also 13.9 crore. That has been upside to 21.7 crores being issued via this QIP. But this also means that there is higher dilution for the current existing shareholders as well. So at 35 rupees per share is when the QIP has happened. But now the total shares, which were already ballooned at 441 crores, now have increased to 462 crores. So the ROE metrics, all of those will be in focus, maybe not currently because the company is not profitable, but all those factors is something to watch. What's also interesting is the funds that have actually taken more than 5% of the shares. So there are 3 big fund houses. One of them is Mire, where with the large cap and mid cap fund, they've taken 9% of the total shares. ELSS Tax Saver as well as the mid cap fund is also taking exposure. Motilal Oswal small cap is the other big name that's popped up. Over 5% of the total 21 crore shares what they've taken. They've also taken that in the Active Momentum Fund. And then there's JM Financial who've taken across 3 to 4 funds via this exposure via QIP as well. Finally, in terms of Acme Solar also, as you mentioned, very interesting that a 2,800 crore QIP has finally been completed at 279 rupees was the price. But this is also very interesting because this was the same as the IPO price, or very close to that, of 285 rupees done in November of 2024. So investors had to wait a lot who've invested in the IPO. But this 2,800 crores will help the company in its growth expansion. Some funds like Nippon India MF, HDFC Mutual Fund, SBI Mutual Fund are some of the names that have taken exposure via in this QIP for Acme Solar.
Okay, stay on with us, Puneet, because we also want to talk a bit about Tata Motors. Speaking at the dealer business planning meet in Goa, Tata Motors chairman N. Chandrasekaran outlined an ambitious growth roadmap for the passenger vehicle business. Why is this important? What has he said, Puneet?
I think one of the major important facts coming in is that 20% market share that the company is targeting now. We've all known that they are a big volume player, similar to a strategy that Maruti has done. But at 20% market share by 2030 is a big as well as an ambitious number for the company. Now the assumption is that, and this has been said by Mr. N. Chandra himself in Goa, where the market will be almost 60 lakh vehicles by 2030. And they want to sell almost 12 lakh vehicles. So that will be doubling of the company's current sales of FY26, which was around 6,05,000 odd units. So that's a big ambitious target for the company. New model launches within EVs and ICE will of course follow through. But it's quantifying essentially what they were trying to say in terms of market share gains. They've also mentioned that, while addressing the dealers, that it's important to succeed together on sales experience, service, as well as customer perception. Now, Tata Motors have, of course, been doing multiple key measures. Maruti, on the other hand, is known for its service. But if it wants to become a volume play, that was a clear message to the dealers. They've also said that he's, of course, optimistic for the future. But they have to unlock and they have to have a mindset shift essentially for the dealers towards excellence is what they've said. So a lot of key commentary for the dealers, but that 20% market share is a huge number for the company.
So is and Chandra's aspirational move, aspiration for one of the names, and which is Tata Motors PV. Well, let's see if indeed it turns out to be true. I mean, in autos, Kush Bora, I feel somehow that upsurge that was there is kind of cooled off a little bit, right? I don't know if people are penciling in a slowdown in consumerism in general, and two, the fact that come October, November, we'll have the GST base effect also waning away, and therefore the YOY growth numbers will not necessarily look that strong. In fact, they might look weak as well, right? So is there an undercurrent into any of the auto OEMs? So Tata Motors, Maruti, Hyundai, etc. No.
Friend. The only one that has some is Tata Motors actually. 390, 395 ke aaspas resistance.
Tata Motors PV.
Tata Motors PV. And that's the only one. Hyundai, you remember, I was mentioning that, I'm looking for a short covering trade on Hyundai. Even that is getting fizzled out. So some of these are now starting to go into that consolidation mode. So conversely, if I look at it differently, right? If you're a long-term investor, let's say, 12 months or more, perhaps these accumulation levels are healthy for you to start considering some of these names. But if you're a momentum trader and you want something for a month or maybe 3, not a lot of these names, make the cut. Just moving on to slightly different name in the two-wheeler space, right? Bajaj Auto, that's the only one that still has any kind of positive traction. So Tata Motors PV and then Bajaj Auto. Other than that, a lot of these are starting to either consolidate or probably see some sort of downtick on the prices.
So Bajaj Auto is my favorite. So that's so I should say that. Core holding, and as I said, 21 times only FY28. Exports are booming. Rupee is at 95. So they have got that protection, which other OEMs don't have. Only Bajaj and TVS has this protection there because of their very high exports. More than 50% of Bajaj Auto's EBIT right now comes from exports. And export May month was 240,000, which was all-time high.
So if you want to play, just a quick segue, if you want to play a depreciating rupee, strategy from an export perspective, and IT is looking shaky, though IT is the obvious and, first choice in that sense, but you don't know what else is happening, AI, etc., etc., then you have to look at other players who have large
Bajaj
exports.
Auto is very simple. They are unhedged also. Plus, there is a buyback at 12,000 where promoter is not participating. So, I would say that Bajaj Auto...
but isn't all of this factored in already in where the price
is? I'm not saying the absolute price it is not factored in. The point is that it is 21p on FY28 earnings, 21, 22 times. So, it is not that expensive. And company has 20,000 crore cash.
What about Tata Motors PV and the ambitious targets which have been set? Also, the whole narrative on Tata Motors PV has been turning positive. The JLR story and the fears there have been receding a little bit since last quarter.
Absolutely. And stock price is also reflecting it. It is showing strong traction. But so I would say that, Mr. Chandra has said this. I'm sure they will get there. Domestic PV business will do well. What I am really concerned about is JLR, because JLR, even if it does well, it doesn't get a multiple only, because there is so much of R&D capex which is recurring. So you are not adding any capacity, still you are incurring huge amount of capex. So it gets 2 times EV/EBITDA on the global side. So that is the problem with Tata.
Okay, so things are turning, you're talking about in terms of Tata Motors PV right now. Bajaj Auto is looking interesting, TVS is looking interesting. What about the second leg when you talk about auto anchor as well? Because I know, I mean, Kush is getting excited because of the run-ups that we've seen. But okay, let me go to Kush first. Anything on the charts, then we will take then we will go to Parag Bhai now.
See, I don't know why this divergence is, and of course, I don't track things very closely from a fundamental lens.
Why divergence is there.
Perfect. But एक inkling, एक sense रखते हैं, right? And when the OEMs are not doing well, ये सारे कैसे अच्छा कर सकते हैं? I don't, and like Parag Bhai said, he'll demystify it for me right now. But a lot of these names still positive biased consolidation. Look at Samvardhana, look at Lumax Autotech. Of course, thoda niche aaya hai. Look at Belrise. A lot of these names thoda consolidate ho rahe. But with the kind of run up that you're seeing and everything happening in the market, I'll take this consolidation and these dips as a buying opportunity. So I still actually remain very constructive. Now over to you, Parag Bhai, for the demystifying comments.
So just give me 1 minute for that. So basically what is happening is that in auto components, the content per vehicle is going up because as we see more and more vehicles with features, right, new features, the content per vehicle is going on. So the story here is premiumization, increasing content per vehicle story. And of course, some of the auto component companies have gained wallet share within the same customers. So typical example, which within my portfolio also, I've seen this in Minda Corp. Look at the results of Minda Corp. You know, I'm not recommending at this price, but I'm saying all these 3 trends have benefited Minda Corp significantly, and many other like Uno Mindas of the world. And we heard Sandhar Technology on that day. They said we are going to have a record year in 2027. Suprajit Engineering has guided for very good numbers. So I would say that, and so Europe market is reviving. For example, Samvardhana Motherson is also doing well because of Europe. Because wiring harness itself, if you use electric vehicle, you have to have 50% more usage of wiring harness.
Okay, so one way or the other.
So that's why you are seeing that auto OEMs are not performing, but auto components are performing.
You know, that entire industry, the way they've handled transition to EV and new technologies is also something to be watched out for. When we talk about Indian industries handling tech shifts, and again, there's no comparison with IT clearly, but just to talk about how any industry and a cohort of companies looks at huge trend and mega trend shifts in your industry. If you compare what Indian IT has done and now catch up, etc., compared to what Indian auto anchors have done, where they've been on the ball and managing to stay on top of things and really being suppliers to some of the biggest companies in the world.
So one, the capability, two, also much like textiles, maybe not as much as textiles, it's a heavy employment generating sector. So in some sense, that's the added advantage that they bring in for India as well. So 100%.
That's an interesting story there. All right, let's talk a bit about Hindalco. Hindalco is doubling down on its premiumization strategy, expanding its Eternia aluminum windows business and targeting 1,000 crores in revenue by FY29. Parth joining in for the latest on Hindalco.
Right, so what's happening is that Hindalco is expanding its premium aluminium windows brand called Eternia by launching a flagship experience center in New Delhi. So Eternia has already delivered around 65% CAGR in the last 3 years, and now Hindalco is targeting over 1,000 crores of revenue from Eternia by FY29. Now this is interesting because India's windows and facade market is currently valued at around 40,000 crores, and it largely remains unorganized and fragmented. So Hindalco is targeting to capture a majority of this market. They are targeting premiumization and value-added offerings because the premium segment of this market is growing at a CAGR of 15% right now. This move will strengthen their downstream play beyond their commodity aluminium business. If we talk a bit more about Eternia, then it operates through 170 plus channel partners operating across 100 plus cities and serving residential, commercial and high-rise projects as well. It uses an alloy called duranium, which has 40% more strength when compared to aluminium, and the integrated value chain which Hindalco already has will give them both manufacturing and sourcing advantages as well.
Okay, well, metals right out there again. You know, while there might be a session of profit booking yesterday, but it's a cohort of stocks that people are looking to buy into and stay invested. could this cycle be different? I think that's the key question in most people's minds. We've spoken to Rakesh Arora and a few other companies or a few other people in the past who believe that in some sense, even if you don't call it a super cycle, maybe there's an up cycle ahead. Okay, markets have kick-started trade. Let's pull up some of the names before we get into Nilesh Jain, who's head of technical AVP and equity research as well as Centrum Broking. Starting off flattish, I think the Sensex rate is a bit deceptive. We'll not have a 0.6, 0.7% uptick, but specific pockets could actually be interesting to watch out for. Now, pull up Interglobe Aviation, always in news, not so different today. So that is one name to definitely keep an eye out for. Watch out for Tata Motors PV, watch out for Titan. Titan seems to be a name that people might be looking to look at simply because the commentary has been constructive. For now, starting off okay. Panesha Biotech, which was up about 20% yesterday. Let's see if there's some further moves there. Another 4% likely. Let's see. Go Digit, wherein JP Morgan, Eastern Tech Fund and Aditya Birla Sun Life have bought in stakes. 1.35% higher. Inventus, Kedara bought in 2 lakh shares, was down yesterday. And then Wokhard. Definitely want to see what Wokhard is doing today. It cooled off a little bit in the second half yesterday. For now, starting off flat after their analyst meet. Nilesh Jain with us. Nilesh, thanks so much for joining in. Before the MPC decision, I suspect that any kind of trades on the indices are out, right? Or are you taking a trade on the Nifty or the Bank Nifty early morning?
Morning, Niraj. Morning, everyone. Well, as of now, there is no trade because we are likely to see a gap up opening. So better approach would be to, wait and watch out for the sustainability. And after that, yes, if at all there is any trade, that will be on the long side because we have already seen a good base formation at 23,150. So if we see any, fall towards 23,250, 23,200, that's a good opportunity to take a contraband with a stop loss below 23,150. And I'm expecting a move towards 23,500 to 23,600 zone on immediate basis. Bank Nifty looking comparatively better. And yes, if it breaks above 54,400, then next target would be 55,000 to 55,300. So if at all I have to take any one trade out of both, then that would be Bank Nifty because that looks more, relatively stronger than the Nifty index.
Okay, Nilesh, what are the stocks that you're looking at this morning?
So I have 2 buy recommendation. First of all, GMR Airport discounter earlier has given a very good breakout from a major falling trend line, but we saw some bit of consolidation. Now, once again, yesterday we have seen the momentum coming back in this particular counter. So upside would be, the target would be somewhere around 108 and stop loss can be placed at 98 rupees. So GMR Airport is a buy. Apart from that, another stock that will be GMDC. We have seen a good base formation in this particular counter. It has found a very strong support at 650. So GMDC, that will be another buying recommendation from my side for an immediate target on the upside could be somewhere around 690. Stop loss should be placed at 665.
Okay, couple of interesting names there. I wonder if IT services as a space comes in focus today. Remember, with Anthropic calling for that pause in AI development, not that it's going to happen. You can't put the genie back into the bottle, frankly, to my mind. But it had that immediate repercussions on some of these Asian AI stocks, and which is like Kospi, etc., and TSMC, etc. were all, at least Kospi was down. I wonder if Indian IT kind of recovers a little bit from that selling pressures that we've seen. So keep that cohort of stocks. We know Parag Thakkar is constructive there, so that's a bit of a no-brainer. But from a trade perspective, Kush Bora, are any of those stocks at support levels from which they can bounce back?
So the concern is something that you mentioned yesterday, which is the high volatility. I mean, do you want to live with it? Anyway, we're living in an environment which is highly volatile, right? I mean, headlines, price action, everything. Add to that, the sector-specific volatility doesn't really help, IT's case here. But, some of these stocks, Persistent, Coforge, Emphasis, and by the way, I prefer the mid-tier names rather than the big ones. So some of these names were actually showing good recovery, massively sold into, and on the back of very healthy volumes. So I remain constructive because they're close to those support levels, but does it inspire enough confidence to go out and make a trade? Not really. One stock, Hexaware Technologies, by the way, is something that is trending well, hasn't really seen this kind of volatility. So if that is something that you want to consider, you can. I would suggest a stop loss near the 500, 505 mark. But the other names, are fairly volatile. So.
Okay, so that's with regards to where IT goes, again, seeing that Slight bit of a back in trade today as well. But moving on to our big brokerage call for the day. Axis Capital has maintained an ad on Voltas. In fact, yesterday, if you talk about all the AC counters, all of them were buzzing in trade. You had names like, even the energy names like a CG Power, Siemens Energy were all buzzing in trade. But let's understand from Sharad as to why has he picked this one. Sharad, over to you.
Thanks a lot for that, Hiral. And largely, I would like to say that they have actually come out with a market share report, especially for the month of April and May. And that is where they are seeing a little bit of bullishness coming in, because Voltas has actually gained market share again. They have maintained ad rating and a slight increase in the target price coming in. But there is a thrust on the volume plus market share again. That is why the broking house is bullish on this company. Now, that's roughly 170 basis points of market share gain in the month of April is something which Voltas has recorded, and this is because of two reasons. There is aggressive pricing and also an in-house strategy being followed by the company. Now, for the first quarter itself, it's expected that the company will be coming up with industry-beating numbers or results going ahead, and the room AC industry, that's overall expected to grow almost 35 to 40% in the first quarter of fiscal 27.
Okay. So Voltas in focus, nothing much happening in Voltas right now. Let's tell you what's moving in the pre-open session, and most of the pre-open session almost done at this point. I want to pull up all the rate sensitives. All the rate sensitives actually under pressure this morning ahead of the policy. So look at, for example, a Bank of Baroda, look at an HDFC, ICICI Bank, all of the banking stocks to some extent. Look at an Aadhar Housing Finance, also under a bit of pressure. You'll see all of these in the red. Wipro taking a knockdown this morning. So now here's what's happened in Wipro. Wipro has put out a statement saying that they are completely cooperating with local police, etc. There's an allegation which has come out of their Hinjawadi campus, similar to what TCS had seen a few months ago. Allegations of an ex-employee about forced religious conversion, sexual harassment, and being forced to resign. So there is some kind of investigation on. The company has said that they are cooperating. I'm not sure why the stock is 6% down because of this. Maybe this is a reason for people to come in and sell in Wipro. Let's see what's happening to some of the other IT majors as well today, and what is the IT mood, so to speak. TCS is doing okay. HCL Tech Infosys is about 1.5% up. HCL Tech is also 1% up. So Wipro is clearly the outlier today, and maybe this is where some of that pain is coming from as far as Wipro is concerned. Want to look at what the Titan is doing. Is there any excitement which is continuing from its analyst call? Mildly, about 1% up right now. You have let's look at Ola and let's look at Acme Solar, the ones that have completed their QIP. They're also mildly up in the green. Nothing. Acme Solar is doing okay one more time. HDFC AMC now shut its gold ETFs, or actually pared down access to its gold ETFs. That's about 1.5% down. I thought that was very telling what HDFC AMC has done. Also tells you what the interest in gold ETFs are, and they're not the first one to do it. Just any thoughts there, Parag Bhai?
No, because equity has not given returns in last 2 years. Everybody would like to have a new stream, right? And where there is a lot of interest also from the retail investors. So I would say that it is just a multi-asset allocation kind of.
No, so it displays that there is so much interest that HDFC AMC has to shut it down. Do you see any negative in them doing that?
No, I'm not seeing any negative.
Yeah.
Guys, two large block deals that have happened. Adani Enterprises 1.64 crore shares at about 2913. Pull that one up. Adani Energy Solutions 63.65 lakh shares of block deal at 1504, and I think those stocks just seen effectively a large supply has been bought off in a block deal. Let's see if that is positive for these names today. Kushbora, after having a very sharp up move, there has been a bit of consolidation the last 2 or 3 days on account of this block deal. I would suspect, my belief is that GQG is one of the selling entities, but this was known for the last 2-3 days that this is going to come into the market. The fact that it's been lapped up so smoothly, maybe it helps. Standard disclosure, of course, the Adani Group owns NDTV and you're watching NDTV Profit, but Kushbora on the charts. Adani Energy Solutions, Adani Enterprises.
Yeah, I don't think my wish of seeing these stocks about 3 to 5% lower is going to be granted anytime soon. बहुत अच्छा run up हो गया है. The only thing now is Adani, like I said, on a daily charts is overheated, and there is 3,000 3,000 strike price at which you've got a very healthy call option writing. So maybe it will just consolidate here for a while. I will still prefer to buy it close to the 2800, 2850 mark. As in when if it does come about close to those levels, it becomes a buy. Adani Energy Solutions, by the way, you can consider. It has come off highs. It's cooled off from those relative strength point of view as well. So this is something that you can consider. Stop loss 1485. Recent swing high of about 1575 is your first target. 1625 and higher levels also. So between the two, at least, I would consider Adani Energy. Adani Enterprises might just consolidate around these levels.
Okay, so more clarity on Wipro. There is a block deal. That probably explains what's happening even better. 1.74 million shares have traded in a block. Can we just quickly pull up Wipro? About 6.5% down. On charts, is this looking attractive because all of IT is catching up?
It's not.
Okay.
In simple words, it's not, because like I said, I prefer the mid-tier names first. Uske baad aapka HCL and TCS of the world aata hai. So Wipro वैसे ही lower down the order hai. It's seen a very sharp round of profit booking, not just today, even otherwise on back of heavy volumes. So Wipro doesn't really make the cut unless there is a major structural change, right? In the price action, in the setup. Wipro is something that I would keep a little lower on the pecking order.
In your view, Parag Bhai, when you look at all of the IT companies?
So I think all of them are large cap at least, and in mid cap, small cap, you can say Coforge kind of names are very attractive at current prices. The only thing is narrative. And when that narrative will change, we don't know. So we have to just keep buying on staggered basis. And as I said, so Wipro in such a sharp fall is a good buy in my.
Okay, so
but I'm not telling from today's perspective. It is not a trader's kind of a call.
Yeah.
It is just for investment. If you are doing it on a staggered basis, there's a buyback also there.
So today is an opportunity.
Yeah, if this such sharp fall should be used to.
Yeah, and a block deal is possibly one of the key reasons.
Schneider is an interesting one. If you pull up the charts today, there is some bit of positivity coming in there. Yesterday also there was some good buying interest. Anything on the charts that you're seeing on a Schneider Electric?
Before this, it had 5 sessions of lower circuits, I suppose.
Before 2 days, correct.
5 sessions, in fact.
Yes, and now the buying is coming back.
Yeah, no. I would avoid. I mean, this is far too much volatility for, my comfort at least, and doesn't really give investors and traders an opportunity to exit when they are going. So I would wait and watch for a couple of days.
So okay, book profits if you see a sell right now?
Yeah, book profits for sure. I mean, if you have profits because of the fall that it's had, or exit for sure. I mean.
Yeah, I like that. Book profits if you have profits. We live in a time when that's the kind of statement that you have to make. Nilesh Jain, your top pick after the pre-open session.
Well, Tamanna, CG Power is something I would like to go with that because it has witnessed a very good formation of a high top and high bottom. Very good setup as well, multi-month breakout where we have already seen in the previous week. Now looks like it is heading towards 960 to 980 on the upside. So at current level, it can be bought with a stop loss below 922. Immediate target would be 965 followed by 980.
About Go Digit, just a quick view of Go Digit on the chart. Go Digit and Grove, first of all, keep both on your radar. A lot of shares have changed hands, but on charts.
Well, as far as Go Digit is concerned, it was trading in a lower top and lower top formation. So I would rather wait for a breakout above 315. Then I'll get more confidence to go and long in this particular counter for upside target of 325 to 330. But as of now, you can avoid. But yes, Growth is a buy. Break above 192 is a very good buy for upside target of 200 plus.
Okay, billion brains, grow. Let's see. Like we said, non-lending financials have been the thick of things in the conferences that we've heard from people. But here's how the markets are starting off. 91 points in the green, ahead of the policy, about 1/3%. Not a bad start, you have to admit. Market breadth is looking conducive as well. Mid caps are up 0.5%. I reckon small caps too would be in the green, about 0.5%. Banks about 1/3%. Wonder what IT is doing, considering that Wipro had that bit of a slash. Maybe it recovered, maybe it didn't. But 1% up for IT. So IT is not doing too badly, by the way. SK Hynix may not be, but Indian IT is. So which is actually a good thing. Bring up the heat map and see what's moving and what's not. Is
Wipro at the bottom of the pile, yes it is, but beyond Wipro, nothing else. And despite Wipro being down 5%, Nifty IT is up 1%. So let's look at the winners. Infosys, Tech Mahindra, TCS, all of them, HCL Tech. So IT is certainly doing very, very well. Adani Ent is up 1.4%. No surprise that large selling getting absorbed in the block deal is a positive. Adani Ports up about 1% as well. M&M then brings up the list, as does HDFC Life. Interesting that stock is up about 1.6% in trade in the top 10 names. I don't know if I've missed the news out there, but that stock is doing well. There is Dr. Reddy's and Bajaj Finserv. A lot more green, very little red. And mind you, the Nifty is up 47 points. It could have been a bit more had it not been for Wipro, frankly, being down 5%. Just the points contributor on the Nifty, can we pull up? Just want to see how much is Wipro contributing, if you will, about 7 odd points. Okay, no. So wouldn't have made too much of a difference even if Wipro was flat. But be that as it may, this is that one stock in the red. Otherwise, the mood is not all that bad.
Yeah, I think HDFC Bank also adding a bit to that pressure. You'll anyway see rate sensitives under pressure before you have the outcome of the RBI monetary policy. Let's pull up the broader indices if we can. Start with the small cap and the mid cap and look at what's happening this morning. The mid cap just about less than 0.5% up. The advanced decline ratio is quite positive, and that's what's reflecting in the small cap 250. Pull up the sectoral heat map and you'll see IT up there. Nothing else much zooming. Nifty Media is thanks to Z. Z is doing its own jig now, maybe after those FIFA rights. A lot of movement in that stock. Realty stocks are actually in the positive, and that's interesting to see because it's a rate sensitive. So are autos in that sense. So all of them in the positive. What's down? Just the Nifty Metal, 0.7%, and the Nifty CPSE is pretty flat. So this is looking like a good screen actually for a Friday after what has been quite a tumultuous week. Let's go to specific stocks and look at what those indicators are showing us. I want to pull up some of the banks and see if there is caution ahead of the RBI policy. What's happening with a Bank of Baroda, Aadhar Housing Finance. I want to pull up an Indian bank as well. Bank of Baroda seeing a knock 2.5% down, but the rest are doing okay. Let's look at HDFC Bank and ICICI Bank just once more. HDFC Bank slightly negative. ICICI Bank is fine. Remember, there was a notification that ICICI Bank put out that they had queries from SEBI, but that seems to be more procedural than anything else, and that stock is now about 0.75% up in the green. Look at real estate and some of the real estate players which are doing fine actually, rate sensitives, and they are abuzz this morning. So clearly there's hope that nothing really negative will come out in terms of signals from the RBI, and that's what's being seen over here if you want to look at it this way, because auto is also up. Just want to look at Wipro. Couple of things happening. They put out a clarification. More importantly, there's a block deal. Already that gap has closed down from where we saw it in the pre-open, but it's still about 4% down right now. HDFC AMC has curbed its gold ETF. Stock is about 1.5% down right now. Indigo has cut 6 routes and they have continuously been pairing their routes to do with what has been happening around the situation and on the globe. So that's not doing too much negatively either. Let's look at Ola and Acme Solar. Both their QIPs have ended, both in the positive after they've managed to raise those funds. And let's look at Go Digit and let's look at Grow as well, both up in the green. Go Digit is one of those buzzing stocks today, Hiral.
Okay, so very interesting names there. And Go Digit, I think, was on Neeraj's list as well. So kudos to that one, I think I would say. But anything on the charts on a Go Digit, Kush, before we look at the other names? Because strong moves there, 6.5%.
Strong moves, and it's coming after a massive downturn that the stock's seen over the last year or so, or maybe a little less than that, right? So this is breaking the downward sloping channel on the back of very heavy volumes. So I would say the risk reward ratio on this is positive. I wouldn't really be worried about the 8% uptick on this one, because like I said, it's actually seen much higher levels. So maybe today, maybe if it just cools off a little, you can consider adding Go Digit. But small quantity, tight stop losses, positional stop loss on this one close to 300 to 95 levels.
Okay, well, 8% higher. Panacea, let's pull up Panacea and see what that one is doing in trade as well, just very quickly before we move on. Well, stocks on which there have been some bulk purchases yesterday, and all of them are shining. Okay, Okay, on that note, by the way, what we'll do on Monday is ask Parag Bhai for a fundamentally strong mid-cap stock idea. Not necessarily something that he's buying, but something that he likes per se. So we'll kind of do that on Monday, leaving our viewers with a bit of a tease, if you will. But Nilesh, Kush, Parag Bhai, thank you so much, all of you, for joining today. Have a fabulous Friday. I really appreciate your time. Anirudh Sarkar, co-founder and CEO of Equinova Investment Managers, joins in right now on the show. Anirudh, great talking to you. Thanks so much for taking the time out. I'm inclined to ask you if you believe the Reserve Bank of India commentary or the decision can alter the mood in any fashion, or this policy is not for doing that.
No, I think, it's evident that I think, with all the feedback which, the industry participants have been giving to both the government and the RBI, I think, there's a big kind of a possibility that, they want to ensure that, there is some kind of an adjustment which is done to ensure that, the FPI money starts coming back, whether it's in the bonds or in the equities. I think that is something which now even the market and the government and the RBI is very focused on. And I think we should be expecting something on that front.
Okay. Anirudh, the other point seems to be, and something that you were making when we spoke just 3-4 days ago. I'm glad that we're doing that again. But it almost seems that there is a section of the market that is not bothered with the geopolitical stress, with the macro stress that might be, and with the flatlining of the Nifty. A separate bull market is on. In a bunch of names, and portfolios kind of centering around those might actually be doing well. Would that be a reasonable way to think of it?
Absolutely, Neeraj. I would say that, it's always been something like which, I always keep saying that markets like these are something where the real fundamental research, the real equity stock picking, it really makes a difference. And if you look at the broader market, I think there's a lot of action happening beyond the headline index, which I mentioned in your interview the last time. And the good part is this time around, I'm seeing very strong earnings revival across sectors. It's not like, like typically in the past, you would see that, there is one sector, either the IT sector or the banking index, which is doing very well. This time around, if I see there's a lot of earnings pickup, earnings revival, which is happening across industries. And when I say across industries, bulk of them would be in the mid and small cap. And that's the reason if you pick up your charts for the last 6 months to last 1 year, you'll find the mid cap, small cap index has done better than the large cap index, because that is where the earnings are happening.
Anirudh, good morning. Hiral here. My question to you is, taking it forward from what Neeraj is mentioning about the churn that we are seeing as well. A lot of pockets which are seeing that buying interest. Initially, the idea was that probably sectors like defense, auto, in fact, we were having that conversation right now as well. Auto anchors are moving, OEMs are not to that extent. Defense, yes, is seeing buying interest, but where do you buy? Because we just yesterday got a news where we read that there was a record $2 billion drone procurement, I beg your pardon, that is on the cards in the coming years. Now, if you have to look at auto anch and defense, I'm asking you about 3 sectors. Are you positive anywhere where you're buying?
Absolutely, Hiral. All the sectors which you mentioned, they are all my overweight allocations in my portfolio. And just to put it in that same perspective, like you mentioned, defense. If I see last 4 or 5 years, whenever we used to talk about defense, the usual names used to be coming up, all the names which are there in the government space, whether it is the shipbuilding companies or you have the HALs, the BLs and the BDLs of the world. This time around, if you see, there's a lot of activity happening in the private defense space. And the announcement which you mentioned about, the drones being, a government order of almost $2 billion of the drones being manufactured and procured. I think, that gives you an indication that government is wanting to deal with the private defense players. And I would say a lot of activity is happening in the private defense companies, both in the listed and unlisted. And we, as a house, we take investments into both listed and unlisted. It's very interesting to find so many excellent defense companies in the private unlisted space, as well as in the listed space. So I would say defense is definitely one area where we are very bullish on. When it comes to auto ancillary, I think, as you mentioned, the difference between auto ancs doing well and auto OEMs not doing great. Even within the auto OEMs, I would say you will find pockets which are doing exceptionally well. Anything which has a large allocation towards EV is doing well. Like, for example, in our portfolio, we have allocations to two auto OEMs which are in the EV space, and they have between them almost 40% market share in the Indian EV, the two-wheeler space. Auto Ank is benefiting from both domestic demand as well as a lot of export opportunity. So I'm quite bullish on all these sectors which you mentioned.
One of the important updates when you talk about defense, I want to ask you is your investment in Sigma Advanced Systems. I did see your fund name appear over there. What is the rationale? Because the stock has already run up, more than doubled in the last 6 months. Why at this point in time?
See, we have participated in it earlier also. We had entered into the company much earlier. And also, as you rightly mentioned, the recent rally was too fast to get, any good allocations. The placement which happened, it happened at a good price, at a good discount to whatever is the current market price. And it partly happened because of the pricing mechanism which is there. So it's a good story, again, as I mentioned, in the private defense space. And I think that is where, a lot of opportunities are happening. It was a case of a reverse merger, which happened to an existing listing company. And the type of order books and the pipeline which the company has over the next 36 to 48 months, it gives you a good kind of the room for growth, even from the current levels. Yes, some amount of profit booking might happen in the short run, considering the way it has moved up. But we are the long-term investor, and we are quite optimistic about the company.
Anirudh, I'm just wondering, you mentioned earlier that you look at listed and unlisted investment opportunities. Which side are you finding more attractive right now?
See, when it comes to valuation, the unlisted space is giving you more comfort, purely because with so much of pessimism in the market, typically what happens is in a market where optimism is high, you will find the ask rate on the valuation front from the unlisted companies very high. In a market where we are today, there's not much money which is chasing the unlisted companies. And that's the reason it is I would say, a time wherein you're getting excellent companies at good valuations. So I'm getting good value in the unlisted space. When it comes to opportunities, I would say even in the type of businesses which are happening in the unlisted space on the defense side is again very, very interesting. And I would say the recent, the Home Ministry announcement which happened that, they want to do, the automated piloting and the securement of the Indo-Bangladesh border, I think that opens up a lot of opportunities for many unlisted companies in the defense space.
Talking about defense space right now. Anirudh, in the listed space, and I asked you that question at 9:28 a.m., 15 minutes after markets have opened, and it actually reflects what you described correctly, pessimism in the markets. Isn't the best time to really create wealth is when everyone around you is pessimistic? And where is that opportunity in your view currently?
Absolutely, Tamanna. I would say that, typically when everything is good, I keep mentioning this example. Around 18 months back, when I used to meet investors, investors used to give me ideas. And, that is a market which is not meant for us. So now when we meet people, now when we meet investors, definitely, it's evident that it's not so easy to find ideas in the market. And as I said, definitely this is the time any company which you buy at these levels with a view of next 6 to 8 quarters, I think that is where good amount of money can be made. And I have been harping again and again, be in the mid and small caps. And when I say small caps, it's not that you have to get into a small 100 crore, 200 crore company. There are more than 1,400 companies with market cap above 800 to 1,000 crores. So I think there's a big kind of a space there. Be in the small cap, mid cap, where earnings are very strong. And across sectors, I'm seeing that thing happening. So I'm quite bullish on market from these levels.
Thank you so much, Anirudh, for speaking to us today. Great to have you on the show. We have a very special segment coming up, and we're speaking with Black Box. We have, of course, the leadership here in the studios. But before we get to that conversation, Puneet joining in to set up the context. Puneet.
Well, thank you for that. So one of the beneficiaries of what we've seen in the AI plays, and definitely for Blackbox, new partnership with Aeonos will, give the further boost to the company. Now, this will be, of course, to scale AI solutions, and it will, free for end-to-end AI infra capabilities of the company. So a little bit more details on what are some of the financial implications of that will be something to watch. FY26, as a whole, revenue grew about 6% at 6,300 odd crores. Margins have been maintained at the 9% range. So, but the company has given a growth map until FY30, where they are expecting revenue to double to almost 12,000 odd crores. So, what will be some of the key strategies? Will it be acquisition-led or new technologies? Will be something to watch from this. Aiming for a 10% EBITDA profile as well, and which is something to watch in terms of how the EBITDA expansion drive goes through. So, these are some of the key highlights to watch out for from this conversation.
Sanjeev Verma, CEO of Blackbox, is with us in our studios. Sanjeev, thank you so much for coming in.
Thank you.
A lot of conversation around your company is when someone's talking about investors are looking for AI-allied trades in the Indian equity market, in the listed space, and there's very few to pick from. Blackbox's name comes up. I'm going to start by asking you to explain where your company is positioned right now in this ever-changing landscape of AI before we take the conversation further.
Okay, so I think from a AI perspective, I think earlier a larger focus was largely on the software side. So, but AI, unfortunately, is not only about software. It is about the AI infrastructure that drives that software. So, therefore, a resilient network, a scalable network, a secure network, large-scale data center are important to be able to compute that application and drive it to the end user. It's about experience. And for experience, you don't only require a nice car, you require a good highways, right? So if you have a very nice car and a very poor highway, you'll not get the experience. So similarly, if you look at software to be the car and infrastructure to be the road, a black box is the business of building that infrastructure that provides the experience. So we are at the cusp of the network that provides that experience to experience the AI that you want to experience.
And what has that visibility looked like, say, in the last couple of years?
Dramatically high, right? So I think from adoption to execution is where we are going at this time. Irrespective whether customers are talking about AI, whether they will invest in AI or not, they definitely know that they have to be ready for AI. So a very large part of that, whether building a network or investing in data centers, is getting ready for what's coming ahead. So I think a massive opportunity globally. India, of course, at the cusp of investing very highly. We are very underserved, 1.5 gigawatts. It's a very small investment. So of course, very large investment coming up in this space to drive next generation experiences.
Okay, Sanjeev, my question then to you is, when you're saying we are underserved in terms of Indian markets, how much is Blackbox looking at in terms of investments in India, number one? And two, the construction cost. If you have to look at the US versus the India, there is a large differential coming in there. If I'm not mistaken, what, $12 to $15 million per megawatt is what US is commanding. India sitting at what, 50-60 crores, which turns out
5 to 6.
Yeah, I mean 5 to 7 million, right?
Yeah.
In that kind of a scenario, if you're expanding in the in the Indian markets versus US for your data center bit, does that actually have an impact in terms of where margins are concerned? Because the lower per megawatt somewhere will have an impact on business.
A good question. So we have two clear focus markets. Of course, America clearly for Blackbox remains a very highly accretive market. It is growing faster, it deploys earlier. But if you look from India perspective, we start late, but we do a lot, right? If you look at telecom, we never had a CDMA. We started with 2G, 3G, and of course 5G. So we started a little later. We are a little late country, but we do it in a robust manner. So I believe India will invest heavily in this space. From a black box standpoint, yes, from a cost of labor is cheaper here. So the overall cost for delivery would be cheaper. People want to do that. But I think we cannot ignore India. Blackbox definitely wants to invest highly in India. We put our center of excellence. We are currently getting ready to partake in India, specifically because many of the global players we serve are India bound at this time. So from a operating procedure perspective, we see a benefit for us. The learning curve would be small. So we are very bullish on India from that perspective.
Okay. And how much are you modeling in terms of margin growth then, if you have to look at 27, 28? Because gradually you will see that grow then.
So overall, I think we've gone public saying we are aspirational to take our business from currently where we are to 2 billion. At that scale, over the next 3-4 years' time, we expect India to be contributing 10% of that. Okay. Right, so it's close to about, say, 2,000 crores from that perspective. Right, and coming back to the margin, I think we have to adjust margin to scale. Right, and I think the cost to serve in India will become smaller when the scale becomes bigger. So it will continue to remain margin accretive. So I think we have going about 10-11% operating margin, we should be able to deliver that in India as well.
Okay. Sanjeev, my name is Neeraj, and I was looking at the numbers and the targets that you've given, right? So 12,000 crores is the organic growth by FY30.
Yes.
And aspirational is 2 billion, which means, right?
Which will be inorganic,
exactly.
Buying out of
I
several
was going to
hundred.
ask you that. So you reckon you can get in nearly 8,000 crores or 7,500 crores of additional inorganic revenues in the next 4 years?
Yes.
Okay, how much do you have to spend for something like this? I'm guessing AI assets are not available cheap.
No, so we are into AI infrastructure, and if you look at the history of Black Box, we have been highly accretive acquisitions. Black Box was one of them when we bought out there. So we do not want to overpay. That doesn't mean we want to underpay, right? So I think it's a kind of a mix, and there's no real answer what you would pay. I mean, you would pay what what you believe at the time is the right price, but surely not pay high. We are focused more on our return on capital and return on equity. Both of them not of 30%. It doesn't matter what you pay. What it matters is would it return you 30% to shareholders from a capital and equity standpoint. As long as it does that, it doesn't matter what you pay.
So, therefore, if you manage to do this, and God willing, you hit or maybe exceed your aspirational targets, we pray for
Which
that.
you want to.
Right? We wish you the best for that. But therefore, then you effectively saying that you could actually move from the targeted 17% CAGR growth rate till FY30 to northwards of 22 or 23%.
That's precisely what we want to do. Organically, we should be able to get to 17-20%, and that's what the growth is. Inorganically, if you put that across, we definitely are going. And at this scale of AI adoption, I think that's a fair goal to have. Right, that's a fair goal to have.
Okay. Is that kitty ready to be deployed as you're having these conversations?
Yeah, so I think...
should I call it a war chest?
No, we actually don't need a war chest as such. I think we're talking about $700-800 million over the next 3 years' time, and it may not be equally in every 3 years' time. We just came out of a smaller acquisition in Brazil of 2S. So with internal accruals, with some debt if required, somehow you pay, I think we are well covered. I don't think we require...
You're dodging that question, which is asking about how much will you need to spend, or how much have you set aside?
No, I think we don't...
Will you have to raise any capital for acquisitions?
So we just did a raise of 386 crores.
Okay, so
right? So we do have some smaller chest, if you may, from that perspective.
Kitty,
right?
then we'll call
Kitty
it.
from that perspective, right? And that should allow us to acquire some stuff should we need that. But should we need to be able to require more, apart from what our internal accruals would be from what our profitability is, we can raise equity, we can raise some debt. We would achieve what we need to achieve. The larger focus is, would we have the return on capital and equity?
Okay.
And if the answer is yes, we'll find the money.
Okay.
Right?
That's put well. Tell us about this deal with A-earners. What does it mean for you? What does it do for you?
Yeah, it's one, of course, we are infrastructure side, and I think AI-earners is largely on the other side of the stack on applications. I believe a combination of these two create what is the total from AI adoption and AI execution standpoint. So it's kind of a symbiotic, synergistic partnership. Quite early on in the partnership period, we are currently focused on defining our go-to-market. So we believe our addressable market, a combination of AI-earners and Black Box, will expand addressable market for both our companies, and therefore this partnership.
Okay. What are you looking at in terms of potential revenues, or what do you plan to achieve out of it, and the timelines? Because it's still a go-to-market strategy.
Yes. So I think initially, currently we are finalizing or working on a robust, sound go-to-market strategy. From there on, I think customers that we believe are more quicker on AI adoption, largely from workplace and customer experience, be it financial sector. I think over the next 3-4 years' time, the goal aspirational is to get into triple-digit millions. I cannot put a number at this time, but clearly, if you have a partnership and we can't get into a triple-digit over the next 3-4 years' time, that would fall short of expectations. That's what I would say at this time, but I think more to come as we move forward.
Got it. What should investors watch out for? I was tempted to ask you about execution risk, but let's say you have set up this goal. If people want to monitor it, right, about what is it that you do which enables you to reach this, what is that 1 or 2 key metrics that people should keep an eye out for?
Well, of course, backlog and order book. We just reported a very, very strong backlog of order book. We were at 500 million-ish backlog every quarter. That moved to 800 million, so 60% growth on backlog. We expect, and we booked about $1 billion of order book in the last fiscal year. We expect that booking this year to grow 50-60%, if not more. So this should track a backlog to order book to projects, because that's, if you don't have a bank in your account, you can't spend money. So if you can't have a backlog, you can't get revenues. So that's one of the key metrics to track for sure.
What is the AI deal pipeline looking like right now?
Very strong. I think.
Sanjeev, you have to leave us with one number.
No, I think
more than numbers, adjectives.
No, I just gave you the numbers, right? I think we grew. The numbers are what the numbers are we just reported. I think most of our conversations now are AI-led in some shape or form, right? Either it is AI adoption or AI readiness. If you look at the data center boom worldwide, it's about AI readiness at this time. They're about spending money. We're not even talking about generating money, because if you can't put those infrastructures, you can't generate. So we are focused on supporting the build out of that infrastructure.
Sure.
So from a deal pipeline perspective, I think if we are planning to close 50-60% more of booking than previous year, which lands about $1.5 billion or more, clearly the deal pipeline is about 2-3 times than that. So the math is simple, right? I mean, in our business, you should at least cover 2-3 times of what you expected bookings are. So several billion would be the question, would be the answer, sorry.
Okay. Sanjeev, great having you here.
Thank you.
Thank you for coming in and talking to us about Black Box and what the company does. It's in a very exciting space, and we're keen to watch this journey.
Thank you so much.
Pleasure.
Thank you.
Thank you. All right. Focus now on gold. And you just saw the visuals, in case you missed it, the live visuals of RBI Governor walking in. That address starts in about 15 minutes odd. But this quick conversation we want to get in. HDFC Mutual Fund has announced a temporary restriction in lump sum subscriptions in its gold ETF and fund on fund, citing prevailing economic and market conditions. Ridhima joining in for more details.
So HDFC Mutual Fund has restricted bulk investments in gold ETFs and gold ETF fund of funds, and the restrictions on gold ETFs will begin from June 8, after which rupees 25 crore and above investments will not be permitted. This is as per the addendum from HDFC Mutual Fund. And similarly, the restrictions on gold ETF fund of funds will start on the lump sum investments, and the cap has been made of monthly investments of up to rupees 10 lakh, and this will be applicable from June 5th after 3 p.m. Other AMCs are also considering it as per our sources, and key AMCs with highest gold ETF AUM include Nippon Mutual Fund, ICICI Mutual Fund, after which SBI Mutual Fund and HDFC. Together they manage 1.3 lakh crore of investments. And HDFC cited market and economic conditions. Then in the response to NDTV Profit, they also told us that precious metal pressure has led to this move and is pressure on the external accounts, and they advise investors to go for equity and debt mutual funds at this point of time. Now, the Indian government has this move, by the way, comes after they had already taken back their passive gold silver fund of fund in May after PM Modi's urge, and the government has been struggling with high gold imports. They've already increased the custom duties from 6 to 15%, and now let's see when the other AMCs also take the similar steps, and this is something we need to wait and watch.
Some have already taken those steps. Feroz Aziz, Joint CEO, Anand Rathi Wealth, joining in to talk more about it. Feroz, very good morning. Great to have you on the show. Tamanna here. Do you think more of this kind of action will follow? And what does this mean for investors who are finding, frankly, gold now more attractive than what's happening in equity?
Good morning, Tamanna. I think other AMCs will follow. I think HDFC will also amend a little, ideally should. 25 crore limit is just a message, not a limit, largely. Of course, a 10 lakh limit on the fund of fund, that's the gold ETF fund of fund. is a reasonable limit, one. I think as an industry, we have to guide an Indian population in the right direction. Already 28% of Indian household savings is in gold, 28%. In the latest number is 1,635 lakh crores is the total household savings, in which 28% is in gold, 1.8% is in equity mutual funds. Thereabout same amount is owned by individuals in listed equity. So 3.5% in equity put together, direct and equity mutual funds, and 28% in gold, especially because of the mark to market. We have 4 crores of gold, adding another 1.5 lakh crores, which is about 0.3% of the already stuffed gold in, is to my mind not logical, especially if I give you some data. I was just trying to see the kind of recency bias. Total net flow from March 24 to Feb 26 in ETFs has been 81,828 crores, when the gold price was 68,000. In April 2024, there was a 400 crore outflow. In Jan 2026, when gold was at 1,66,300 average, we had 24,000 crores coming in. If the 81,000 crores was staggered in 24 different installments, people would have made 33,800 crores more. Actual mark-to-market computed on the gold inflows for the last 24 months, which we do as an average Indian investor inflow, is close to about 23% only, when gold has risen 117%. If they would have staggered and done an SIP, the Indian investors would have made 52,000 crores as against 19,132 crores. That's from March 24 to Feb 24. This is called recency bias, and removing that bias, I think, is an industry responsibility, and HDFC has taken first step.
Okay, so Feroz, okay, let's understand this. Good morning, Hiral here. What would this actually then mean for an investor in terms of the action that they have to do? Because in one way, we're talking about not really buying physical gold. We are talking about, in fact, you've come out and said that you should be selling some portion of your gold, I think, what, 10 grams? We spoke about it earlier, and now you have ETFs also which are freezing. Where do investors go then?
Thank you for the last time, because you access and try to amplify the I sold my gold campaign. If you look at any kind of mathematics, right? If tomorrow Nifty became 72,000 from 23,000, would I do some rebalancing between equity, debt and gold? The answer is yes. Any amount of rebalancing is nothing but a synonym for profit booking. If my 2 crore gold in a year and a half has become 4 crore as a country, and if I was the owner of this money, I would say, yeah, I will rebalance it towards equity, especially when equity for the last 25 years of this century, from FY2, has given negative returns for 5 years, which is FY2, FY9, FY12, FY16, FY24, and FY26. If there has been no consecutive Nifty negative return any financial year in this century. So if that math has to be believed, the Nifty closing of 22,313 on March 30th, which was the last working day for the last financial year, we're already up with all the pessimism. It is unlikely that we will not have median plus returns in this financial year. If one of my assets has tripled in the last 1 year, would I sell a small portion of 3, 4, 5% of profit? Not even if it is doubled. I'm not asking you to eliminate all the profit. So that's what I've been doing in Abhiyan. Now, some people have supported, and media houses like yourselves have supported. For our clients, we've been saying 100 grams because HNIs have averaged a lot more. One of my clients sold a delivery which he was supposed to get from MCX of 57 kgs, 88 crores. He unwound it, saying that, yes, makes logical and patriotic sense.
Right. So I think that that rebalancing is the key right now. But thank you, Feroz, so much for joining in. Always a pleasure to speak to you as well. But we'll quickly slip into a short break. On the other side, we start our special RBI coverage. Don't go anywhere. We'll be right here.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबर शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। Amba Shakti SDTMT.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets.
Welcome back to India Market Open on NDTV Profit with the full RBI monetary policy coverage. You know, to start off with, first up, I just want to pull up some interesting trends that we've picked up from Google. Now, since the war jitters, that has actually turned your RBI MPC into the key search buzz. If you see the kind of trends from May to now, in the last couple of weeks, the search engines have actually fired with RBI monetary policy as the key search word, with 100% coming in there. And that's what this chart is showing you in terms of the RBI MPC. But let's understand, is it inflation or is it going to be the rate cut, which is the key one? If you start off with from May onwards as well, initially everyone had concerns with regards to inflation. So at that point in time, that's where the surge was. You had major surges coming in terms of inflation, where it was very benign in terms of what the RBI would do. However, the surges with regards to where the inflation goes, that has tapered off from 100 to almost 42, whereas a slight surge coming in terms of the RBI monetary policy action. So that's what Google Trends are indicating so far. But as we all know, we're all talking about the expectation, which is somewhere more on the status quo side. Expectation is that probably there could be an additional 2 rate cuts in the current financial year. And the commentary, which is right now neutral, what happens in terms of the stance, whether the governor turns hawkish or not, is the key question. In fact, let's get across to our guest. Gaura Singh Gupta joins in as well. Gaura, good morning and welcome to the show. Always a pleasure to speak to you. I mean, we've been talking about overall expectations of what the street is looking at. But at this point in time, with what's transpired so far, what is the key aspect that you will watch out for from the governor's speech?
So our expectation is for a pause. I think the key metric to look at will be the tone of the policy, and we do feel that the communication will be more cautious, with the RBI restating that the flexible inflation targeting framework provides them the monetary policy space to look through the first round impact of the surge in fuel cost on inflation, but they remain ready to act if there is some generalization of price pressures. So if there's any potential spread of inflation pressures from fuel to non-fuel items, RBI is ready to act. So the communication would be more cautious to a little bit hawkish. We do expect that they'll remain on pause, that they'll keep the stance unchanged as neutral, because neutral helps them to deal with both the upside risk to inflation as well as the downside risk to growth. I think commentary on growth is going to be positive because high frequency indicators for now have held up. But yes, the outlook to growth is also very challenging. It's not just inflation. And we do expect some measures to get capital inflows. That's something the market will be very closely watching for.
Yeah, please go ahead.
No, I was asking Gaura, sorry, you didn't mean that you expect this at the RBI level, did you?
The capital inflow measures?
Yeah.
Some announcement either today or in next few days.
From the Reserve Bank.
It'll be a joint announcement. So it'll require the government of India also,
exactly,
as well as, let's say, the RBI. Both are required because RBI will have to give, if whatever measure they come up with, whether it is an FCNRB or a dollar bond issuance, the RBI will have to provide a discount on the swap window. So both are required. You require a coordination between the government of India as well as the RBI. Market expectation is that you may get some announcement either today or over the next couple of days. But that is something everybody is watching out for. because the issue for India is that on the capital account, we are not attracting capital inflows. It's not a current account issue. So interest rate should not be used as a defense for the exchange rate. Interest rate should only be used whenever there is visibility that there are generalized price pressures, which is not the case at this point of time. But we need to do something.
I actually want to stress. No, you're absolutely right, and it's bang on, because that's the large expectation, right? From the last 2 days, the buzz is, when is that? Is it going to come in the shape or form of an ordinance? Is there going to be an announcement? Which department does it? All of that is going on. Then this is yet another window to hear from policymakers on how they intend to make India as a destination more attractive to foreign flows in whichever shape or form. What is available in the RBI's toolkit to do this, apart from helping out implement a measure that, say, North Block decides? So apart from lowering those rates, etc., and tinkering, what else can the RBI say or do today? What should we look out for?
I think given the fact that the interest rate differentials between India and the US are so narrow, and they're going to remain narrow, this particular West Asia crisis, globally, you will see the upward pressure on yields. That is not going to go. This crisis comes at a time when global central banks don't have space to ease. So upward pressure on global yields will stay. So in this sort of environment, getting capital inflows into an emerging market is always challenging. So for that, you will need to, basically from the RBI perspective, if you consider issuance of dollar bonds by PSUs, the RBI will have to offer a swap window to reduce the hedge cost. If there is FCNRB, then again, a similar reduction of hedge costs will be required to make it viable both for the investor as well as the borrower to use this instrument, because the interest rate differentials are extremely narrow. So that is the main requirement. Right now, in the near term, we need to get debt capital inflows. There are speculations that there could be some tax changes also. That will be a Government of India move, possibility on bonds. Again, that's a Government of India move, but how we will need to see measures that are spread across instruments, not just limited to one instrument, because this is not 2013. There is a lot of difference between 2013 and now. 2013, India was in a much weaker position. It had lower FX cover. Currently, India is in a much better position. We have better forex exchange rates, exchange reserves buffer. Our current account deficit has been less than 1% for the last 3 years. That was not the case in 2013. So this is not 2013, but one key difference is that the interest rate differentials were much higher back then. Than they are now.
So it's narrow. It's narrow right now. We just have a minute and a half left to go, or 2 minutes left to go before the governor comes on, and we've got Jayesh Mehta on his way and joining in to give us his view. Jayesh, what are you hoping to see? There's so much for the governor to cover. The rupee, foreign investments becoming more attractive to India, inflation, economy. When are we going to see a price hike? What are you looking out for?
I think from the policy perspective, we should expect only, no cut today, and maybe some commentary on, we'll be watchful, we'll be looking at it more closely. Beyond that, I don't really see, right? I think all this noise about raising money, taxation and all that should be actually coming from the central government and not Reserve Bank of India. So the tax part is that side of it. From a policy perspective, I think Governor RBI, when his speech or maybe whenever the interview is, maybe he will talk about we don't have to be so panicked right now at this moment, which is the way I think I would say the market is more panicked than market reporter, economists are more panicked than the RBI themselves. And if you look at it 15 days back, everybody was talking about, you should raise 100 basis points, 50 basis points and stuff like that, and the interest rate differential. I don't think that all matters. We need to really look at it on a macro basis. How do we, plug the FPI outflow, daily outflow, which is happening on the equity side? How do we plug that? If we are able to sort of plug that, I think the rest is all manageable.
Okay, just about 3 seconds to go. We're waiting for the governor to come on and speak. But very quickly, Jayesh, what would be the one positive surprise you would hope for from the policy? And would it be concerning the rupee?
So I think change of stance should not be there. It should be still continuing with the same stance. And nothing specifically on rupee. Of course, on his commentary, it might show some strength. And we have enough reserves to manage it. Yes, there is a concern, which is the FPI equity outflow. That concern, how it is addressed, that only maybe central government can address that. But I don't think RBI has some remedy. They need to watch on that. Beyond that, I think something on the LCR, if something comes on.
Over the past few months, the global economy has been shaped by heightened uncertainty, disruptions to key trade routes and supply chains, increased market volatility, and cautious business sentiment. Let me at the very outset emphasize that the Indian economy entered this episode of global turbulence with much better fundamentals than in previous similar episodes. We remain confident to withstand these shocks with minimum pain. Nevertheless, it is important to not only confront and address these challenges, but also at the same time take this as an opportunity to further enhance our resilience. Global economic outlook remains clouded by the continuing geopolitical impasse in West Asia, as sharply escalating energy prices and global supply chain disruptions continue to hinder economic activity. Faced with difficult trade-offs, monetary policy has turned more cautious. Major advanced economy central banks are likely to pivot towards monetary policy tightening. While equity markets remain buoyant, driven by AI-fueled optimism, global bond markets remain bearish amidst renewed inflation fears and continuing debt sustainability concerns. Risk-off sentiments and safe haven demand are imparting volatility to forex markets, with a depreciating trend in many EMI currencies. In this backdrop, the Monetary Policy Committee met on the 3rd, 4th, and 5th of this month to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate under the LAF unchanged at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance. I shall now briefly set out the rationale for the decisions of the MPC. The committee noted that the global environment has deteriorated since the last policy meeting in April, with the conflict lingering amidst a fragile truce. The adverse implications of the extended disruption in supply chains and elevated energy prices are reflected in the moderation of growth and increase in inflation projections from the April policy, and I'll come to these a little later. CPI inflation remains below the target despite global shock, as the pass-through to domestic prices has been limited, while the baseline projections point towards headline inflation firming up towards the upper tolerance level in Q3 this year. The impact of the supply shock is expected to wane Q4 onwards. The underlying inflation pressures continue to remain benign at this juncture. However, generalization of inflation through second round effects on expectations and wages is a distinct possibility warranting a close vigil. The outlook also remains clouded due to the sub-normal southwest monsoon forecast and El Nino risks. As for growth, the MPC noted that elevated energy prices coupled with global supply constraints are having adverse spillovers on economic activity. While domestic demand remains resilient and manufacturing and services sectors activity continue to expand, there are incipient signs of moderation in some sectors as suggested by high-frequency indicators. The MPC was of the opinion that there are considerable risks to the baseline assessment of inflation and growth, which I am going to present shortly, due to the uncertainty about the duration and intensity of the conflict, magnitude of its spillover effects, and the pace of restoration of supply chains. Additionally, the food outlook too remains uncertain on account of subnormal southwest monsoon forecast and El Nino. Although risks of higher inflation have amplified, the MPC felt it would be prudent to wait for greater clarity to emerge. Accordingly, the MPC voted to keep the policy repo rate unchanged. At the same time, the MPC will continue to remain data dependent and closely monitor the developments, including supply side pressures getting embedded in the general price level and inflation expectations. As mentioned, the MPC also decided to retain the neutral stance. I now come to the assessment of growth and inflation. First of all, growth. The second advanced estimates released by NSO placed India's GDP growth for last year at 7.6%. This is owing to strong expansion in private consumption as well as fixed investment. Robust performance of manufacturing and services sectors were the growth drivers from the supply side. As per several high-frequency indicators, domestic economic activity remained largely steady even since the outbreak of the conflict. India's manufacturing and services PMI further suggests that both sectors continue to be resilient and business expectations are still positive. On the demand side, private consumption aided by discretionary spending has remained resilient so far. Fixed investment has also maintained its momentum despite cost pressures. Merchandise exports recorded strong growth in April this year. This is notwithstanding elevated freight and insurance costs. Services exports are also holding up well, reflecting sustained demand despite concerns about AI. Overall, the economic situation has broadly exhibited resilience and withstood the conflict spillovers, although the impact of cost pressures is becoming visible. Going ahead, the rise in prices of energy and other inputs, coupled with supply disruptions, is likely to weigh on economic activity. While import diversification in affected commodities is likely to improve supply, it would still come at a higher cost. The full impact, however, will depend on the duration of the conflict, the time taken for normalization of supply chains, and the burden-sharing approach among the various stakeholders. The pass-through of higher energy prices to retail products is also becoming evident. Additionally, the projected deficiency in the southwest monsoon will have implications for agriculture production and rural demand. However, the programs and initiatives for crop diversification, water harvesting and conservation, climate-resilient practices and short-duration crops, among others, are expected to mitigate the impact. sustained momentum in services, continuing impact of GST rationalization, and broadly stable employment conditions should continue to support urban consumption, even though rising inflation could be a drag on the purchasing power of households. Government capex is expected to remain robust, while the elevated capacity utilization and sustained credit flows from bank as well as non-bank sources are supportive of corporate investment. Cost escalation and heightened uncertainty could, however, dampen investor sentiment. Weak global demand and high logistic costs are also headwinds for merchandise exports. Services exports, on the other hand, are expected to sustain their momentum as demand for Indian services remain healthy. Several measures undertaken by the government, including support to MSME and export sectors, efforts to ramp up domestic gas and crude production, encouraging use of domestically produced alternatives to imported inputs, and diversification of critical imports should help cope up with the external shock. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.6%. We had earlier projected 6.9%, of course, with huge uncertainty and downside risks, with Q1 now projected at 6.6%, Q2 at 6.3%, Q3 at 6.5%, and Q4 at 6.8%. Prolonged global supply chain disruptions, volatility in global financial markets, and weather-related shocks continue to pose downside risks to the domestic growth outlook. I will now talk about our inflation assessment and outlook. Although firming up marginally from 3.2% in February, headline CPI inflation was below the target during both March and April this year. In fact, 3.4% and 3.5% respectively. While food inflation edged up, fuel inflation remained muted as retail prices of petrol and diesel were unchanged in March and April. Core inflation remained stable at 3.7% during March and April. Excluding precious metals, core inflation was much lower at about 2.1 to 2.2% during this same period. International crude oil prices, the Indian basket, have averaged around $110 per barrel during the last 2 months. And indications are that the average oil prices for this year would be substantially higher than what were assumed during the last policy. You may recall that in the last policy, we had assumed crude oil prices to average for this year at $85 per barrel. Higher energy prices and an increase in several input prices also led to a sharp spike in WPI inflation in April. It was more than 8%. Turning to the inflation outlook, the partial pass-through of high global crude oil prices to domestic pump prices of petrol and diesel started in May. Prices of several inputs such as commercial LPG, industrial raw materials, chemicals, base metals, rubber, and plastic products, among others, have increased. These could exert upward pressure on CPI inflation in the coming months as firms pass on these higher input costs. Considering all these factors, CPI inflation for this year now is projected to be at 5.1%, about 50 basis points more than earlier projected, with Q1 at 4.2%, Q2 at 5.1%, Q3 at 5.9%, and Q4 at 5.4%. Core inflation is projected at 4.7% for this year. These forecasts, I may mention, are subject to upside risks due to heightened uncertainty because of a variety of reasons: global supply chain disruptions, global commodity price shocks, uncertainty about the spatial and temporal distribution of the southwest monsoon, and risks from El Nino conditions getting developed. However, I may mention that adequate stock of food grains and satisfactory reservoir levels provide a lot of comfort to us. I now move to liquidity and the financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average daily surplus of 2.63 lakh crore rupees since the last MPC meeting in April. The Reserve Bank proactively undertook durable as well as transient liquidity measures to ensure that there is appropriate liquidity in the banking system. Going ahead, we expect that the usual drawdown of government cash balances after the transfer of RBI surplus and the return of currency during the monsoon season will aid banking system liquidity in the near term. Since the April meeting, the weighted average call rate traded within the policy corridor, while short-term money market rates, especially rates of CPs and CDs, commercial papers and certificates of deposits, moderated before coming under pressure again in May. GSEC yields eased in April following the ceasefire announced in West Asia, but firmed up in May. Transmission in the credit market has moderated during March-April, with some hardening in deposit and lending rates. However, it is still quite robust. The Reserve Bank going forward would continue to ensure appropriate liquidity in the banking system to meet the productive requirements of the economy and facilitate further monetary policy transmission. As per the latest available data, credit from all sources last year YOY grew by 15.4%. This is in comparison to 12.1% recorded the year before last. Bank credit, in fact, has been even more robust at 16+%, and it is broad-based as market-based funding became costlier. Coming to financial stability, the system-level financial parameters, as I mentioned in my last April statement, relating to capital adequacy, liquidity, asset quality, profitability of scheduled commercial banks, these continue to remain healthy as earlier, although there is some moderation in profitability as compared to the last year. Similarly, the system-level parameters for NBFCs too are very sound, with adequate capital and improved GNPA ratios. I will now speak about the external sector. It successfully navigated the challenges of elevated tariff and trade-related uncertainties last year amidst a turbulent global economic environment. The surge in energy prices and persistent trade policy uncertainties continue to pose upside risks to India's current account deficit this year. Services trade surplus and inward remittances, however, are expected to provide some comfort. On the external financing front, buoyant gross FDI and higher net FDI last year, we had record gross FDI of more than $94 billion and a net FDI of about $7 billion. These underscore the continued interest of global investors in India. FDI flows have been rather encouraging even in April. This year, in 26-27 till 2nd June, net FPI to India, however, witnessed outflows of almost $14 billion, primarily in the equity segment. Nevertheless, as per the latest available data that we have with us on May 29-26, India's forex reserves stood at a very healthy $682.3 billion US dollars. These are adequate in terms of the standard metrics of reserve adequacy, with an import cover of about 11 months and external debt cover of 89+%. Various policy initiatives over the recent months are expected to further strengthen and support our balance of payments. These include the recent agreements with major trading partners, some of which have now come into effect, opening of the insurance sector to 100% FDI, ethanol blending program, which has been a great success, push for energy transition, which is gaining momentum, easing of FDI restrictions for land bordering countries, liberalization of the ECB framework, which was announced some time ago, and several others. To attract foreign capital, I also have a few measures to announce today. First, for government securities under FAR, which is the fully accessible route, we are expanding the universe of specified securities by including all new issuances of 15, 30, and 40-year tenor G-Secs. Till now, only securities, government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration, and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing. Second, the limits for investment by NRIs and OCIs in equity instruments traded on the stock market without SEBI registration are being increased. Further, the same facility is being extended to all individual persons resident outside India at par with that available to NRIs and OCIs. Third, a facility of concessional forex swap will be provided for about 4 months till 30th September 2026 to incentivize ECB's external commercial borrowings by public sector undertakings. Fourth, a similar facility for bearing the full hedging cost shall be provided again till 30th September to the authorized dealer banks for raising 3 to 5 year FCNRB deposits. Fifth, it is proposed to restore the time for realization of export proceeds to 9 months. This was earlier increased to 15 months. I may mention that while these measures are expected to strengthen our balance of payments, we will continue to make the right policy adjustments as may be required to further promote exports and attract and incentivize capital inflows. As I have often reiterated, a word on our exchange rate policy, it continues to remain unchanged. We do not target any specific level or band. Instead, we allow the exchange rate to be determined by market forces. Our experience, however, suggests that it may sometimes witness movements, often caused by speculative pressures, especially in the wake of heightened uncertainty, some of which we witnessed recently, which are not in sync with the fundamentals and are disruptive of economic activity. While our objective is not to resist market-driven adjustments, we shall curb excessive volatility and prevent disorderly market movements. While our foreign exchange reserves provide us with sufficient buffer against external shocks, we have a very broad range of regulatory and market-based instruments to respond effectively as may be required. In this regard, we shall remain vigilant, and we are fully prepared, as I mentioned earlier, to do whatever it takes to preserve an orderly market conditions. To conclude, global economic conditions and sentiments continue to be frayed without any meaningful resolution of the West Asia conflict. While these have adversely impacted the domestic growth inflation outlook, the economy at this point is relatively strong. We shall put in place policies to meet the challenges while taking measures to further strengthen the macroeconomic fundamentals of the country. Thank you, Namaskar, and Jai Hind.
Okay, we came to hear the policy and we got that and much, much more. It's like a whole bonus segment of your favorite episode, because here's what's happened. That long-awaited ordinance which attracts back foreign investors has been announced. Tax burden has been eased for foreign investors. The important thing, it's effectively made returns from Indian government bonds tax-free for foreign investors. What is the aim? To boost attractiveness of Indian sovereign debt for global investors. LTCG on G-Sex is cut from 12.5% to zero. Withholding tax on interest income from government bonds has been cut from 20% to zero. We had said this would happen. I think it's very interesting that they have chosen to put this out there through the Reserve Bank of India policy announcement.
Yeah, and something that Gaura mentioned, that you will probably see a series of small measures which the government and the RBI will have to collectively do in order for this to happen, and this is what has happened. Very good move, in line with what needed to be done. Can more be expected? I would suspect yes.
And the other question is, will this help you actually arrest the rupee depreciation and counter the sell-off in equities, is what we have to see now?
Well, hopefully inflows in the bond markets comes
Correct.
in, and because that will be the big thing, right? And I think I'm told Shrimi is with us, and Shrimi was the one who broke this story first on Indian business news platforms yesterday at 9:15 a.m. or 9:20 a.m. Shrimi, great news break. I think Tamanna just enumerated everything that has happened. Add to that, what has happened?
Just to reiterate, Neeraj, and we've been on this news, top of this news, that now it's taken the shape of ordinance, and government has moved the ordinance and granted a full tax exemption on interest income and capital gains earned by foreign investors from investment in G-Sex. And this relief, and this is very important to highlight, this relief comes through ordinance and being effective from April 1st, 2026. So that's very, very important. It's not like effective immediately. So they will have full tax relief from April 1st from this financial year itself. And of course, 12.5% is going to be nil. Your 20% withholding tax is going to be nil. So there is no tax at all. It's tax-free for foreign investors on all the instruments related to GSEC. And as a result, you will see that even the ordinance extends similar tax treatment to banks for international settlement as well. That's also very important to highlight here, because that government saying that exemption will be subject to a first prescribed information reporting requirement. But this is also very, very important, and of course it's expected.
Simi, I'm going to come back to you. Everything in terms of information is on your screen. Apart from the ordinance which has been released today, and that gazetted document has been released, there is also a lot of measures that the governor has talked about. That is also all on your screen. But I'm going to get a quick view from Rajesh Gandhi, Partner Direct Tax and Regulatory at Deloitte India. Mr. Gandhi, thank you so much for speaking with us. Is this the balm that was required for FPIs? What does it effectively mean in terms of returns that some of these investors and this cohort of investors can see from government bonds?
Yeah, I think so. I think this is an extremely important and very encouraging news as far as in foreign inflows are concerned in India, because as we know, investment in government bonds and G-Secs forms a significant portion of the total FPI or FI investments into India. A complete tax exemption is probably what was not expected. We were thinking about tax exemption on capital gains, but may not be on interest, maybe a little lower rate, just like the 5% which we used to see 4 years back. So a complete exemption both on interest and capital gains, I think is extremely welcome and should help to boost, getting money into India. May not be in the immediate short term, but I think, certainly it will have a very positive effect.
What's the immediacy? I mean, this is aimed at getting in that $20-25 odd billion of inflows which was missing in the Indian bond markets. You reckon since this is retrospective, we start seeing some bits of that, or more needs to be done?
No, I think from a GSEC or bond perspective, this is what the government could have done at best on tax. Though, yes, I must add that there is a demand also to try and reduce capital gains tax on equity, both long-term and short-term. But I think that is a more strategic decision which the government will have to take, because it has repercussions for different kinds of investors, right? So in the immediate step, I think what they would have done, they have done. And as I said, it should be seen quite favorably.
Okay. Ashima Goel with us, former member of the MPC of the Reserve Bank of India. Radhika Rao, senior economist and executive director at DBS Bank, with us as well. Welcome to both of you, and thank you so much for speaking with us today. Ms. Rao, I'm going to start with your quick take. I can see Ms. Goel there as well. But if I can just get a quick word from Radhika Rao on what we have seen. I'm told that line has been lost. Ms. Ashima Goel, there is what the government has announced, and then there's a series of measures that the governor also put through to encourage foreign investors to come back. And we'll come to what the governor said on domestic economy, etc. But why has this part been so crucial in the current context of foreign outflows and maintaining balance of payments?
I think the markets were nervous. That is why they needed something. And this gives them that something. Because although our foreign exchange reserves remain very large, but for the last 2 years, we've been seeing that there's an overall balance of payment deficit. So the fear was that there are not enough and large equity outflows. Now, this has normally happened in the past whenever we've had global risk aversion. And unfortunately, this has been a bit prolonged, because starting with the tariff episodes, then the oil shocks to which India is vulnerable. So therefore, some measure that reassures markets that this balance of payment deficit is likely to be to disappear now with these carrots given, that will improve inflows into India. And the interesting thing is that since the rupee is highly depreciated in real terms, and in all past episodes we have seen when it reaches such levels, it reverses. Now, if these inflows come in and the rupee reverses, that will give them double returns, because not only will they gain from tax exemptions, but coming in at a lower rupee and gaining from a higher rupee will give them major returns. So it's a double benefit for them.
Yeah, well, and that's an important point that Ms. Goel makes. Let's get in Devang Shah, Head of Fixed Income at Axis Mutual Fund, on the show as well. And keep an eye out for what's happening to the rupee, to the bond yields, to the equity markets as well, I dare say. Devang, thanks so much for joining in. Was this something that, we of course spoke about this. We broke this story yesterday on NDTV Profit. But what has come in is a tad bit sweeter than what people were anticipating. Is this the best that could have been done? What's the impact of this move? I'm not talking about the Reserve Bank of India rate holding, but the taxation going away.
Yeah, so thanks first of all for having us. As you rightly highlighted, I think this is more than what market was expecting. Market was expecting a lot of chatter about some kind of relief on taxation, but I think RBI has announced everything along with the government, whereby they have actually cut across the withholding tax. They actually looked across at a significant reduction in the LTCG. They're giving away the LTCG on the bonds sale, and government bond sale, as well as an FCNR facility, and they're talking about a concessional ECB facility. So if you'll ask me, it's an all-round positive steps to take care of the or to stem the depreciation of the currency. Our perspective is that if you look across at the growth inflation dynamics, they have weakened the growth and increased the inflation to 5.1 from 4.6. Which as per me is a precursor that RBI is preparing markets somewhere down the line by giving forward guidance that yes, if the oil situation doesn't contain, then probably from August policy, there is a possibility of rate hike. But for today, I think all the measures rightly taken across for stemming the currency and somewhere down the line getting the flows, which was the issue, because the problem was current account deficit and BOP deficit, which they have tried to bridge by taking all these steps.
Okay, so Devang, thank you for that. In fact, a quick question with Radhika before we go to Manish Santalia as well. Radhika, everything is more important right now in terms of the taxation part of it versus the stance et al. How are you seeing that actually come and impact, I mean, the impact when it comes to arresting the depreciation in terms of the rupee and the kind of FPI flows that could be coming in now?
No, certainly, I think the measures that were announced was the tail end of the policy conference is kind of overwhelmed. I think what happened on the benchmark rates. I think the interesting bit is that in parts we were hearing a lot of market chatter on the, the kind of the toolkit that could be used. But the central bank and the government have rightly used everything that was announced, essentially, I think showing, that all efforts, all hands are on deck in terms of wanting to attract inflows. I think we've seen concessional swaps arrangements for the ECBs as well as for the FCNRB. And we know from 2013 that the FCNRB window usually successfully draws in. Of course, it's a lot more expensive now than it was back in 2013 because the US rates have generally edged higher. But nonetheless, I think the central bank does see reason to attract flows to kind of better balance the current account and the capital account flows at this point. So I think they've got the pulse of the problem and they've acted prudently and fast. I think that really will put onshore market, especially the rupee, in a stronger position. We've already seen that in a knee-jerk gains in the currency. And I think as the details are, come about, I do think that the take-up will be a lot more positive.
Okay.
And rate
Okay.
hikes, just to last point,
Yeah.
rate hikes in general have not had a very great impact on the currency in the past as well.
Okay, so you kind of ruling the impact of that out. Fair call. We've got a battery of guests. Make this a bit of a rapid fire. Manish Santalia with us. Manish, equity markets just cooling off a little bit, but frankly, from 0.2% doesn't matter. What do you make of the impact of this debt taxation move on flows on the currency, and if at all, a collateral impact on the equity markets?
Yeah, so I think the direct impact would be broadly on the rupee. I mean, rupee has been undervalued for quite some time. Even in the backdrop of the Middle Eastern crisis, fair value should be around 90 to 92. So I think this comes in as a helping hand towards the strengthening of the rupee. And in that backdrop, if the rupee strengthens, one of the reasons for underperformance of Indian stock markets was primarily that rupee was depreciating very, very massively. I think this comes in handy. And, because of the currency depreciation, whatever was getting sold, I mean, at least that would get abated at this given point in time. And there are numbers to support, the earnings support has been there. So all in all, positive, a rub of positive even for the equity markets per se. And definitely a positive for the rupee.
Sharp fall though, Manish, at this point. Do you think that there is a bit of, I would say, maybe this was priced in, but not really, because you didn't see this big boom in markets on one hand, and there's a bit of disappointment that nothing is done to attract investment in equities. This is very, very debt focused.
Maybe it is, now the prerogative of the capital gains exemption in equities would likely come in the next budget. So in that backdrop, if the markets are disappointed, it could be that way. But I think it's not a major fall that you're seeing. This will get digested, and my sense is long-term repercussions, medium-term repercussions are going to be positive for Indian equities as well.
No,
from a foreign FII outflows perspective, this would definitely help.
Okay. Manish, from a FI perspective, the outflow perspective, this will help. Stay with us. Rajendra Kumar Sabu, Executive Director at UCO Bank, joins us as well. Mr. Sabu, good morning. The announcements that have come in from the RBI, a whole host of measures you're talking about on the FI side. Tax relief on the GSEC front. You're talking about the incentives that even NRIs get. What do you make of this entire measure?
Yeah, good morning. So we have seen various measures announced by Honorable Governor today in MPC conclusion meeting. So we see that the focus of all the measures are mainly on increasing the inflows of foreign currency into India, because we have seen the pressure on our USD rates, rupee USD rates in the last 2 months due to this developing geopolitical issues. So announcing these long-term securities under FAR route for FIIs, like they have announced for 15-year, 20-year, 30-year securities also. That will be very, very helpful in bringing the means inflow into India. And then they have also announced certain means up to September window for concessional swap rates. Because we have seen the heightened means our forward premium in last 2-3 months, the premium rates have been very high, and that has increased the hedging cost of ECB also, as well as other investors also. So announcing these concessional window, and particularly for CNRB deposits also for the banks, that these points are very, very positive for the means banks in particular and economy in general. It will increase the inflow, as already said by other speakers also, and we will see positive impact not only on the forex rates but also on the GSEC rates and further investments into the country.
Okay, I'm going to come back to you, Mr. Sabu, with a bit of context setting of from an FPI's perspective, how does this become more lucrative? But before that, I want to quickly go to Piyush. Piyush has been tracking the entire policy. He is at our studio at the RBI headquarters. And Piyush, there's so much to unpack, but I would request you to focus on the additional measures and just enumerate them for us that the RBI governor spoke about, which supports foreign investor interest in Indian debt.
Vijay.
Okay, I think that line got disconnected. I'll come back to him. Mr. Sabu, can you give us some context setting? In the sense you talked about this 10-year, up to 50-year window now getting opened, the whole passage being eased. What is the kind of volume of investment that you expect to increase?
Yeah, I think we will have to see, because earlier also we were expecting good volumes from FIs when our GSECs were included in various index like JP Morgan index and Bloomberg index, but we have not yet seen major volume into that. But by these announcements, I think, and then further the government has also announced the tax rate cut. So clubbing both together, we are inviting long-term capital from the foreign investors. And I think this should make this proposition very, very lucrative for them. And we will expect that good amount of investment will come from them. We can't quantify as of yet. We will have to see as to how they see the Indian markets, and along with the improving forex rates, USD INR rate also, that will also be beneficial for them. So I think this is a win-win situation for all, and we can expect good amount of investment going forward.
Okay. Manishi Ray Chaudhary, CEO of Ember Capital Partners, with us as well. And we'll get back to our other guests as well. Ashma Goel has been waiting. We'll just ask you, ma'am, a question. But Manishi, how does this impact sentiment? Okay, I don't think I will.
Now?
Yeah, Manishi, please carry on.
Okay, can you, am I audible now?
Loud and clear.
Okay. Right, excellent, thanks. So, I think this has been in the works for a while now. I mean, I think the government and the Reserve Bank have been thinking about, reducing the taxes. I mean, it's a bit of a disappointment that there's no pronouncement on equities as of now. If equity capital gains taxes would, are addressed at some point of time, that would obviously be an additional fillip to this, to this situation that, that India is in. But, one about this whole affair, the rationalization of the taxes and several other schemes that are being thought about. what is a bit disappointing to me is that Indian policymaking has become reactive. We have a crisis about foreign portfolios moving out, and that is when India decides to react. If India is able to convey a sense of policy stability, that okay, this is this normalization of policies and uniformizing with the rest of the world is going to be the taxation policy going forward. That would give a certain degree of confidence to the FIIs. Because otherwise, what might tend to happen is that, okay, along with the tax rationalizations, the foreign investors may think that, okay, this is just a small window, maybe over 1 year, 2 years.
I have one, Manishi, I want to interrupt over here. I take your point. Now, my question over here is, you've removed the capital gains tax when it comes to sovereign debt, right? However, it's absolutely intact on the corporate bond side and on the equity side right now. For an FPI to allocate funds right now across Indian asset classes, how do you expect them to manage that risk from here on?
Well, there is honestly no way to manage. As I was saying, that an FPI may actually think that, okay, this is just a temporary measure. So if I invest now, who knows? This may actually go 1 year or 2 years later. I think the bigger question here is that, the problem with India at this point of time is actually corporate earnings growth. It is not so much to do with the taxation policies. Indian corporate earnings growth this year would be in single digits, like we had last year. So, if you combine all this with about 19 to 20 times price earnings multiple, single-digit earnings growth, a weakening currency, then this does not really inspire confidence from foreign investors.
So it depends on how you want to look at it, frankly, Manishi. Many would argue that the last 2 quarters, especially Q4 for India, has been better than it has been for a while. The corporate earnings have come to the table, but the fact that there is no AI trade is what's keeping foreign investors away. And maybe from the government's perspective, a lot of people asking me, even on my socials right now, why nothing for equity? And I want to ask Ashima Goel this question. Doesn't it make sense from a policy perspective to encourage more stable foreign investment coming in debt versus maybe what is largely termed as hot money into equity right now, when people are wondering, and you're seeing what's happening with the Nifty right now, people are wondering, oh, why not even cut long-term capital gains tax in equities while you're at it? There seems to be a certain thought process in this, isn't it, Ms. Goel?
Yes, absolutely. I disagree with the previous speaker in the sense that this is not ad hoc. Overall, our bond markets are underdeveloped. And so these measures aim to develop those in the way that, the rate, the kind of too many similar participants. So you get a broader set of participants, you get more long-term pension funds, you decrease transaction costs because it's zero tax now. And if the results from this are good, then this can become a permanent kind of simplification of taxes. While in equity, there is too much volatility at present. There are many kinds of considerations in play. So this is not the time to sort of announce anything for equity. It would come with the next budget, maybe. But I agree with the point that, all these measures should be part of well thought out and continuous reform towards tax simplification, towards developing markets, towards being, aligned to your peers in the taxation, towards no retrospective movements. And they have committed to that. So I don't think investors coming in need to worry that they will be taxed for the period when it's been announced that taxes have been cut.
Okay. What else? The equity markets have come off a little bit. But I guess the point that Ms. Goel is trying to make is also well taken in some sense. And I think a lot of people have kind of pointed to that this is one of the many measures that would come in. Now, Devang, you were talking about this, right? That this is the first move done. Maybe some other stuff happens, but the RBI has actually done a lot more than what was anticipated, the government and the RBI. What more do you anticipate in terms of a policy action which could help reverse outflows or at least get in some stable flows on the debt side, if not equities?
Yeah, so if you'll ask me, Neeraj, this is, I think, a precursor to our bonds getting listed on Bloomberg indices.
Right.
There was a lot of noise across on that Indian bonds can be included in the Bloomberg indices, and that will actually fetch around 20-25 billion of flows in India. So my understanding is we are getting away with the taxation piece, we are getting away with the withholding tax. I think Bloomberg will be more than happy to add us, and their review is up. The review is up by September. So that would be a positive. Secondly, I think if you talk about additional measures, I think there is a possibility because there is a lot of increase in fuel and fertilizer subsidies which the government might have to bear, and there can be some bit of fiscal slippage. There is a possibility that even government can look across at a sovereign bond issuance to attract some dollar flows. So our view is, in fact, the measures are completely correct because, as Radhika highlighted, I think just a rate hike would have not helped the currency to stop depreciating. In fact, it is a vicious cycle where growth weakens and then somewhere down the line you see more currency depreciation. I think RBI has done a great job of announcing all of these measures to attract the real problem, which is currency at this point of time, control the BOP, and the measures which can be announced in future would be probably getting our bonds listed on the Bloomberg indices and probably taking a route of sovereign bond issuance that is more on the government side to bridge the fiscal gap.
Devang, point taken over here. In fact, Radhika, let me come to you. I was just looking at the other numbers that they've announced as well. Now, you're talking about the FY27 CPI, which has been lifted to 5.1. We are talking about upside risk there. You have downside revision on the GDP coming in as well from external shocks. If you have to take these two perspectives and then look at the easing that has been done for the FIs, will it still remain attractive according to you?
Certainly, I think, if at the very start of the governor's comments, he started off saying that bond yields have generally gone up across the board. He also mentioned about bias towards tightening for many of the major central banks as well. In fact, in Asia also, we have seen a few already tightened policy. And I think when he went on to discuss about the economic assessment for India as well, I do think there was a lot of emphasis on inflation and inflationary risks. And I think that came from the point of view of the central bank actually emphasizing that price stability will be very important. And I think that they followed up with raising the inflation forecast by about 50 basis points. So that's quite a significant increase. So I do think that they I do think I would see this as a hawkish pause. I think there are some market participants who are looking at it as a balanced guidance, but I do think it's quite hawkish because they have spent quite a bit of time talking about inflation, and then there could be second round effects, and they are mindful of that, which again tells you that they could keep the door open to tightening policy perhaps in the second half of the calendar year. Because honestly, what's happening on the global side, what's happening to oil prices is beyond most of the policy makers. Everybody at this point is in a reactive phase to mean that, how do I safeguard the asset markets? How do I safeguard the economy from what the effects are? So from the central bank point of view, I think they're taking action on the current account. By fuel prices increases, which disrupts demand, and also by gold imports, which they've done earlier. And on the current capital account side, we have seen a lot more announcements at this point. So I think they have taken a broader view, use rate policy where required, which is to contain inflation expectations and to do non-rate measures for the asset markets. And I think that two-track policy is certainly going to continue. And I think the fact that it's unknown is how long this crisis, external oil price crisis will remain. And if it remains even towards the tail end of 2026, I think then we really do have to start talking about rate hikes, because with inflation at 5.1% in fiscal 27, and 5.25% on the policy rate, certainly there is not enough real rate buffer. And I think that's where they would try to build it up. So overall, I think the takeaway for us at least is that the guidance was quite cautious and hawkish.
As one would expect. Radhika, thank you so much for speaking with us. Ashima ma'am, thank you for speaking with us. Just want to get some clarity on fresh information that has come from our Delhi Bureau Chief, Shrimit Chaudhary, and I'm going to come to our guests on this. The government has opened a portfolio investment scheme to all individual persons resident outside India. This has been tagged as PROI. Portfolio Investment Scheme is, of course, PIS is how we're abbreviating it on your screen in case you're wondering what you're seeing. Now, why this is important? Remember this conversation that there will be some form of NRI bonds, which India had issued in 2013. Are we seeing some iteration of that? Is what I would like to understand. I'm going to go to Rajesh Gandhi to understand this, and Manish Sonthalia as well. The other thing that has said, individual PROI, which is persons resident outside India, investment limit in listed companies has been raised to 10% from 5%. Markets are wondering, humko kya mila? This is at least an opening. People who live outside India, the limit to which they can invest in listed entities has been doubled. Overall investment limited for all individual PROIs increased to 24% from 10%. Huge jump up here. You know, the diaspora, this is an invitation to the Indian diaspora to come and invest in the country right now when we need it. Government expands fully accessible route, that's FAR, to include 15-year, 30-year and 40-year G-Secs. We talked about that. Sovereign green bonds included under the fully accessible route. Government has removed short-term investment limits for FPIs in government securities. That we know has removed concentration limit for FPIs in government securities. I found this part very interesting. Mr. Rajesh Gandhi, if you can hear me, can you come to me, can you explain your perspective on this scheme for persons resident outside India, PROIs? That's the term instead of NRIs, how we understand it. Can you hear me, Mr. Gandhi? Mr. Rajesh Gandhi, can you hear me, sir? No, I don't think he can hear me. All right. I've got Mr. Tiwari with me from State Bank of India joining in on the conversation right now. I want to quickly get his first take because, you know, we have limited time with him. Mr. Tiwari, big moves from the Reserve Bank of India, of course, as expected on the rate front. But what has been done today to attract investments from outside the country? How do you look at those announcements?
Oh, thank you for having me. So some of these announcements were being expected, and as the largest bank, we were in discussion with the government and the RBI on some of these views were taken. So I think it's very good that all these measures the RBI has announced today alongside the government announcements, which have been also timed today. So overall, this creates a very good atmosphere for people to invest, both individual levels, the FIIs and other companies. And the ECB announcements and the FCNRB announcements, all of them together are actually going to create a good atmosphere. And we should see a lot of inflows into the country, which will help to maybe settle down the rupee level, which is extremely important at this point of time, that we have some band in which the stability of rupee level stays, so that the FIIs can then time and then come in knowing that they would not have a huge depreciation going forward.
Now, as part of those consultations that you spoke about, Mr. Tiwari, where, you know, as the largest bank, of course, State Bank of India also participated, what do you see as the expected amount or quantum of flows coming in? Because now the next step is for the entire banking system to prepare for it as well.
So it's hard to put a number on any total flows which might come in. But if you look at the ECBs, normally every year about $10 to $12 billion ECBs are raised. We may have some increase here because some of the public sector units may prepone the raising if that was planned maybe next year, etc. for the projects, and therefore to some extent they should see some increase. FCNRB again we have to see the exact instructions. It is being given to the authorized dealers, and we are supposed to pass on the benefits. But we'll have to work out as to what rates we should give and how much can we expect. And all the other measures on government securities and all, they've removed a lot of irritants, a lot of tax differentials. How much is this going to result in the actual inflows? We have to assess that. So overall, I think it should be a substantial number, but what that total number will be, it's hard to forecast at this point of time.
Believe, sir, that the estimated 20-25 billion number which was being thrown about, you could actually see a reversal of most of it, if not all, considering that this is even better than what was anticipated from the Reserve Bank or the government.
Yes, it could be more as well. I mean, it
could be more as well. Okay.
Totally, it could be more, but it's hard to estimate at this point of time. You remember the governor also did not give any number.
Yeah.
So it's tough to give any numbers without seeing the reaction of those who are supposed to invest.
But it was good to get this color from you. One more question really here, which is that almost everybody that we've spoken in the last 3-4 days has spoken about how undervalued the rupee was. This move shows that the rupee today, do you reckon this has the ability to keep the rupee shored higher for a period of time, or do more measures need to be taken now?
So I think this would definitely support the level of the rupee, and how much there's always already been a marginal appreciation as we speak. So therefore, it should result in the rupee staying at some level, and more importantly, as flows start to come in. See, these are announcements, and these have a good feel-good factor, but ultimately it has to convert into the flows coming in. So as in the next 2-3 months, which is this window, as flows start to come in, I think the rupee will find its level, and ultimately that would encourage more people to bring in money, and therefore overall the flows could be higher.
Okay, thank you so much, Mr. Tiwari, for speaking with us today and your perspective there. I'm going to ask a quick question to Mr. Sabu. He's the Executive Director of UCO Bank. Mr. Sabu, what is the kind of interest you expect from NRIs, or as we're calling them, PROIs, residents outside India, with all of these opportunities coming in?
Yeah, so various opportunities, I think, open up due to this ease of process also, and announcement done by the government about removing the limit and making the process easy. I think already means a lot of interest is there in the Indian market by PROIs and other NRIs also. That will further enhance due to these measures, and we expect means reasonable amount of inflows out of them also. Yes, but this is not only the sufficient thing. Maybe many more things will be coming forward in due course of time, depending upon the situation. But I think overall, this has been in a positive direction, and will help attract more foreign capital towards our country.
Thank you so much, Mr. Sabu, for speaking with us. Manishi Rai Chaudhary, thank you so much. Just want to take a quick, I would say, status check. Rupee, bonds, Nifty, Bank Nifty, what's happening to all of these asset classes? The Nifty has taken a bit of a nosedive. There is a stock called PNB Gilts. I want to look at PNB Gilts just before we wrap up the show. The Bank Nifty up about 0.3% right now. PNB Gilts 5%. Actually has come off its highs. Why? It's in the business of facilitating investments into G-Secs. That's why you're seeing PNB Gilts up about 5% right now. The rupee would be stronger than it has been in the last several days as we go in. Yeah, about 0.5% up, 95.37. So guys, all in all, it's been a cracker of a policy announcement. We came for the show and we got an extra bonus
and I think everyone's not really thinking of what happens to rates, what happens to inflation, what happens to growth. The idea is still how are we fixing the short-term problem right now that we have, where we need the money to come in.
Because the fact is no one knows the answers to those questions, including the governor himself, where he has said that's uncertainty abounding.
Yeah, maybe more measures anticipated. We got a Durandar. We didn't expect it. We got a Durandar. Let's see how the movie continues.
Is it a full form Durandar?
Under the circumstances on the debt side, this is a Durandar. You can't do more.
Yeah. We're being greedy.
Part 2 will be on equities.
We're greedy, saying what happens with equities. And my point is that this is good for retail investors in the long term, right? You want stable money coming in, which is going to be with you for a known period of time instead of hot money coming in. All right, that's all the time we have on this very extended India Market Open. Thank you for staying tuned. All of the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no harm, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook,
welcome. You're watching Ask Profit here at NDTV Profit. Of course, the monetary policy took a lot of our time, but it is a good news coming in with regards to where there's 0% capital gain on profits that will be made on government securities. But I think market was expecting more, and that's why we're seeing markets at the day's low point. Let's try to pull the Nifty 50 up and see as to where it's trading at right now. And there you go. It's recovered though from its day's low point, but still trading just about 0.2% higher. We're hovering around the 23,400 levels. The 49 points of an uptick is what we're seeing. But let's try to pull up the Bank Nifty and see as to where it is trading at, because we've been talking about how the setup of Bank Nifty is looking much better than the benchmark. There you go. Of course, this also has significantly recovered from its day's low point, now trading about that 0.8% mark, and 54,700 levels is what we've crossed in terms of where the Bank Nifty goes. Let's try to pull up the Nifty 50 heat map as well and see as to what that heat map is looking like right now. In terms of where specific names go, of course, a lot of your banking and financial names doing fairly well. Bajaj Finance, HDFC Life, Shriram Finance, Adani Enterprise, of course, also doing fairly well. But, your IT name like Wipro, on the back of its record buyback today, down 4%. Hindalco continues to be under pressure. Trent, Tata Steel, Coal India, some of the names that are also under pressure. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map and then also the advanced decline ratio, because Nifty Media is topping that chart and metals is still under pressure. Realty also doing its fair bit of share today, up 1.6% as well. But the advanced decline ratio, let's try to pull that up because that's suggesting as to where the broader end of spectrum is looking like. You have mid cap 150, which is up 0.5%, and small cap 250 also up 0.5%, and it's diverged. So now you have at least more buyers in the market than the sellers. So this is, of course, with regards to where the markets go. But I think yesterday also Puneet was talking about this, with Physics Wala as to what has happened, and to talk about that and to discuss as to what's changed within the last 2 weeks, we're now joined by Amit Sachdev, CFO at Physics Wala, joining us now. Amit, thank you so much, first of all, for taking out the time and speaking with us. My first question to you is, you'd approved a 120 crore capital infusion in your FinZ Finance on 27th of May. And now there is a reverse course of action on lending, after a few days of that decision itself. So what has changed exactly in the last couple of weeks, and what has led to this change in decision?
Good morning, Mahima. Thank you so much for having us, on your show. Two key, things why we started, creating the NBFC and started actually doing lending on our books, So the thesis is that we've actually have enough student outcome learning, models that we had built in-house to start underwriting based on those, So that was the original thesis that we had built FinZ, our, NBFC. And that was the reason why we also, did 120 crores of funding in our, subsidiary. Over the last, probably 1 week, depending on, the conversations that we had with our multiple partners, the idea was, I think it was best left to the NBFCs to actually do the funding. And we do the, the layer in the middle in terms of how we are going to do the funding for these students actually. So that was the big change that happened. I think Prateek also came out with a statement yesterday that we are going to focus on our core business of student learning, and online business remains our main business. So I think that is what the big change happened over the last week, and we letting it to our NBFCs that we are working with right now to do the funding.
And Mr. Sachdeva, very good morning to you, sir. It's Puneet this side as well. So this 120 crores essentially will be plowed back into the business of EdTech. Of course, I think that's the rationale that you're giving us also. Then essentially, what has prompted this move? Is that the conversation currently with investors? Because you've also on a full year basis turned neutral in terms of your profit before tax. I think you were negative 259 crores last year. I think positive 10 crores. But going forward as well in the next 6 to 12 months, 18 months, I'm guessing you have plans to turn profitable on the PAT basis as well. So what has actually prompted this move, and what's the future of your NBFC license as well? Is there any clarity on that right now?
So, Puneet, absolutely. I think we are evaluating multiple, ways right now in terms of what we are going to do with the NBFC, entity. Please do appreciate that it is a regulated entity, and over the, due course of very early in terms of next few months, we will decide in terms of what we want to do with this entity. We will not do any on-book lending from the entity. That's very clear, and that's been clearly articulated in our communications all through. But depending on the way forward that we have for getting this money upstream back to Physics Wala, we will shortly come back in terms of the options available to us. Secondly, I think you did mention we turned almost PAT positive in this year, almost 1 year ahead of the commitment that we had given. The focus right now is to just double down on our online core businesses and keep on building from there. And like you said, our guidance is almost more than 2x of EBITDA profitability for next year and PAT profitability in FY27, Puneet.
Okay. Amit, from what we're trying to understand here is that this move also kind of helps you de-risk your balance sheet, right? So just want to get a sense in terms of how much, capital management bandwidth or balance sheet de-risking are you expecting from this move or decision that you've taken?
So, this entire 120 crores, obviously will get de-risked because it will at some point of time get upstream back into our core business. Secondly, if you look at it, I think the reason why we started this was to enable student affordability. Like I said, our mission vision with what, Alex started this also was largely, how do students who get left out do not feel left out because of, constraints in terms of not being able to afford these courses. So this money eventually will get, upstream. What it still does is, like I said, that, the models that we have worked based on learning outcomes, they will still help us keep the cost down because we've over the last couple of years, we now learned how to actually underwrite some of these student loans, So in two ways, this will de-risk. First, our own capital will not be deployed, for this. And secondly, it will also help, the NBFCs that we partner with, give them, work with them in terms of how do we make sure, how do we ensure that the affordability for students continues to be there.
And Mr. Sachdeva, just, because of paucity of time, a 20-second answer if you can. Your online business last year, almost half of your revenue, that's grown at 39%. The offline business, also a similar number, has grown by 31%. Will that growth and share of that business continue at least for the next 12 months? Is that a fair estimate to make at this point of time?
Absolutely, Puneet. So our online business will continue to grow much faster than our offline business. Our ambition for online business is that we want to be 55% of online business over the next 2 to 3 years. That is how we started, and that is what our focus is going to be next 2-3 years, including next 12 months.
Perfect. Well, Mr. Sachdeva, we'll let you go on that note. Thanks so much for joining in, giving us that clarification on NBFCs as well as what's forward for you as well. We wish you the best. Thanks so much for joining in. But just a few minutes to go. So we'll start with the rapid fire round very quickly as well. Let me welcome in our guest now, Tapan Doshi, research analyst at CATapan.in. Devin Mehta, technical research analyst at IDBI Capital. Both of you gentlemen, thanks so much for joining in. The first question, which we have from Zeenat from Ranchi is on sale. She's holding 250 shares at 185, and Devin asking if she should continue to do so. What's your view?
I think overall we have seen profit booking from higher levels. One should try to book profits if it's in profit.
Okay, V2 Retail is the next one. Kishore from Bengaluru has bought at the levels of 200, 510 is the quantity. Should he continue to hold this, Tapan? Your view?
No, sell on rise.
Got it. The next question, that's coming in now, and this one's on Vari Energies. A viewer wants to buy into this counter right now. Tapan, would you recommend that it's a good time to do so?
No, wait for 1 or 2 quarters. Challenges are there.
Okay, Devin, is this a good time to book profits in Paras? Namit is asking this question. He's got 48 shares at the levels of 671. What's the view like on the charts?
I think yes, definitely one should try to book profits. It is entering an overbought zone.
The next question is on PNB. Our viewer Murli from Hyderabad, the regular viewer, has bought shares at 79. Tapan, he's been holding for the last 3 years, holding 300 shares. Is it a good time to book out or continue to hold?
No, continue to hold.
Okay, the next one is from Aparna. She's holding 200 shares of Moltec Packaging at an average price of 700. Price target for the next 6 months. Devin, on the charts?
Sorry, I do not cover this particular counter.
Tapan, any view?
Yeah, hold for now.
Tapan, on Timex as well, Jayesh from Mumbai wants to know if it's a good time to buy this because, stocks up 40% in this year itself. We had some promoters selling also at the start of the year. Any view?
No, buy on dips, not now.
Okay, Samman Capital, 550 shares bought at an average price of 165. Is it a good idea to sell at the current levels or possible higher targets in the near term, Devin?
No, I think one should try to book profits.
Next one's on Indian Hotels, bought at 710 and roughly 300 shares by a viewer Ashok Pai. I think it's been in the same range for the last year or so, Tapan. Is it a good one to continue holding for the long term?
Yeah, hold it and you can buy at dips also.
Okay, the next one is on Anantraj, 100 shares bought at the levels of 650. Hold or exit? Sunil wants to know this. Devin?
I think one should try to book profits.
Ravi's purchased 100 shares of Marico at 853. Tapan, would you suggest him to continue holding on to or sell out?
No, hold it for now.
Yes Bank bought at the levels of 12 rupees. 1000 quantity is what our viewer Basavaraj has bought. Continue to hold this from a long-term perspective, Tapan?
Yeah, hold it.
The next one's from Nidika from Pune on Tata Capital, holding shares at 326, asking, the performance is good, but stock's not moving. Tapan, do you think it's all priced in right now?
Yeah, pricing so she can sell at a rise.
Okay, Nalco, 130 shares bought at the levels of 422. Hold or sell, Devin?
I think one should try to exit this one.
The next one coming in now is from Siva from Toronto. He wants to enter a few stocks from the long term. Samvadara Motherson, Uno Minda, either of those that you like, Tapan?
Yeah, both are good. No, you can share equally.
HBL Engineering, 200 shares bought at the levels of 999 6 months back. Continue to hold, accumulate more. Devin, on the charts?
I think one can hold and buy on dips near 780.
Got it. HDFC Bank, we get a query on this every day. Tapan, is it a good one to continue holding right now?
No, ICICI Bank is a better option.
Okay, Bharat Dynamics, 20 shares bought at the levels of 1195. Continue to hold this from a long-term perspective, Tapan?
Yeah, currently hold.
Next one's on IRB Infra, bought at 29 rupees per share. Tapan has been a rank underperformer, but should our viewer continue to hold this one?
No, sell on rise.
Is it a good time to enter Ashok Leyland? Shankar is planning to buy 1,000 shares from a 3 months perspective. Devin?
I think no, one should wait for breakouts. The stock is trading lower.
Okay.
Keynes Tech also, Devin, our viewer Ravi is holding, but at 4250. Should he buy more right now or continue to hold this position or sell out?
I think sell on rise.
Okay, Cochin Shipyard bought at the levels of 1768. Buy, sell or hold from a long-term perspective. Archer from Bengaluru wants to know. Tapan?
Hold.
The next one, that's coming in on Shriram Finance at 1193, Devin. So I bought at elevated levels. Should she average down right now? This is Lalita.
I think yes, one can average.
BSE, is it a good buy at the current level? Kanan from Chennai wants to know from a short-term perspective. Deven?
Yeah, I think one can buy with a stop loss of 3840.
Hamsini wants to know about Jyoti CNC Automation. Is it a good time to enter? Tapan, would you recommend that?
Yeah, she can.
Tata Power or KPI Green? Which one is a better bet from a long-term perspective, Tapan?
KEI.
KPI Green, sorry. It's not KEI.
KPI. Sorry, my mistake. KPI Green.
Okay.
Okay, the next one's from, and the last one from Kaushik from Baroda. He's holding Nalco at 222. Tapan, should he exit and enter into Hindalco is his question. So, what would you recommend on either?
Yeah, he can switch to Hindalco.
Got it. Well, that was the end of the rapid fire round. Of course, a longer one because of the MPC meet. But Deven as well as Tapan, thanks so much for firstly patiently waiting by and giving us your views across the last few minutes of the rapid fire round. But viewers all the time in this edition of Ask Profit, thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. I get you this KYC show where interesting companies come in. Of course, at times these are recently listed companies and at times they come with new stories. And for today also I've got you a very new and an interesting story, and I'm sure you must have seen it all across your housing societies as well. It's a Mumbai-based decor company. First hint for you. Second hint, it's engaged in the decorative wall panels and the laminate segment. There's a lot of competition in it, but I'll try to refine it. It is a recently listed company. I'm sure you must be guessing it by now. It was listed in September 23 and the brand is endorsed by Hrithik Roshan. Interesting. Try to guess the company's name, and of course the company's name also interestingly has the promoter's name also in it. The company's name in focus is Euro Pratik Sales. This is the company which you're talking about. We had heard about it, but after its listing, it seems like there wasn't much buzz in the street, and I was trying to understand why there is no buzz happening, and there was a little bit of promoter buying also happening in this counter, and that is where a little bit of interest came in for me. But let's see what are the key questions to be asked for Euro Pratik Sales. The first one is the raw material margin picture. Because the majority of their products are crude-based projects, and of course remember in the month of March there wasn't much impact because all the pressure started coming in the first quarter itself. Risk mitigation factors, of course what the company is trying to do, that will be very much important to understand, and also thirdly the volume growth outlook. And we'll try to get those new product launches also because they keep on changing their product catalog. The progress of the international operations right now, it is quite less, but are they expanding to new regions? Of course, and speaking of that, 2 to 3 years of expansion, which area are they doing? Will it be via acquisitions or will there be market share gains? That's the key concerns. Also, the integration of two recent acquisitions, Uro Veneer Worldwide, this is the southern industry, and Chawla Brothers, that's the northern market. So how they do their integration is something to be asked about, and a very interesting second gen management, Pratik Singhvi, the CMD at Euro Pratik, is going to answer all our questions. Let's understand the key details about the company. What's this company all about? Ye company karti kya hai? I had mentioned you earlier that it was incorporated in the year 2010. It's engaged in decorative wall panels and laminates. In such a short period, I would say they are able to get a good market share. Recently listed company, but of course after listing there hasn't been much buzz in the company. Brand has been endorsed by Hrithik Roshan. That's pretty much interesting. Market share, impressive for a short period like this company's existence. 16% of it is pretty strong. 36 contract manufacturers. That's what the company claims, that it is asset light in nature. The distribution network is around roughly 138 cities with 198 distributors. Also, we look at it, 2.25 lakh square feet of warehouse spaces across India. This is the key details about the company, and also the global subsidiaries is starting to come up, US, UAE, Europe. But remember, the overall revenue contribution is very minuscule right now globally. First, let's see what they expand in India, and that's what I was coming to. 98% of the revenue just comes from India. Also, apart from about the company, remember the revenue mix kya hai? 57% of the revenue mix still comes from the wall panels, and the decorative sides come in, and if you have that number, this is the laminates, that's around 31%. So it is both of these categories are value accretive or high margin. How the domestic revenue pans out, southern India still commands almost 47% of revenue coming in, but the other places also, especially the western India, that has 26% of coverage. So yes, it is a pan-India player, but a good support coming in south and western markets. But ये market कितना बड़ा है? Market share की आंकड़े पे बात कर लेते हैं. And look at that CAGR growth. It's coming everywhere. Wall decorative, panels, laminates. As the disposable income rises in India, this is how this industry is also going. So definitely it's doing well. What can work for the company? This is important. It's a debt-free balance sheet, and this is what I liked. Also, good integration is happening, and that pan-India expansion is playing out. This is what I like for the stock. Top line growth has been good. I was just checking the Q4 numbers. That was good enough. Asset-light business model is something which is really good. But apart from this, what may not work? There is a lack of analyst coverage here. That's the first and most important. Secondly, majority of the products are being crude based, so there is going to be an impact. Now you cannot have a 100% pass through. There will be some lags. The margin, ROC, ROE pressure is being seen, and I'm going to show you some numbers. That is where a little bit of concern lies for me. And also the rise in working capital days, it has been constantly going up. That is where I feel there is some concern in this stock, and of course in the stock price also there are some issues. But let's try to understand more about it. A company mein kya hai? KYC ratings, let's get them all in. Income statement, balance sheet, cash flow, the usual numbers are there. ROC is something which I'd like to point out. Some interesting snippets are coming in. Remember, it's just been almost 1.5 years. It's not even been one full year since the company has been listed, so take things with a pinch of salt when it comes to shareholding street cred valuations. I'll try to show you how much of that has corrected from the IPO. हमेशा देख रहे हैं कि आजकल के जो IPO आ रहे हैं वो महंगे दाम पे आ रहे हैं. Because of that, a lot of newly listed companies are trading at a discount to their peak valuations. Also the outlook, we'll try to understand how the industry is moving, how the company is moving, and what can be a short-term hiccup. First one, let's try is income statement. And income statement, largely the numbers have been strong. Last 3 years CAGR numbers, top line देखिएगा 23% CAGR growth coming in, decent growth coming in the EBITDA and the PAT numbers. But Q4 is something you should be watching out for. And in Q4 the numbers have been good. The YOY growth has been good. PAT has jumped up almost 57%. On the other hand, 27 to 37% growth coming in overall revenue and operational profit. But a little bit of concern comes in because this business was generally a 33 to 35% margin business, but this time the margins has come down. That's around 28%. Now we need to understand, is this pressure going to come more because the crude based product is something which majority of them are in the portfolio. But as of now, historically speaking, I have given this a strong thumbs up. Let's talk about the balance sheet. Largely, the best part is it's debt-free company. There's like a minuscule amount here borrowing that's literally not there. Cash balances, if we have a look, that's around 18 odd crore rupees. Overall, the balance sheet looks good, but the working capital, that is where a little bit of stress comes for me in my analysis, but we'll come to that later. As of now, balance sheet is a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, but let's try to understand the cash flow. Is there any lumpiness in this business? Is there any seasonality? And I feel there isn't much as such. Reversal has happened, but look at FY24. This is where a good cash flow of operations had come in. FY25, some kind of reversals. And remember, the company is spending a lot in integrations also. So your cash flows are going to be disbalanced, at least in the growth phase. And when that happens, even your return ratios get impacted. So right now, let's keep it a neutral rating because of so many things happening in the company. And my concern, which I had explained to the return ratios, what's happening. So when a company claims that they are asset light, their return ratio should be on the higher side. So why there is a mismatch, we'll try to understand from the management. But look at that ROC from FY23 to 61%, and the dip started coming in, it's around 44%. Same thing happens for ROE also. That's where the dip is coming in. So return ratios, I've given this a strong thumbs down. Also, let's talk about the shareholding, how things are panning out. Promoter stake has been largely untouched. FIs have slightly sold off. They had just had a minimum stake of only 1.6%. That has come down to almost 0.5%. For DIs also the same story is repeating from 5%, a minor sell-off. It's around 4.6%. So let's not be harsh in our analysis. Let's give it more time. It's hardly been not even a 1 year. So I'm going to give this a neutral rating for shareholding segment. Also, let's talk about this trade cred. How much things have moved and ज़्यादा move नहीं हो सकता. September 23 में ही इनका listing हुआ था. So if you look at it, a 6-month stock is down 27%, and this is where the concern lies for me. That post is IPO. If you have entered, you haven't made money on this. Year-to-date basis, stock is down 18%. Listing gain definitely was there, but it seems like that has evaporated. And since listing, the stock is still down. It's in the red territory. So let's give it more time. Should have been negative, but I've given it a neutral rating right now because let's need to give it a little bit more time to judge a company. It's been recently listed. Let's talk about valuations, what has happened. In this valuations, the peak valuations, the IPO time के euphoria में इसका 54 times trailing पे ही चल रहा था. अब देखिए घट के 34 times आ गया. So there is a good discount happening in the valuations. So valuations fronts, it is looking attractive. So I'm going to give this a thumbs up here. But let's talk about the outlook. The company has a good outlook here. Euroveneer, that buyout which is happening over here, the revenue potential is 115 crore and PAT of 20 crore in FY27. Also, the second acquisition, Chawla Brothers for Northern India, the revenue expectations is 80 crores in FY27. But if you look at the other key triggers, they want to focus on the deeper penetration in the Indian rural market. That means अपने distributors को इन्हें बढ़ाना पड़ेगा. उसके अलावा forward integration via inorganic growth and acquisition. So new industries they want to go in, or the new geographies they want to go in, they'll start acquiring them. And also the global front expansion. एक बार इंडिया का मॉडल ये सेट कर लेते तो ये बाहर में जाके ग्लोबली भी इस मॉडल को ला सकते हैं. But I have concerns. There is a lot of raw material cost. There is a lot of Middle East issues. इसका भी तो impact आएगा, at least in the medium term, 1 quarter, 2 quarter. For that, I'm going to give this a neutral rating as well. But let's try to understand and give you the entire picture of what's the total ratings looking like for Euro Pratik sales. And largely, income statement and balance sheet has been good. Return ratios has been a big question. So I'll try to understand that from the management point of view. But if you look at the other key segments, especially you could talk about the street cred. The stock hasn't made money post its listing, and the valuations, however, have corrected from their peak levels. Outlook, I would keep it neutral. Company has kept it positive, but there are global sentiment also. But net, largely in line with what the numbers I generally give. That's around 4.5 out of 8 for Euro Pratik. But for the conversation, we'll be joined in by Pratik Singhvi. He's the chairman and managing director at Euro Pratik. And interesting snippets about him is that he had launched this company in the year 2004. That's almost more than 2 decades of experience in the wall decor industry. But this is a time for a quick break right now. And on the other side, we'll be speaking with Pratik Singhvi.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
Welcome back to KYC, and now we are joined in by Prateek Singhvi. He's the Chairman and Managing Director at Euro. Prateek, you could say good afternoon, Prateek. It's always a pleasure to have you here at NDTV Profit, and for the first time, your company is coming in my show. I just want to understand the first and foremost, the Q4 numbers were pretty strong, but one thing which, kind of hit my eyes was the margins, You're generally enjoying 30% plus margins. This time it dipped to 28% on the calculated basis. But the quarter which is going to come, that's going to be impacted. So I just wanted to understand how the margin outlook looks, at least for the short term. And is there any pass-through mechanism, because a lot of majority of your products are crude-based?
Firstly, thank you very much for having me on the show. The margins which you are seeing is on a consolidated basis because we have acquired two companies where we hold 51% of the stake in the company. So the revenue comes in 100%, but the profit comes in 51%. So that is the reason of margin percentage which you can see is on a lower side. Talking about the business, we are still in this challenging environment, geopolitical issues, Middle East crisis, but we are still we are proud to say that we are still in a growth trajectory. We do believe in keeping a lot of inventory with us, and that is keeping our business on a growth trajectory even in this challenging environment.
And Prateek, just to understand, is there any risk mitigation procedures which are being undertaken by the company in these situations? At times what happens is you move into a value-added product, or maybe you get in your new distribution channel partners. What are you doing to mitigate the uncertainty which is happening across the world?
Yeah, so a few things which company has taken steps to mitigate these geopolitical issues. One is we are not buying in US dollars, we are buying in a local currency. Our biggest supplier is based out of South Korea. So we are buying in Korean won, which is not appreciated against the rupee, not significant, just a couple of percentages over the last 1 year. In terms of the domestic market, we are trying to get into smaller pockets. More than 80 dealers have been added in last 4 months in the Indian market. So we are trying to penetrate deeper into B and the C categories of cities across India.
All right. Prateek, apart from this, also maybe this is a result of, integration of two new acquisitions, but the working capital days have risen, and the return ratios, which we used to earlier get a very handsome return ratios your company used to enjoy, that has come down. Is it because of these acquisitions only, or is there something else?
So the first acquisition was in the company from the 1st of December. So, but the full year numbers go in the working capital. So that is the reason the working capital is showing more. For this year, both the acquisitions will be for the entire year. So it will be on a reasonable basis as per before. Similarly, for the return on capital employed, as the acquisition was done in the middle of the year, the numbers have been impacted due to that.
Basically, they are bottoming out. Now the worst is over. If we're just talking out the number, fair enough. But let's try to understand a little bit more about it. In case of, let's say, 1 year, 18 months, what's the volume growth outlook looking like, Prateek? And also the new product segment, because your segment is very, very, dynamic. A lot of product changes happen, new trends keep coming in. You just spoke about your Korean partner. I'm sure you must be doing a lot of R&D and traveling to figure out what's next. So we just want to understand anything, what's next, any kind of good launches or tie-ups we can expect.
So yeah, it's an ongoing process all the time. In the last 4 years, we have launched more than 100 catalogs. So at a speed of more than 1,000 designs every single year. So for next 3 to 4 months, we would be launching around 400 to 500 designs, which are already in the pipeline. Our DNA is launching new stuff, giving new the Indian customer customized Indian taste products. So that process is always on. We have currently onboarded around 42 contract manufacturers in India as well as globally. So we customize the product for the Indian market, and we will be launching those in the coming future as well.
Fair enough. But Prateek, I just want to understand, because the international business has not picked up, it's just 2% of the revenues. But you have been making announcements, your subsidiaries, US, UK, even in Europe. Just want to understand, what are your plannings, and have you earmarked any money for this international expansion, or how will it going to be?
So yeah, we have acquired a stake in a company, in a Dubai-based company. Due to the geopolitical issue, it's been delayed by a quarter. Hopefully by second quarter, we would be starting our Middle East operations. Also, we have a company office in US, but even today, 98% of the business is coming from India. And we want to focus in India first, and along with it, we'll try to go global as well.
Fair enough. So that's somewhat the India business model gets replicated globally. That's what as reading from your presentation. Prateek, the India expansion plans, because of course that the international expansion is still small. The India expansion is still big. We have 2 acquisitions which have been already taken place. We'll talk about that a bit later on. But right now, I just want to understand your India expansion plans and the market share guidance. There are 2 ways to look at it. One is the competition, because it's been just 15-16 years, you have got a very good 16% market share, because there's a lot of competition here. Just wanted to understand your view on the competition, the market share, and also India's expansion plans. Are you going to look at for any inorganic acquisitions now more?
So yeah, the Indian market is very dynamic. As you said, there is a lot of competition, but there is always value for innovation, R&D, bringing in new stuff all the time. Our distribution channel is well aligned. Currently, we are present in more than 116 cities with over 200 distributors working with us tirelessly over the years. So innovation is the key. Competition will always be there, but I feel if you are able to innovate and bring new stuff to the Indian market, you will always be a few steps ahead. So we continue to focus on that. Growing inorganically is also an option where we are considering to go deeper into the Indian pockets by forward integration, having like-minded people aligned with us, and grow and take this company to the next level.
Fair enough, Prateek. But now let's understand about the 2 most important acquisitions which have taken place. You have given your FY27 contribution also from them. But what's the process timeline looking like, for Euroveneer World and Chawla Brothers? Are they fully integrated into the accounts, or is there something left, plus minus? And all the benefits will start coming in FY27 only?
100%. Everything is integrated. This year we'll have the full numbers of both the acquisitions. I would like to add here is both the companies are, one company is 28-year-old, the other one is 47-year-old. So they have a proven business. It's nothing new what they are doing. It's just that it is getting integrated into our company now. So all the numbers will be seen from Q1 this year as well.
Pratik, just a short question, because the way you are going about acquisitions and expanding, is there a chance to look at a fundraise, in the next 6 to 12 months? Because you are expanding also. So that's why I thought mathematically there might be a fundraise.
So both the acquisitions would be around more than 105 crores total value, which we are doing from internal accruals. As on today also, the company stands at net debt free. We believe to be debt free, but if required, if the business and if the business looking very lucrative, we might go in for some fundraise. But the DNA of the company is to be debt free as much as possible.
That's pretty much interesting. The way you look about the DNA is coming in for the expansion. But just one final query I have is on your peers. How's the competition looking like? Because your industry over last 1.5, 2 years, there was a little bit of pricing pressure. Is that coming off now? The weaker ones are leaving the industry. What's happening here?
So yeah, we are one of the leading players with 16% market share of the decorative wall panels. Yeah, the competition is there, but I feel in this challenging environment, it will the consolidation will happen, and the players who are there for the long run will sustain. So I am a firm believer that in challenging situations, the company which goes through it in a better way has a long-term good vision, and the company will do well in future as well.
Right. Thanks a lot, Pratik, for your views on the company, the industry and the outlook ahead. We also got a lot of clarity. A lot of numbers are getting jumbled up, but then you explained us nicely why this has happened because of the acquisitions, and that is why in KYC we get all this important work done. Thank you very much, Pratik, joining us. So that's the management clarifying a lot of numbers because of the key acquisitions, but nevertheless, despite the uncertainty in the markets, still bullish on the margin outlook and the growth for first quarter. That's pretty interesting. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our.
Good afternoon, you are watching Markets at 12 with me, Sharad Dubey, and this is the show where we get the updates on the top buzzers and the news updates. Let's do a quick market check before we take you to the RBI's press conference. It's about to start in some time. Interesting update coming in. Let's pull out the Nifty and as well as Nifty Bank to see how much changes has happened. The moment the announcement had come in, we had seen a decline coming in overall the numbers, both Nifty and Nifty Bank, but then a little bit of recovery coming in. Just a short check, it's still flat, so we'll try to understand, but Nifty Bank's technical setup still seems slightly better. Let's just pull out the top gainers in the Nifty, what's happening in the stock specific moves, and then we'll take you slowly to the RBI press conference as well. Largely it's even Stevens in both sides. Reliance, HDFC Bank kind of pulling it down, but on the other hand the financials doing really well. Let's pull out the Nifty Bank constituents to show you what's happening there. And largely a good buying was seen earlier, especially in the smaller names. On the other hand, HDFC Bank is a drag, but ICICI Bank is in the green, so there is a tussle there, and that is why we are seeing Nifty Bank in a small range. PNB, AU Small Finance Bank, Canara Bank, all doing well in trade as well. Let's pull out the sectoral heat map also to give you the entire picture of the whole day's trade, what's actually happening. A major announcement coming in is that the FPI easing of the taxes announcing also, and that is why if you just pull out the Indian rupee and the bond, that's where you'll show how much changes is happening. But let's move on. The RBI MPC's press conference is starting. Over to you.
The market is pouring its congratulations. I wanted to know if you can give us some more details on the ECB and FCNR scheme, especially FCNR. Last time it was excused from CRR and SLR, and banks were allowed to give loans and get their customers to raise FCNR. So it was not just their money; even leveraged was allowed. Can you just elaborate, because that will give an idea of how much they can expect? And
the details.
And anyway, what is an idea of the flows? Sorry, what kind of flows? Sorry, it's a sales call. What kind of flows are you all expecting with everything, ECB, FCNR, and the other steps that you have announced, NRI, etc.? Thank you, sir.
The details we will come out, shortly. We are still, working out the details, but broadly, the contours were already mentioned. In terms of CRR and SLR, that dispensation will certainly be given. Other than that, I don't think there is any change, in the regulatory dispensation. So that whatever is, whatever is the existing dispensation, regulation with regard to that, there is no special dispensation for that. In terms of the quantum, we are hopeful of reasonable and good. We are not targeting any particular amount, but we do expect healthy flows, both from ECB and other various measures have been announced today. So as a result of all these measures, we expect healthy flows, not only in this period of 3 to 4 months that we have given short window for ECBs and FC and RB deposits, but there have been other measures for equity as well as government bonds, all put together. We are quite, and there were other measures, which were taken even earlier, whether it is in terms of the ECB, liberalized ECB scheme that we brought in, and the measures that I mentioned in my monetary policy statement with regard to government initiatives in terms of the trade agreements, etc. All those put together, we are quite confident of very healthy, a much better BOP this year as compared to what it would have been otherwise.
Thank you, sir. We'll take some more questions from our left side before we come to the right side. I now request Manojit Saha from Business Standard to ask his question. Manojit, please.
Thank you, sir. Now, can we assume that for the time being, since you have not mentioned that when the RBI expects inflation to come back to 4%, can we expect that RBI now put that 4% target in abeyance for the time being and more focused on the range like we did in COVID times? Because from the speech, I think it's evident that you're more concerned with growth rather than inflation. So is the 4% target is kept in abeyance for the time being?
No, the target is not in abeyance at all. It's a target which is sacrosanct for us. It's a target which the government has given to us. It was reviewed. It remains 4%. And that is what our endeavor is. But keep in mind that this target, it's to be met, over a period. It's a medium term kind of a target. And it is not advisable to take action for each and every small or large, especially small, deviations from the target, because that can have consequences which can be disproportionate for growth. So our target remains the same. It is 4%. It is to be met over a period of time. And as mentioned, we will be data dependent. We have to watch and see as to whether this shock supply, because it's a supply shock, whether its effect is going to persist or whether it is going to wane away. So we are watching for that. And I think the details are already there, in my monetary policy statement. We'll be very watchful if inflation is getting generalized, building into expectations, and accordingly, take action.
The concern is the real rate is now very, very small or even negative. So,
see, as I mentioned to you, we have to look at it over a little longer period. It's not possible, nor is it desirable. It's neither possible nor is it advisable to have it pegged, in a very small range, and that's why we have this range. The range of 2 to 6% is primarily for this purpose. That while the endeavor, the focus, the target is 4%, but there can be fluctuations around that, and we don't, if they are really fluctuations, then we don't, and it's the effect, and the inflation is coming down on its own, then we don't apply, monetary policy tools which will have other adverse consequences.
Thank you.
I will, in interest of everyone's time, let's restrict ourselves to one question at a time, and then if there is time and the question has not been asked by anyone else, then we come back. Okay?
Thank you, sir. I now request Anup Roy from Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, in a recent interview, you have said that rupee is undervalued. So what is, as per your estimate, the fair value?
Which interview are you talking?
In Mint interview, you have said rupee is perhaps undervalued. So
I've never said that rupee is undervalued. I think what you are referring to is the fact that I mentioned that, it may be, I think if I recall correctly, I said something to the effect that it is reasonable to think that it may not be, overvalued. And some people, of course, do say that it is, when they look at REIT, etc., then they do say that it is undervalued. So this is what I said. I never said that it is undervalued, but by some accounts, yes, it is undervalued.
So what could be the fair value if you have done any?
See, we don't. we don't have, as mentioned, our policy has been consistent. This question keeps coming up again and again, and we keep giving out the same answer. I don't have anything more to add than what I said in my monetary policy statement.
Thank you, sir.
Thank you, sir. I now request Hamsini Karthik from Money Control to ask her question. Hamsini, please.
Thank you, Pritha. Thank you. Good afternoon to everyone. My question is on deposit and lending rates. Earlier in your policies, you've said that at RBI you would endeavor to maintain rates at a certain level, which would be slightly low. You're not in a rush to increase rates. Would you continue to maintain that stand even today, given where geopolitical situations are and what other economies are doing with the monetary policy tools? And as an allied, I would also want to draw your attention to deposit rates. In your speech, you mentioned that there is a certain amount of hardening of lending and deposit rates as well. We recently had a very large private sector banks say that they had to resort to very competitive structuring of deposits to ensure that they're able to combat this excessive competition for deposit. Is that a practice at RBI that you would allow, that you're okay with? And given that deposit rates have continued to be very elevated, it has been a pressure to mobilize deposits. I think we're in the third year of that. Where do you see some sort of a relief coming for banks?
See, as far as deposit rates are concerned, there is no regulation on that. So I'm not understanding as to the intent of your question.
I'd primarily like to understand, sir, is there a room based on the macro environment today where do you foresee low interest rates continuing to prevail in the country for a while? And what would be the allied impact of that on deposits?
Yeah, so see, that's futuristic. We will be data dependent, and we'll see, how the growth inflation dynamics plays out, as I've already mentioned. I think on rates, policy rates going forward, I'll not be able to give you more guidance than what was given in the statement and what I mentioned when I answered one of the previous questions.
Regarding competition for deposits, or any view that you have?
There is competition as far as, competition is healthy. Competition is good as long as it is transparent, as long as it is fair. Competition is good, and that should continue.
Okay.
Thank you, sir. I now request Ekta Suri from Z Business to ask a question. Ekta, please.
गुड आफ्टरनून सर, बहुत संक्षेप में सवाल पूछूंगी ताकि छोटे आंसर्स में ही कम समय हो जाए ज्यादा चीजें. सर, ये पूछना चाहूंगी कि एनआरआई डिपॉजिट्स को लेकर आरबीआई का कोई टारगेट है? और यहाँ पर हम क्योंकि बात कर रहे हैं कि हमारा फॉरेक्स रिजर्व रहे, तो मोदी जी ने भी अपील की थी कि सोना जो है लोग कम खरीदे. क्या आरबीआई गोल्ड मोनेटाइजेशन स्कीम को और ल्यूक्रेटिव बनाने के बारे में सोच रहा है? एंड जस्ट इफ टाइम अलाउज वन मोर क्वेश्चन.
आपने दो क्वेश्चन पूछ लिए. तीसरा अगर समय रहा तो पूछिएगा. तो पहले मैंने कहा कि कोई हमारा इसके लिए लक्ष्य हमने कोई निर्धारित नहीं किया है, लेकिन हमें आशा है कि काफी स्वस्थ और अधिक मात्रा में हमारे को फ्लोज इसमें जो विभिन्न हमने जो मेजर्स जो हमने आज अनाउंस किए हैं उसकी वजह से आने चाहिए. दूसरा, आपका जो गोल्ड मोनेटाइजेशन के बारे में अभी कोई प्रस्ताव जो है उसके बारे में विचाराधीन नहीं है.
थैंक यू सर.
धन्यवाद सर. I now request Anurag Shah from ET Now Swadesh to ask his question. Anurag, please.
Thank you, sir. Thank you, sir. सर, आम लोगों से जुड़ा हुआ एक सवाल समझना चाहूंगा सर, क्योंकि सर लोगों का आरबीआई पे भरोसा है और आप सही आंकलन कर सकते हैं. तो मौजूदा आर्थिक स्थिति को आरबीआई किस तरह से देखता है, कितनी चुनौतीपूर्ण है, और आरबीआई के लिए सर अब चिंता आगे चल के क्या रहेगी, ग्रोथ की रहेगी या महंगाई की रहेगी? क्योंकि सर ग्रोथ के आंकलन में आपने आज कहा कि बर्डन शेयरिंग जो होगी आगे चल के वो भी काफी महत्वपूर्ण होगी, वो भी ग्रोथ को तय करेगी। तो सर उसे कैसे देखते हैं? और सर आजकल भारत के अंदर काफी चर्चा चल रही है डॉलर के मुकाबले रुपए के स्तर को लेके, बुद्धिजीवी लोग, अर्थशास्त्री लोग, हर कोई अपनी राय दे रहा है। तो सर आरबीआई उसको कैसे देख रहा है? क्या ये एक बस प्रक्रिया का हिस्सा है? अगर भविष्य में, निकट भविष्य में वो 3 डिजिट का आंकड़ा भी होता है तो दैट्स जस्ट अ नंबर, नथिंग मोर।
नहीं, देखिए, जो हमारी आर्थिक स्थिति है, जैसा कि हमने अपने वक्तव्य में भी कहा है, तो वो काफी सुदृढ़ है, बहुत सक्षम है, स्वस्थ है। ये जो एक ग्लोबल शॉक है, वो उसमें भारत अकेला नहीं है। सभी देश जो है इससे इम्पैक्टेड हैं। जहां तक भारत की स्थिति है, हम तुलनात्मक दृष्टि से हम लोग न केवल अन्य देशों से तुलना की जाए, बल्कि पूर्व के इस प्रकार के जो शॉक्स हमारे सामने आए हैं, दोनों दृष्टि से हम लोग आज काफी बेहतर स्थिति में हैं। चाहे वो आर्थिक हमारी वृद्धि हो 6.5% से ऊपर, वो बहुत कम देशों की है, किसी की भी नहीं है। जो मेजर जो देश हैं, बड़े देश हैं, किसी की भी नहीं है। और जहां तक मुद्रास्फीति की आपने बात करी, तो मुद्रास्फीति निश्चित रूप से जो है इससे बढ़ेगी, क्योंकि अगर ऑयल के प्राइसेस बढ़े हैं तो वो सब जगह पे बढ़ रहे हैं। लेकिन यही उम्मीद कर सकते हैं कि ये ज्यादा लंबे समय तक नहीं रहे, काफी अनिश्चितता है, तो उसके बाद में हमारे को मालूम चलेगा। लेकिन जो हमारी अर्थव्यवस्था की स्थिति है वो काफी सुदृढ़ है, वृद्धि अच्छी है, हमारे बैंक्स वो सक्षम है, सुदृढ़ है, हमारा जो कॉरपोरेट जगत है उसके पास में भी उनकी जो बैलेंस शीट्स हैं वो भी बहुत स्वस्थ हैं। बाहरी जो स्थिति है, आपने रुपए के बारे में बात की, तो वो भी हमारे जो फॉरेक्स रिजर्व्स हैं वो हमारे पास में पर्याप्त मात्रा में है, और 11 माह का जो हमारा आयात, गुड्स का जो आयात है, उसको कवर करने के लिए पर्याप्त है। कुल मिलाकर के हम काफी बहुत अच्छी स्थिति में हैं, और हम काफी विश्वस्त हैं कि इस स्थिति से हम लोग अच्छी तरह से हम न केवल निपटेंगे, बल्कि इस स्थिति को एक अपने लिए एक अपॉर्चुनिटी मानते हुए और अधिक हम अपने आप को सक्षम और सुदृढ़ बनाएंगे, ताकि इस प्रकार की जो क्राइसिस या शॉक्स आते हैं उनको हम बेहतर और अधिक बेहतर तरीके से निपट सकें।
धन्यवाद सर। Sir, we'll now take a few questions from the right.
Yes.
I'll request Sangeeta Mehta from Economic Times to ask a question. Sangeeta, please.
Thank you. Sir, given that influx of inflows that might happen because of the measures announced, what kind of system level liquidity you think would be appropriate in the current scenario? And do you expect banks to pass on the benefits of hedging costs to the customers respective?
Yes, I do expect them to pass on some of the benefits of hedging, and that will result in good flows. Liquidity, as I've mentioned, we will provide the appropriate amount of liquidity so that credit in the system, not only bank credit but other bonds, etc., also can be provided to meet the needs of the economy. There's no level that we generally target. You have seen we gave about 2.6 lakh crore of liquidity in the last 2 months since we have met, and we'll continue to provide appropriate liquidity as is needed.
Thank you, sir. I'll now request Jasprit Kalra from Thomson Reuters to ask a question. Jasprit, please.
Thank you, sir. So, you've announced measures aimed at garnering capital inflows today.
RBI, FCNR, ECB, etc. Are you also considering measures to slow down outflows, perhaps through restrictions on liberalized remittance schemes, overseas debt investments? Is that something under consideration? And because some of my peers took the liberty, I hope you'll allow me. You speak a lot about inflation expectations. In the recent data that we've seen in RBI surveys, they've started to drift up. How do you sort of closely track that? Are there supplementary tools that you're looking to maybe measure inflation expectations in more real time to be able to stay ahead of that curve? Thank you.
See, as and when, first of all, there is no, such measure right now under consideration to restrict any kind of, capital flows, outflows. On your second question, which is related to inflation expectations, we do our household surveys, so that is the primary source, through which we get the data. And other than inflation expectations, the prices, when they are passed on, that can also have some element of expectations built into it, apart from, the service that we do. So we monitor those very closely. And we'll continue to do that and take
from
action.
the companies to the consumers. Thank you.
Thank you, sir. I'll now request Piyush Shukla from NDTV Profit to ask his question. Piyush, please.
Yeah, good afternoon, Governor, DGs. Thanks, Blitzer. Sir, we understand the updated list of NBFCs is yet to come out. You have issued categorization draft circular. There are views on, floating around on one CIC which has applied for deregistration as well. When can we expect the upper, the next upper layer list to come out? And if you could allow me to ask, because this is the largest private bank of country, we have seen a lot of developments happening with regard to how its governance is being played out. Is the regulator concerned in any manner on this particular aspect? Thank you.
See, we don't, you are aware, we don't, answer any entity or bank specific questions. We are more, we are looking at, system level things. So that's, on your second part of the question. Your first part
updated layer of.
See, the list is there already, right? So it continues till the time, we have a new list.
When will we have it? So suppose it gets updated on a yearly basis. That's why I'm asking.
So we'll do it shortly.
Thank you, sir. I'll now request Ankur Mishra from ET Now to ask his question. Ankur, please.
Thank you, Blitzer, for the opportunity. Good afternoon, Governor. You mentioned during the monetary policy statement that the crude oil prices has been more than the assumptions which were there in the last monetary policy. I want to understand what is the assumption now. Apart from that, you also mentioned about the exchange rate policy where you are saying about speculative pressures and how Reserve Bank of India responds to that. In the past, you have taken few measures regarding the same. Are there more measures which are expected from Reserve Bank of India?
No, there are no specific measures, but as I have mentioned, in case they are required, especially to curb speculative kind of a behavior, then we will take them in case they are required. Assumption for crude is $95 to a barrel, so it's changed, from our previous ones and previous assumption, and that is one of the reasons, why inflation is higher. Projected inflation is higher.
Thank you, sir. I now request Shayan Ghosh from Mint to ask his question. Shayan, please.
Governor, on the issue of deposits, generally, what has happened with the bank, they also justified it as an industry practice. My question is, as an industry,
practice?
The practice of giving differential interest rates and masking it probably.
No, our policy, we do allow differential interest rates.
Right.
So sorry, please complete your question.
On a systemic level, I was asking because they justified it saying that it's an industry practice. Is RBI okay with an industry practice like that? Where you give differential interest rate but route it through something else?
I think you are referring to some individual specific instance, bank, which we don't comment on. However, as I've mentioned, I think perhaps now the earlier question, I think they are too connected, that they are connected. So, we have a very consistent and a very clear policy for deposits as to when they can have differential rates. I think for certain categories of people like, senior citizens, depending on tenor and things like that, you can have differential rates. I'll ask one of my colleagues, to tell you on what basis you can have differential rates. But they have to be transparent at the same time. You have to display them to everyone clearly. And any differential rate beyond that is certainly, if someone is giving, is certainly not acceptable.
Thank you, sir. I'll now request K. Ramkumar from Hindu Business Line to ask his question. Ramkumar, please.
Why is this concessional swap facility for raising ECBs restricted only to public sector undertakings? Why not extend it to even the private sector, actually? Yeah.
See, the public sector the public sector entities are a special category, and they are more, in areas where we feel the needs where the needs, of the economy are more. And the benefits are also, passed on to the general public because they are catering more, to public utilities, infrastructure. So the benefits go to a much larger section of society when we give it to the public sector undertakings. If you give it to private, then the benefits are not as widely dispersed as they are when we give such kind of a benefit to the PSUs.
Thank you, sir. I now request Mayur Shetty from Times of India to ask his question. Mayur, please.
Thank you, sir. Governor, you announced a whole lot of measures to attract fixed income inflows. Do you see a role for interest rates here? In the past, whenever such measures were taken, there were higher rates offered to attract capital. Or do you expect banks to offer better returns under these schemes?
Yes. Yes, obviously, because I think one of you asked, this will enable banks to increase the deposit rates for the non-resident and OCI depositors.
This is despite the reduced interest rate differential between India and
Yes. Yes. Yes.
Thank you, sir. We now take the remaining questions from the left side. I'll request Falakna Sayyed from Deccan Chronicle to ask a question. Falakna, please.
Good afternoon, Governor. Thank you for the opportunity. So there's a 50 basis points upward revision in baseline CPI inflation forecast with upside risk. So this strengthens the case for a rate hike in the next meeting. And also, if you look at the bond market, they are factoring 3 rate hikes. The yields are now around 7%, 10-year benchmark yields.
So what's your question?
So the question is that it's strengthening the 50 basis revision with upside risk in CPI. It's strengthening a case for a rate hike in the next meeting.
In the next meeting or later, whether it strengthens the case or not, I don't know. But obviously, I mean, it's adverse. It's more adverse, than it was previously. Certainly, yes. Whether it strengthens the case will depend on many other things, as already mentioned. We'll have to see whether it is actually getting generalized. It's not, as I mentioned, again and again. It's not, just one. If it is a one-time increase, then you look through. But if it is getting generalized, it is getting persistent, it is getting into expectations, then is the time, to act. So, for that, we have to wait and we have to watch.
Thank you, sir. I now request Krishna Kaushik from Financial Times to ask his question. Krishna, please.
Hi, good afternoon, sir. So I wanted to understand, you mentioned that there's a good environment for private capital investments to grow. But have you seen private capital expenditure growing? Because there has been a bit of a frustration on the government side on that as well. The private entities are not investing enough. Along with that, why do FDI inflows remain negative? You mentioned that in the first 3 months or the first 2 months till now, basically, it's been about $14 billion that has outflown. So why are these two things? Can you just comment on that, sir?
See, investments are healthy. If you look at data, the data, for the second advanced estimates for last year, and even if you look at some of the high frequency indicators in terms of capital goods imports, production, H1 numbers of fixed asset growth, H1 was very good. It was in 2 digits. H2 has moderated, but still it's high single digits. So if you look at all these indicators, it's decent. Of course, there is always scope for more. Inflows also have been
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबर शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबर शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business owners. Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook?
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hira Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. A very interesting day of trade with what's coming from the RBI. A major relief when you're talking about the FIs. But one interesting aspect is that this is coming when you talk about the bond, the debt market. The other aspect now is, will there any relief come in when you talk about the equity market or not? And you have the corporate bond side which has been left away from this. So there is a partial relief is what you're talking in. The quantum of money that could be coming in from the FPIs is anyone's guess yet. But interesting moves there.
Well, yes, good afternoon, Hiral, for that. But markets are not actually cheering this. Of course, a lot of volatility was there, but markets stuck in that 180-point range. This is where the action happened. RBI MPC meet, and Hiral, you mentioned about the FPI tax easing. But is it enough? That's the question. You mentioned corporate bond is not included, and everybody's waiting. Is there any LTCG? Positive news flow coming in. Until that doesn't come, I don't think so the market is going to reward, and it's just flat right now. Nifty Bank, remember, it's an interest rate sensitive theme, and that has done well. That has picked up, and it's still better placed as compared to Nifty as well. So today is the day where interest rate sensitive stocks are doing well, but so much of macro data. And remember, today macro data will continue coming more as well. Markets are remaining volatile. Nifty Bank's setup is much better than Nifty going ahead. But if you look at much more details about it, I would like to show the SMIDs, they are doing well. The 3:2 ratio is there in favor of bulls, and that is showing a good strength as well. So overall, the market, that is doing well. RBI MPC, the rates are remain unchanged. The stance is neutral, but of course, the tone is developing a little bit on the hawkish side. Apart from this, also the interest rate sensitives are rallying. Realty, PSU Bank, all of them doing well in trade. Apart from that, slight selling coming in metal, telecom and the IT names, but nothing much to be concerned about. All of these, the sectoral indices falling almost 1% but rupee is strengthening after the FPI tax relief announcement. So that is one of the best positive takeaways for the day today as of now. And on the other hand, if you look at the yields, those yields have also actually, kind of cooled off as well. FinMin has announced the FPI non-resident benefits as well, and this is what the overall view is coming in. But nevertheless, a lot of other ideas are also coming up. A US non-farm payroll data is coming tonight. That'll be pretty much interesting to watch out for. And at 4 p.m. today, India's GDP data also comes out. So yes, the markets might remain in a range-bound move, but we'll be expecting definitely, what these important macro data comes in. But nothing much to actually talk about, especially the geopolitical tensions are still a stalemate as well. So yes, macro data heavy moves, but nothing much on the indices. Action is on the small caps and mid caps.
Absolutely, that's where the action is. Let's pull up the mid cap and the small cap index in today's charts and see what's happening on that front. And I'll just look at the contributors of Nifty 50 post that. There you go. You saw that dip. I mean, it's been absolutely volatile. Marginal gains of around 0.2% coming in there on the 250 as well. Let's also see what's happening in terms of the Nifty 50 contributors. HDFC Bank, Bharti Airtel, Hindalco, Tata Steel. Wipro was one of the contributors there when we started off with trade, but that has turned as well. It's mainly, the metal pack which is contributing to the cuts. You have HDFC Bank from the private banking space. It's interesting to see that one. Versus ICICI Bank, Bajaj Finance and Axis Bank, which is providing that kind of support as well. So that's what the breadth is looking like. But let's look at the watch list. Bajaj Finance, it snapped a 5-day losing streak. Does that make it to be a stock of the day or not is the question we have today. HDFC Life, 7-day losing streak is what that counter strike. Morgan Stanley is overweight when you talk about Titan. Hindalco looking at 1,000 crore revenue from Eternia, but the street is not seeming to be happy with that news, and that stock is under pressure. A block deal is what we've seen in terms of Adani Enterprises. I think the buyers is going to be an interesting one to watch out for as to, funds that have looked at entering it, and likewise for Adani Energy as well. Paras Defense, lately you've been seeing a lot of order inflows that are coming in for a Paras Defense. In fact, we have been knowing about a drone contract that could be one of the largest in terms of this year for all of these companies, so they could be beneficiaries. Jyoti CNC buzzing on the back of volumes. Hinzink, a 2% OFS is being considered. PNB Gilts, no LTCG for FPIs on GSEX becomes a positive for a PNB Gilts. So that stock is also buzzing in trade as we speak. Z Entertainment, again, volumes buzzing. Tata Tele, you have Tata Sons, which is infused funds. Schneider Electric, that has broken a 5-day losing streak. But, we spoke to our expert, and our expert was of the opinion that that's not a stock that could be on anyone's radar, at least on the charts. Wipro, it's the record date for the buyback, and hence you're seeing that kind of volatility. And BHEL, a 21,000 crore order is what the counter has got. So these are the stocks that we're watching out for in terms of trade today. But over to you, Sharad, to take the rapid fire with Akshay Bhagwat of JN Financial.
Thanks a lot, Hiral, for that. Akshay, it's always a pleasure to have you. Good afternoon. And we'll start our rapid fire segment right now, and we'll talk about Hindalco. Interesting news coming, 1,000 crore revenue coming from Eternia, but wanted to take your views at least on the positional setup for the stock.
Good afternoon, Sharad. So positional setup is overbought, hence we are seeing some bit of profit taking. So slight downside till 1075 is likely. Longer term is still positive, technical structure is still positive.
Yes, another stock, BHEL, a very large order announcement coming in from the company. Of course, there was a little bit of volatility in this counter last month, but how do you see this counter playing out right now? Anything on the charts?
So short term, we are near a support zone, 380, 385 support zone, and a pullback or a recovery is again likely from these levels.
Next stock is Wipro. Very volatile the IT entire setup was, and now a little bit of selling pressure also coming in, some adverse news flows coming up. Do you think there's more areas or chance to fall in this stock?
It's range bound. Today's downside is primarily because of the buyback, and I think it should settle down somewhere around 190.
Right. Next stock, Titan. That's on focus. Management commentary was also there, and largely it seemed neutral. That's what the street was looking at. But anything over here, it has been it has seen a good sell-off from its highs level as well.
Yeah, but yesterday there was good buying. I think 4200 is a good support, and we can see buying getting back into this counter around 4200 for targets of 4400.
Right. And Akshay, the next stock is Delivery. Just wanted to get your views on this stock as well. Some volume moves were there. Will it still remain in that consolidation phase, or are you seeing any kind of a breakout or breakdown?
So it's neutral right now. 440 and 460 is the range. It will continue to trade in this range. So there is no breakout inside on this.
Right, that's pretty interesting. That's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
I'm going to see whether it's going to be stocks that are trending on Google or what the RBI has done that is trending on Google. Let's see in terms of individual names as well. Rajesh Exports and IFCI, there are only 2 stocks that are trending on Google. So that is telling you what the street is actually searching for, because initially our data was indicating on Google Trends as well that the searches with regards to RBI decision was something which was trending versus the inflation. So people were not really concerned to that extent with what's happening to inflation versus when that was the scenario probably a couple of weeks ago. But it's just 2 counters. Rajesh Exports, for obvious reasons, the stock is absolutely trading flat. IFCI is another one which you're looking at. I don't know whether to take any of these names as well, but let's actually look at IFCI. Anything that you like on this one?
So technically, IFCI is strong. 3 days of consecutive one-way rally backed by strong volumes. So clearly buying intent is seen on charts. 75 is the short-term trading support, and one can continue to hold or buy for potential short-term targets till 90.
So that's with regards to where IFCI goes. Thank you, Akshay, for joining in. Always a pleasure to speak to you as well. One of the other counters that we've been talking about is a PNB Gilts as well on the back of the FPI relief that has come in, and as we know, that company becomes a beneficiary. It has cooled off from the day's highest levels, 4.5% down uptick coming in there. Let's actually first go across to Narendra Solanki, I beg your pardon, Head Fundamental Research from Anand Rathi. Narendra, welcome to the show. My question to you is with regards to where PNB Gilts is concerned. What would you advise investors to do basis the RBI announcement that has come in, or the government and the RBI have made a joint announcement when you talk about the relief that is coming in for the FIs? How big a beneficiary would a PNB Gilts be, number 1? And 2, at current levels, would you say it will be an interesting buy?
Yeah, good afternoon. Yeah, first of all, disclaimer, we do not have any active recommendation and coverage on PNB Gilts. Now, coming to the RBI announcement, it is definitely a positive, sentimentally positive step, especially for the fixed income markets, and it has potential to increase the inflows, especially from the FIs in our long-term GSEC market. Now, coming to the PNB Gilts, it generally acts as a mediator and enabling the buying selling of the GSECs. So if the FI flows improves because of this announcement, then I think there is a potential of its revenue increasing in terms of increased turnover. Hence, the company is one of the beneficiaries of the announcement if the FI inflows potentially increase from the current level.
So that's with regards to PNB Gilts. Stay with us. In fact, as we know that the government is rolling out a big reform push to deepen India's bond market making, sovereign debt far more attractive for foreign investors is what you're seeing. Let me head across to my colleague Shrimi, who's getting us all the details. Shrimi, first step, congratulations on that story break as well that you gave us yesterday in terms of the announcements that were expected. If you could just take us through all the announcements that have come in.
Well, absolutely. The government has announced a sweeping set of reforms aiming at making India a more attractive destination for global capital, with the biggest takeaways being a complete tax exemption for foreign investors on income and gains from the government securities. Effective from April 1st, 2026, foreign portfolio investors will no longer paying the 12.5% long-term capital gains tax on the government securities. The government has also scrapped the 20% withholding tax on interest income from these bonds. Now, in effect, returns from eligible Indian government securities will become absolutely tax-free for foreign investors. So that's one. Further, the government has also, under FEMA rules, eased investment rules for persons residents outside India, which is PROIs, to invest in equities via the portfolio investment scheme. Now, while the investment limit for an individual PROIs in a listed companies has been increased to 10% from existing 5%. The combined limit for all individual PROIs has been raised sharply to 24% from existing 10%. On the debt market side also, the government has widened fully accessible routes, by including 15-year, 30-year, 40-year government securities as well as sovereign green bonds. It has also removed several restrictions, that foreign investor had long sought to be eased, including the short-term investment limits, the concentration limits and the security-wise caps in the government securities. While these restrictions have been lifted, the overall FPI's investment cap, and that's very important, remain unchanged at 6% for central government securities and 2% for state government securities. The government has also merged the existing general and long-term investment categories for FPIs in government securities, simplifying, of course, the overall framework. So taken together, the measures mark one of the most significant liberalization step for foreign investors in recent years, and that's what Finance Ministry highlighting, signaling the government intent to deepen, India's bond market, improving ease of sentiments, and of course, strengthening the India's position in the global capital markets. But we need to see the revenue impact as well. So we are waiting for more information, and let's see how this will unfold.
Thanks a lot, Shrimi, for that, and we'll keep you updated on this important announcement coming in from the government. But moving on, another stock in focus is Hindalco. We had mentioned earlier about its company Eternia. Now, this is an arm of the company itself, and they have given a revenue target. Parth, could you just decode what's happening here?
Sure. So Eternia is a brand by Hindalco in which they offer premium, in which they try to target the premium aluminium windows. So what has happened is they have launched a new flagship center in New Delhi, and by this they are trying to expand this segment. Eternia has already delivered around a 65% CAGR for Hindalco in the last 3 years, and now they are targeting a revenue of 1,000 crores by FY29. Now this is interesting because India's windows market is valued at around 40,000 crores currently, and it is kind of fragmented right now. So Hindalco is trying to capture the majority of the market share in the India's windows market. They are targeting the premium side of the windows market, which is growing at a CAGR of 15% right now, and this move will strengthen Hindalco's downstream play from their currently heavily focused commodity aluminium business.
Thanks a lot, Parth, for that. So minor, you could say, an announcement coming in, but just wanted to understand the fundamental triggers for Hindalco. Narendra, just wanted to take your views, because one overhang of Oswego plant restarting earlier is also something which the street liked earlier, through 3 weeks ago. How do you see Hindalco going ahead?
Yeah, definitely. We have a hold rating on the stock, as we see that the momentum would be momentum shifting from Novelis to the domestic operations, where we would be seeing the scale up in the operations, and we also have already factored, and the markets have already factored in the improvement in the metal prices and the kind of rally we have seen in the performance of the stock. I think we might see some consolidation in the near to medium term. And the kind of rally which we have seen, I think rally would be more into a consolidation mode. Hence, we have a hold rating on the stock.
There's a hold rating coming in for Hindalco, but another stock which should be in your radar is BHEL. A 21,000 crore order coming in. This is a quite large order. So decode this, we are of course joined in by Shivam. Shivam, make us understand how big this order is and what's the order book status looking like?
Yes, BHEL has won an order of around 21,000 crore, and this order is from Meja Urja Nigam Private Limited, which is a joint venture between NTPC and Uttar Pradesh Rajya Vidyut Utpadan Nigam Limited. Now this order is for EPC contract, and this is for 3 supercritical thermal power plants, and this order timeline is to be executed within 70 months, and this is a second order win for the company, as yesterday also BHEL has signed a contract with Dangote Petroleum Refinery and Petrochemicals for supply of 8 gas turbines, which is worth around 2,000 to 2,500 crores. So this is a major order win for the company.
Thanks a lot, Shivam, for that. But over to you, Hiral.
So much, Jarat, for that. In fact, interesting moves when you're seeing in terms of BHEL, a lot of positivity there as well. Narendra, your views when it comes to BHEL, the order itself is very large. But if you have to look at valuations, at execution, a good buy at current levels?
Yeah, again, a disclaimer, we do not have any recommendation or coverage on the stock. But yeah, if you see the recent order wins and the kind of traction the company is getting, I think from both from the power sector perspective and from the Vande Bharat sleeper trains orders also. So I think the order wins are great, and now the market would be eyeing how the execution is pans out. So that would be the critical thing to watch out for. I think as far as valuations are concerned, I think most of the most of the improvement in the business is priced in, and I think now the execution would play a critical role going ahead.
That's the level coming in right now. BHEL, of course, from the day's high level, little bit of correction also coming in, almost flattish levels. But another stock in focus is Titan. They had done an analyst meet, and interesting takeaways are there. And to decode that, we are joined in by Mahima. Hi, Mahima. What's new in this analyst meet of Titan?
So, of course, the analyst meet happened yesterday, but a lot of the presentation, of course, came after market hours. And I think the key takeaway was that the revenue and EBIT growth up till FY30, they're expecting that to be at 20% on such a high base. Plus, they're expecting 16% EBIT CAGR. They're expecting market share gains to reach to 11% versus that of an 8.5% now. They're expecting a revamp and increase in retail stores, 60 stores of Tanishq and Carrot Lane combined together. Plus, they plan to add around 1,400 stores of Titan plus Carrot Lane combined together till FY30. Carrot Lane revenue is expected to grow at a CAGR of 23%. The mass also by calendar year 29, they're expecting a 2 times revenue growth. And overall, they aspire to see a 20% CAGR in watch business and eyewear business. They're expecting a 22% top line CAGR by FY30 and an EBIT CAGR of 25%. But of course, the key underline being that the gold prices don't remain this high and volatile. They've said that this is something that they'll be watching out for in terms of macro factors.
Thanks a lot, Mahima, for that. Interesting space. She tracks for the consumption and the jewelry space. So we'll give you more updates on that and the industry as it comes. Over to you, Hiral.
Okay, so that's with regards to Titan. Narendra, any view when it comes to Titan?
See, right now, no view on the stock, but yeah, both the results as well as yesterday's updates were very encouraging for the company and the businesses, wherein they are targeting their revenue to grow twice, which means a 20% CAGR growth rate. And the store expansion is also very aggressive from 800 to 1400. So if the company achieves these targets, then I think the returns for the shareholders would be very decent. Going ahead in the medium to long term.
Okay, so that's Titan. Moving on, Indigo has temporarily suspended flights to 6 international destinations as a part of the network optimization. And they've cited softer seasonal demand and higher costs. Services to Langkawi, Krabi, Ho Chi Minh City, Hong Kong, Shanghai from July 1 and some of the other regions from 3rd of July will be paused till the 30th of September. My colleague Danish with us to share more details. Danish, what are you picking up? The stock is down nearly little over %.
Indigo has announced temporary suspension of operations to 6 international destinations, and most of these are in Southeast Asia. From the 1st of July, flights to and from Langkawi, Krabi, Ho Chi Minh, Hong Kong and Shanghai will be suspended, and from the 3rd of July, flights to and from Siem Reap will be suspended, and this will happen till the 30th of September. And Indigo has also said that in the coming few weeks, if the external working environment improves, then the airline will restart flights to these destinations much sooner than it is planned. Besides this, the airline has assured that despite the cancellation to these 6 international destinations, the weekly international departures will remain to be over 1800 weekly flights. And why Indigo is doing this, one of the reasons is the impact of the West Asia crisis. And besides this, the upcoming few months are also considered as a lean period for the aviation industry, and hence this step has been taken by the airline. And the announcement of cancellation or rather suspension of these flights to these 6 destinations is coming a day after the airline had announced cancellation of operations to and from Manchester.
Thanks a lot, Danish, for that. Narendra, just wanted to get your views on Interglobe Aviation. The stock seems to be, after this correction coming in, it is there in a consolidation phase. But as we are going towards the next quarter, that seems to be like the road is going to get a little bit tougher for this counter, isn't it?
Yeah, definitely. In short term, things are volatile, both because of because of heightened ETF prices overall. But if you see the long-term story that remains intact, the international expansion is on the cards. The domestic market share, which the Indigo is dominating at around 65%, which we see it would continue to do well going ahead also. So medium to long term, the investors, those who have a time horizon of more than 1 year, can continue to remain invested. We also have a buy rating and positive outlook for the long term. But the short term and near term challenges and volatilities would continue to remain for at least 1 or 2 quarters. And beyond that, I think performance should start improving for the company.
All right. Thanks a lot for that, Narendra. And we are running out of time. That's all, folks, for the show. From me, Hiral, and the entire team which has put together Trending Stocks, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to
Hello and welcome to the special show that you're watching on NDTV Profit. India is making a strong pitch for global debt flows to come into India. By scrapping the taxes on foreign investors, government bond investments, the centre is really aiming to make Indian G-Secs more competitive, attractive as well as liquid in global portfolios. Meanwhile, the government has also opened the doors wider for the foreign investors, easing the investment limits and expanding the access routes. The move is designed to really improve the market depth, encourage the long-term flows and broaden the participation in India's bond market. To discuss more, we have a whole host of investors as well as experts really joining us on the show. But let's first hear out the RBI governor on this particular decision on slashing the FPI tax on bonds. Let's listen in.
We are expanding the universe of specified securities by including all new issuances of 15, 30 and 40-year tenor G-Secs. Till now, only securities, government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing.
All right, so it's a big reform coming in the taxation on the bond market. Government is rolling out this big reform push to really deepen the Indian bond market, making it much more robust and with larger participation, especially from the dollar economy, making sovereign debt far more attractive for the foreign investors. And this sweeping set of tax changes, FIIs, will now enjoy zero tax on both the interest as well as the capital gains from G-Secs. Let's take it across to my colleague Shrimi, who has been really focusing on this particular development very, very closely, tracking it there, and breaks down what this means for the flows and yields in the rupee movement going forward. Shrimi, tell us.
Well, absolutely. The government has announced a sweeping set of reforms aiming at making India a more attractive destination for global capital, with the biggest takeaways being a complete tax exemption for foreign investors on income and gains from the government securities. Effective from April 1st, 2026, foreign portfolio investors will no longer paying the 12.5% long-term capital gains tax on the government securities. The government has also scrapped the 20% withholding tax on interest income from these bonds. Now, in effect, returns from eligible Indian government securities will become absolutely tax-free for foreign investors. So that's one. Further, the government has also, under FEMA rules, eased investment rules for persons residents outside India, which is PROIs, to invest in equities via the portfolio investment scheme. Now, while the investment limit for an individual PROIs in a listed companies has been increased to 10% from existing 5%. The combined limit for all individual PROIs has been raised sharply to 24% from existing 10%. On the debt market side also, the government has widened fully accessible routes, by including 15-year, 30-year, 40-year government securities, as well as sovereign green bonds. It has also removed several restrictions that foreign investor had long sought to be eased, including the short-term investment limits, the concentration limits and the security-wise caps in the government securities. While these restrictions have been lifted the overall FPI's investment cap, and that's very important, remain unchanged at 6% for central government securities and 2% for state government securities. The government has also merged the existing general and long-term investment categories for FPIs in government securities, simplifying, of course, the overall framework. So taken together, the measures mark one of the most significant liberalization steps for foreign investors in recent years, and that's what Finance Ministry highlighting, signaling the government intent to deepen, India's bond market, improving ease of sentiments, and of course strengthening the India's position in the global capital markets. But we need to see the revenue impact as well. So we are waiting for more information, and let's see how this will unfold.
All right, Shrimi, thanks so much for breaking it down for us. It's a big reform push for foreign investors to really be keen and attracted towards Indian bond market. Neeraj Gambhir, the Executive Director, Axis Bank, Dinesh Kanabar, CEO of Dhruva Advisors, Deven Choksi, MD at Dr. Choksi FinServ, join in now. Thank you so much, gentlemen, for joining in. Deven Choksi, my first question, before getting into the nitty-gritties of what this particular reform push really means, how much of a halo effect will this particular reform and lowering of taxation really have on the FII inflows on the equity market, and what is required there?
Yeah, good afternoon, Nisha. Well, I believe that I think the direct impact is not likely to be felt, but I think somewhere indirect impact will have to be analyzed. Assuming that RBI is not intervening while the inflow of dollar is taking place under these particular assumptions, of $30 to $40 billion inflow of money which could possibly come due to this particular taxation changes. Assuming that I think that money is entering into the system. So every $10 billion has a potential to basically give the rupee appreciation of between 25 bips to 40 bips. Now assume that I think it is $40 billion worth of inflow. Theoretically, I think we are talking about somewhere around close to 1.4, 1.5% kind of an appreciation, or 1.4, 1.5% appreciation, I think, which is basically theoretically possible, should RBI not intervene into this. Now, if that is a situation which is envisaged, and that is dependent on RBI's policy, of course, then that answer to your question would be that yes, some of the foreign investors who have been taking the money out, I think almost 2.5 lakh crore worth of money has been moved out. I think they may probably stop that particular route, and that is where I think you may see the stability come returning back of capital happens in the equity market. So yes, I think there is no direct answer to it, but I think it is subjective answer to what RBI takes hereafter. But the potential remains high as far as I think the foreign investors are concerned to bring the equity money back into the country.
Right, Deven, very well put. It will have some impact when it comes to the minds of the foreign investors in terms of India as an attractive destination, but whether it will solve the problem of FII outflows in the equity space, that needs to be seen. And Dinesh Kanabar, what does this really reform mean for the foreign investors when we position India and India's bonds?
So to my knowledge, Anisha, there have been multiple representations, at least over the last 3 years, which were made to the government, to the Ministry of Finance, to say that there is a deep interest that exists, whether it is sovereign wealth funds, whether it is FPIs, who would like to invest in long-term government bonds. That market exists. It's a fairly robust market. And the question was that the taxation of the interest at 20%, the capital gains, of course, are de minimis. It's really the interest which one is looking at here. The question was whether that 20% withholding tax in India is something which would deter the people from investing. So let me give you a concrete example. Let's assume that the rate of tax on GSEC is 6%. And if you have a 20% tax, then you are effectively looking at 4.8%. Now, when you look at that, most of these investors are not taxed in their home country. Therefore, they have no ability to take a credit for this in the home country. So this amount becomes a dead loss. Now, many of these come from tax treaty jurisdiction, where the rate of tax does go down from 20% to say 10% or 15%. But that, as you know, is a big challenge. How will you monitor? How will the custodian of the security monitor the eligibility to treaty? tax residence certificate. So again, we are getting into a number of things. And therefore, a representation was made originally to say that either you make the tax nil, or even if you don't, provide a fixed rate of tax so one is not subjected to vagaries of the tax treaty, etc. And I'm really glad that the government has heard these recommendations. We have a nil tax. What that effectively means is that whatever is the rate of interest paid by the government is the effective income of the investors. As the RBI governor rightly mentioned, we are increasing the tenure. Therefore, the money which is coming in is long-term money, stable money, which India would like to have, and therefore becomes fairly attractive. Again, because of nil taxation, there are no compliance issues, no need to file tax returns, no treaties, no nothing. Very, very welcome move.
Right, Dinesh, many aspects that you touched upon, and yes, a lot to discuss on that. But Neeraj Gambhir, what does this really mean for rupee in particular, and therefore the overall economic impact in terms of our forex reserves? And also the momentum has been seen from all the quarters of the government in making the debt market very robust in these trying times. Would you agree?
No, certainly. I mean, I think for the last, almost 2 years, we've been seeing very weak or negative equity flows, in the market. Also seen net FDI turning steadily lower and lower and now close to zero. So equity flows have been weak. So it's the time for us to actually go for debt flows. Globally, fixed income markets are doing very well. Credit spreads are at their tightest levels. There is a lot of liquidity in the market. You've seen how much money big corporations in US are able to raise for their for their AI investments. So these are clearly very, very welcome moves. As Mr. Kanabar explained, that the total amount of impact in terms of earning for the foreign investor goes up by roughly 50-60 basis points to almost 120 basis points. So the spread that now government bonds offer over, let's say, US treasuries, because there is no tax impact, almost becomes like 150 basis points. So, 250 basis points. So I feel that this is a good incentive for the investors to start investing in domestic market. India is one of those few markets where you have long-term bonds, where you have bonds going all the way up to 40 years. Not many economies of the size of India offer that kind of duration, which is very, very attractive to insurance companies. So I feel that you will see some real long-term flows coming in as a result of this. I would also like to add that it's not just these set of moves that you have described which will have the impact on the market. There is parallelly, Reserve Bank has announced a whole bunch of measures with regard to the hedging cost for ECBs as well as hedging cost for the FCNRB deposits. I think those will have a much bigger impact on the capital flows into the country, particularly the debt flows into the country. And with these kind of flows coming in over the next 4 months, I do expect the rupee to start sort of, it'll have a lot of calming effect on the currency market. I do expect rupee to start having less volatility and maybe less need of intervention by Reserve Bank at the moment to make sure that it doesn't depreciate too much. And once the flows actually start coming in, it's possible that rupee may actually appreciate. Right. Of course, it depends upon what happens to the war and what happens to the crude oil prices.
That's right. Neeraj, you touched upon a very important point on the rupee stabilization and probably certain appreciation as well. Devin, it has been a chicken and egg kind of a story where FII outflows means rupee depreciating further, and rupee depreciating further also gives a very, jittery economic picture about India to the foreign investors. How much do you think rupee stabilizing and also appreciating will really impact the equity market momentum and therefore the foreign investor view on overall India foreign investments?
So here I think the two parts of foreign investment. One, of course, I think the underlying equity market in which they invest. And the second part is derivative market through which they are operating. A significantly large amount of volume is happening on the later side than in the underlying equity side. If underlying equity is the one where probably I think they're reducing their holding because they want to shift the portfolio out to some other parts of the world, given the kind of newer preferences of industries that they find in Taiwan, South Korea, or even for that matter Japan, in which I think they basically want to invest into new age universities, including semiconductors, AI at the same time, and the data centers. That's the reason for which underlying equity is being swapped into those markets. But more importantly, I think what could possibly or what is going unnoticed in the marketplace today is a significantly large amount of operations carried out into the derivative market, which is the resultant cause of, I think, taking out the capital out of the markets. I think that's where probably I think we are required to take little more precautions. Maybe I think the plot is lost at this point of time, but I think some more precautions are required to be taken. Should that happen, my understanding is that Indian market would start attracting flows back, because underlying growth assumption in the business, I think, remains absolutely intact. Valuations, at least in the frontline stocks, they remain quite comfortable today. And maybe if the kind of 15% growth that we are assuming in a normal situation, maybe I think we would be seeing the flow returning back into the market. That's what my take would be.
Right. So, Devin, very important, because this is a big reform and it sends out a message to the investor community overseas as well. The dollar community, which we are trying to attract. Dinesh Kanabar, does it address the biggest pain point of uncertainty on taxation and also ease on even the interest income? All that is giving ease as well as higher returns, which is really addressing the two pain points that the investors have, especially in the debt market in India.
Very well said, Anisha. I think more than the tax, it's really the compliance burden and the uncertainty which creates a lot of complication. Yes. So, for example, assuming you were investing from a country with which India had a tax treaty and your rate of tax had come down from 20 to 10% or whatever be in that particular treaty, to get that treaty eligibility is a big pain. Will it be at a withholding stage? Is tax residence certificate sufficient? How will you prove your eligibility? Will you pay tax and withholding and then claim a refund? All of those becomes very big challenge. The very fact that you have to file a tax return in India, where you have no income other than interest income on government security, becomes a point where investors become very cagey as to whether or not they should invest. So apart from the fact that the yield itself has improved significantly, the fact that there is zero compliance burden, because now I don't need to really file a tax return at all. There is no such thing. I don't need to meet a custodian. I don't need a chartered accountant in India. I need nobody to give me advice. I'm simply sanguine that the interest which I have got is my income. Nothing further to be done. And I do wish that even as we look at many of the other things on equity, it's a different subject, of course, altogether, that we are able to provide better certainty and ease of compliance to investors as we are doing for government securities.
All right. So even, using DTAA, the taxation treaties, as well as also routing through safe havens, all that cumbersome structuring, all that can be done away with this clarity coming in. Very well put, Dinesh Kanabar. Deven Choksi, what is required for the equity side to really become as robust and to also attract investors on that side? How grave is the situation, and what would be your suggestions at this point?
Well, I think the majority of it is basically being spelled out. When you look at Indian equity market and the taxation, Dinesh Bhai just alluded to this particular point. And in the debt market, I think equity side, we are charging, significantly different taxes. I think the STTs, the LTCG, the STCG. And as a result of which, I think it increases higher amount of burden. Whereas I think those horizons like Singapore or UAE for that matter, I think over there, these kind of taxes are not levied. In fact, I think STT is only unique to India. So from that particular perspective, yes, I think we are not giving a right signal to the outside world, for sure. We definitely have compulsion to collect money because of, running the economy. But at the same time, I think the hardship which it causes to the investors is actually putting them off. And that is where they're swinging very quickly this money out of the country and put somewhere else where they see the better opportunities. In my viewpoint, I think these procedural issues, if they can be addressed, the rest of the fundamentals are definitely remaining in place. Today, Nifty 50 at a valuation at which it is quoting Probably historically, I think it has found buyers at such valuations. And I am not having doubt in my mind that at this valuation, I think it attracts fairly well, provided some of the hassles go away. And I think the opportunity once again resurface for investors to come back.
Right, more opportunity for investors to come back to India, and of course, hopefully, rupee stability will impact. Neeraj Gambhir, very quickly, the other measures which are also going to impact the rupee movement, and what's the in-house call after this particular announcement on the rupee appreciation and the levels that you're looking at, very quickly?
We don't have a house call on rupee appreciation because I think this is a short-term measure. It will have a short-term impact.
Right.
And then over a period of time, we will default back to the structural issue that we have, which is basically we have a current account deficit, which is going to become bigger because of crude oil prices. And we don't have, long-term flows like FDI at this point in time, net FDI flows. So we don't have an appreciation call. I think we could see some short-term appreciation, but once the flows are done with, then we could sort of move back to a depreciating territory. But hopefully this time around with lesser impact and much more milder depreciation than what we've seen in the past. Typically, rupee depreciates about 3 to 4% in a year, right? But that's adjusting for the inflation differential that we have between us and, let's say, US. Right now, the inflation differential is going to open up again. So maybe the pressure for depreciation will be there, but maybe not as much.
Neeraj, stay on. Piyush, my colleague who was right there at the RBI's press conference today, is joining in. Piyush, what are the specific sharp details on how rupee can really be impacted with today's announcements?
Nisha, the whole idea behind the measures that the RBI has launched is to attract dollar inflows and of course help rupee. The RBI has proposed that it will allow FPIs to now invest in 15-year, 30-year and 40-year GSECs, as against earlier they were only allowed to invest in 10-year GSECs. They have also eased the investment limit, the concentration limits, so that more FPIs can bring in money, and also they have introduced FCNRB deposits. They have said that they will bear the hedging cost for banks if they raise fresh FCNRB deposit. This move was done I think 11 or 13 years back last time. So these are very big major moves. In terms of inflows, yes, the governor did mention that they expect significant amount of dollars and foreign currencies to pour in. Yes. However, he said there is no particular target, and this facility, essentially, all these measures by both government and RBI are aimed towards, bringing in FII and FPI inflows.
All right, Piyush, thank you so much for joining us straight from the Reserve Bank of India headquarters. Neeraj Gambhir, Dinesh Kanabar, Devin Choksi, thank you so much for your expert take on this big set of announcement that has really come in, and more needs to be seen on what happens to attract the equity fund flows as well. That's on our radar, but definitely government has been looking at drawing in the moolah and attracting the dollars. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hello and welcome to NDTV Profit. My name is Varsha. Well, TVS supply chain is in focus. Now this is on the back of company, and that is TVS Supply Chain Solutions and ALA Group have partnered to build aerospace and defense supply chain platform in India. And this JV is actually targeting a cumulative revenues in excess of 2,000 crore by 2031. But to speak more about this and what's the opportunity lying ahead for the company, to tell us more about that, we are here joined by Mr. R. Dinesh, who is Executive Chairman at TVS Supply Chain Solutions, and Mr. Vikas Chadha, who is Global Chief Executive Officer at TVS Supply Chain Solutions. Well, gentlemen, welcome at NDTV Profit. Always pleasure to have you. The JV, which you have done, is this JV your entry, into a structurally high margin business?
Thank you, Varsha. Always a pleasure to meet you. Yes, actually, the way we would look at this joint venture is that we have been quite active in the defense space in supply chain in Europe and UK businesses. But from the aerospace sector, because it requires significant certification and I would call it deep customer relationships, we actually were looking for a right partner. And this partnership with ALA enables us to enter, as you said, not just a margin accretive space, but also a space which has got deep barriers for both entry and therefore deep relationship with the customers.
Right. Mr. Chadha, coming to you on this, you're entering aerospace and defense supply chains. Now, what makes this segment attractive at this point of time, number one? And, how does this JV change your positioning from a traditional logistics to a high-value supply chain player?
Yeah. So first of all, Varsha, thanks for having us here on your show. The JV is entering into aerospace and defense, and this is a very nascent industry right now in India and is expected to grow 2x, 3x of the GDP as we have more offsets coming in and as we have more localized requirements coming in. The government is extremely focused on it. So yes, this is a great time for us to enter into this particular sector. And we are very confident that we will It will be margin accretive for us, and this will have a tremendous growth potential. As far as our overall portfolio is concerned, we are a supply chain end-to-end solutions provider and a one-stop shop for all the different sectors that we serve today. Aerospace and defense is not going to be any different, and we aim to serve all the Indian majors who are setting up defense setups here, all the global OEMs here, by supplying to them the parts and the knitting, etc., and all the capabilities, sub-assembly capability that is required.
Right. And, Mr. Dinesh, what exactly does ALA bring to the table, in terms of technology and global relationships? I mean, how will responsibilities be divided between TVS supply chain and ALA in this JV?
It's a very good question. So if you look at ALA, actually it has been started by someone 35 years ago, Vittorio Jenna, and he's someone, along with his team, who has built very deep customer relationships with almost all the aerospace manufacturers, starting with Dassault to Leonardo to others, which I think we spoke about as potential customers for us. So what ALA has done is not just build the deep relationships by just working with them. The sector requires, as you said, technological visibility right across the supply chain, usage of the parts in the right manner, making sure there is no, I would call it defects or any quality issues when it is actually supplied to the customer. So because they have been working with these customers, their technology speaks with the technology of the customers, and it is being integrated. So between TVS supply chains infrastructure, the network we have, and I would call it the capability we have in the supply chain space in India, I think this brings together the best of both worlds, if I can say that, because ALA has all the relationship with the manufacturers and also the vendors, if I can say that, of the components which we supply. So between these two, I think this gives us a compelling ability to work with the global customers and the Indian customers, which Vikas was referring to.
Right. And, you also mentioned, Mr. Chadha, also expanding to, international markets. Now, which geographies are priorities after India, and, can this JV become a global platform over time?
So I'll answer it in two parts. First, TVS Supply Chain Solutions. As such, we are a global player. 30% of our turnover comes from India, and rest of it is all global. So we have been present in various different sectors in UK, Spain, US, some of the other large markets. As far as the JV is concerned, this JV is primarily the focus is India at this particular moment, because the opportunity that India is going to offer in the next 5 years is going to be absolutely tremendous. So we want to capitalize on this particular opportunity. Yes, going along as we mature, as we address the customer needs in India, if there are rub-off requirements that are there in international markets, we may explore. But the immediate near future of this joint venture is purely to serve the Indian customer.
Right. Well, this was TVS Supply Chain talking about the JV, which they have done when it comes to aerospace and defense. There you go. The stock is up almost 6% in trade. Well, welcome to Small Cap Buzzers. Now we are gonna, talk about what we're gonna cover in this show. First, we're gonna talk about, Ravindra Energy, where they have launched 198 crore right issue at 101 per share, and they're also seeing profit booking today, actually, because this news of right issue is coming from yesterday, but today we are seeing the profit booking when it comes to this counter. We are also going to talk about Panacea Biotech. Now, if you see, the stock is buzzing in trade because OHM Investment, which is backed by Amal Parekh, has bought 3.14 lakh shares at rupees 493 per share. So stock is trading at 14 times of its 30-day volumes. Lot of things, going when it comes to Panacea Biotech. We'll also talk about that, and we'll speak to our fundamental analyst on this. We are going to cover the management, which is Blue Cloud Tech Solutions. Now, if you see, they've crossed 1,000 crores of revenue milestone in FY26, and if you see the profit after tax, it has grew 37% to 60.5 crore. these are all the stocks and management which we are going to cover in today's small cap buzzers. But moving on, let's see which are the small cap stocks, buzzing in trade. Let's figure it out. You have Ramco Systems, which is buzzing. This is on the back of volumes, though. Volumes are at 20 times of its 30-day average. There you go. The stock is up 12%. Even Jindal Poly Investment is up on the back of volumes, 25 times volumes of its 30-day average. The stock is up almost 12.4% in trade. You have Man Industries also buzzing on the back of volumes. Volumes are trading at 4 times. The stock is up almost 8%. Bhagiriya Industries and Jindal Photo are also buzzing in trade. Even Jindal Photo, if you see, huge volumes at 22 times. Bhagiriya is up almost 11%. Jindal Photo is up almost 10%. On the losers side, though, you have Jagran Prakashan, Ravindra Energy, as I was speaking about, and GNG Electronics, which are sulking in trade. But it's time to invite our fundamental guest for the show. We have Gaurang Shah, who's Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. Always pleasure to have you. We were just speaking to the management of TVS Supply Chains, on the JV that they did when it comes to aerospace and defense. Just wanted to understand if you cover this stock and what are your views when it comes to this counter?
Hi, Varsha. Thank you so much for having me on your show this afternoon. Good afternoon to all your viewers of NDTV Profit and to you. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Varsha, are a part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share similar investment ideas with our clients. They might have their investment interests. So, Varsha, TVS Solution, we covered this particular company when the IPO was there way back in August of 2023. And if my memory serves me right, the IPO band was 187 to 197. And the IPO was allotted, shares were allotted at a higher price, and that is at 197. And again, if I remember well, since the time it got listed and the performance, more or less it has been below the IPO price because of various reasons, of course. So we had given a subscribe recommendation to the IPO at that point of time. As of today, as we speak, stock is trading close to about 130 on fallback of the interaction and the verbatim that is shared by the management with respect to supply side JV with ALA for defense, aerospace, basically. And as the management was answering your questions, this is a very specialized segment of logistic business. You need to have proper technology and storages in place and transportation in place. Along with that, defense as a sector, Varsha, is going to grow for quite a few years because of the kind of capability and capacity and opportunity more so, Varsha, in terms of domestic supply and more importantly, exports. So since the IPO was there in August of 2023 at that particular band and the stock is trading at current levels, if I have to make a base of that IPO note and take the advantage of the discount that is available, well, you can definitely invest from a long-term point of view. Though we don't have a standalone recommendation, I'm keeping the IPO note as my base over here. And my sense, Varsha, is that anything to do with defense, if it's a fundamentally strong company, then there are plenty of opportunities for earnings to grow and that to reflect on the stock price.
Right, understood. Well taken that point. But moving on, Blue Cloud Soft Tech is one in a counter which is in focus. This is on the back of Q4 FY26 numbers. Though there was a good uptick in margins, just for the benefit of viewers, if you see margins were at 17% versus 9%, and they've also crossed a milestone of rupees 1,000 crores of revenue in FY26. But to speak on the growth outlook ahead, we are here joined by Chandrasekhar Mudraganam, who is the CEO at Blue Cloud Soft Tech Solutions. Sir, welcome at NDTV Profit. Always pleasure to have you. You've seen a sharp uptick in margin. First, let's talk about that. What were the key drivers and what's the outlook looking like when it comes to the EBITDA margins going forward?
Hi, good afternoon, Varsha. Thank you for having me on the show today, and good afternoon to all your viewers as well. Yes, one is the investment which we have made over the last couple of quarters in these new initiatives, which are now we have crossed the POC stage, and then we are scaling up all our deployments. So that is what is actually driving these the EBITDA figures. And going forward in the next few quarters and in the next financial year also, so that is going to continue on a much bigger scale.
Understood. Sir, for FY27, you had given a guidance of around 3,000 crore. First question, yeah. Are you on track when it comes to this number? And of course, I just want to understand the ballpark range of EBITDA margin you're expecting in FY27 as well.
Yeah, we are on track for FY27, the 3,000 crore is tax. In fact, it is being driven through both scale or whatever projects we have. We are scaling them up, much larger deployments, and also in the inorganic way. So, EBITDA definitely is going to be much better, significantly higher than what we saw in 26. At this point of time, I would like to say that.
Understood. And sir, also you have also given a growth guidance beyond FY27, which is at 25 to 30% from FY27 onwards. Are you being conservative when it comes to this guidance, or because from 1,000 crores to 3,000 crores of journey in a 1 year, and then expecting a 25 to 30% of growth, just wanted to understand why the conservative number post FY27.
Yeah, because then we are expanding our global footprint to emerging markets, specifically in Middle East and Africa. So those projects also will start kicking in, the revenue from those projects also coming in. But then we have a lot of issues between it, because it depends on the infrastructure, it depends on the network, depends on the government policy and all. So that is one of the reasons why we wanted to be a little conservative from 27 onwards. But the way we are progressing, I think we will be much better than what we have projected.
Understood. And also, I just wanted to understand the data center opportunity that you are expecting, and what kind of revenue target that you have or contribution that you're expecting from the data center segment as well.
Yes, as we had earlier said that we are going to deploy almost about $1 billion in the capex over our data centers activity. We have in fact even acquired the land at Orissa, that the first 100 megawatt data center under the PECHI framework will be established. So going forward, these data centers coupled with our telecom initiative, which will be riding on these data centers, all the value-added services from IT space and all which we are rolling out, will start contributing towards significant amount of our revenue going forward.
Right, understood. And sir, lastly, your debtor days, if I'm seeing, they've increased from 112, rather from 76 in FY24 to 112 in FY25, and now at 141. What's the target over here when it comes to the debtor days? When are you expecting this to come down, or what's the ballpark number that you are expecting to reduce it to?
Well, at this point of time, because we are talking about large opportunities spread over different geographies across the world, so that is probably bound to increase further in 27. But then going forward, once the initial investments are committed, and then we are through with the commissioning phase, then I think that it would kind of taper off or start reducing over the years.
Understood. Well, thank you so much, sir, for joining in and having a conversation with us. It was a pleasure having you at NDTV Profit. Thank you so much.
Thank you, Varsha.
Well, Gaurang, you heard the management of Blue Cloud. What's your view when it comes to this counter? Huge growth expected in FY27 over FY26. and post that 25 to 30% of growth is expected. So what will you advise to investors?
Well, first of all, we don't track this particular company on the fundamentals, Varsha. That's a disclosure from my part. But what I heard the management and what the management has said about the growth prospects and the opportunity that lies ahead. So while the order book remains quite strong, the numbers have shown a turnaround for betterment. A couple of things that would be interesting to watch out for is how capable is the company to execute the order book going into the future, translating that into the top line and profitability. And along with that, in terms of securing new orders. So that's going to be a core points to watch out for. Can't make any specific comments since we don't have coverage on Blue Cloud.
Understood. Well, viewers, time for a quick short break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen,
bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business.
Welcome back. You're watching Small Cap Buzzers. Well, it's time to dive into the F&O market setup and the cues shaping in trade today. Let's bring in Sharath for a snapshot for the trade today. Sharath, over to you.
Thanks a lot, Varsha, for that. And markets, of course, are digesting a lot of macro announcements coming in. But one key thing to take from RBI Governor is that his commentary coming on the funding rules, the new rules which comes in from 1st of July. So that is something which has spooked the markets. But nevertheless, HUL, Bajaj Finance, Adani Ports, they are in the green as well. But the sentiment has reversed. Reliance, of course, being a key drag. We have IT companies also where the sell-off has intensified, and also Tata Group stocks, Trent and Tata Steel as well. Overall, the sentiment is muted. Even the metals are dragging the overall sectoral indices as well. Let's talk about the long build-up. And Adani Group of stocks are doing really well in today's trade. We have Adani Energy, that stock is up almost 2.5%, while Kalyan Jewellers is seeing some good volume development happening here as well. Let's look at the short covering candidates, and we also have one more Adani Group stock here. That stock is up 4%. We have seen some good blocks also happening earlier in the day, and Indian Bank also, but not that convincing for a trade. Let's look at the long unwinding, what's happening here. Largely, nothing much to trade over here. NHPC, that's down almost 2.5%. Some reversals are happening post its OFS, while Keynes Tech down just 2%. Let's look at the final one, the short build-up. We have Nalco and Hindustan Zinc, both of these stocks 5% down. I was mentioning you that the metals are seeing some big sell-off happening, and of course dollar is also strengthening globally if you look at them. So definitely there is a basket selling happening in discounters. So these are the stocks which should be in your radar in the F&O space.
Well, thank you so much, Sharath, for all the details. Moving on, let's pull up the chart for Ravindra Energy. Let's see what that stock is doing. The stock is sulking in trade, if I'm not wrong. Yes, there you go. The stock is down in trade. But let's see what are the key reasons why we are seeing the pressure when it comes to Ravindra Energy. And let's bring in Path to give us more details.
Sure. So in Ravindra Energy, the company launched an almost 200 crore rights issue, which was issued at around 101 rupees per share. The record date for the same was around 8th June, and the funds will be used to support their renewables and EV business expansion. The stock was up yesterday, but today we have seen some profit booking. Let's have a look at both of their businesses. So renewable energy business pipeline for the company currently stands at around 486 megawatts, which is majority of the pipeline is backed by long-term power purchase agreements, and it will be reaching around 500 megawatts scale with the solar and the wind power assets coming in as well. Now the second EV business that has been gaining momentum for the company as well, with the company scaling itself through their battery swapping infrastructure which they have been building. They have already started their operations at the India's largest EV swapping station, and this facility is now serving around 160 heavy electric vehicles and over 130 EIM photon electric trucks that are already operational. So this battery as a service model is really good for the company as it reduces the fleet ownership cost. So this is interesting as renewables provide them long-term annuity cash flows, while EV logistics offer them a significant growth opportunity.
Right. Got it. Well, thank you so much, Path, for all the details. Gaurang, a quick view on Ravindra Energy. What is your view when it comes to discounter, and what will you advise to investors?
So, Varsha, while the sector looks extremely promising, my sense is that established players are much better placed to play this theme in terms of power generation. Tata Power, NTPC, JSW Energy, and Torrent Power. Positive on all these companies.
Understood. Well, thank you so much, Gaurang, for joining in and having a conversation with us. Pleasure to have you. Thank you so much. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to Ask Profit Afternoon Edition coming up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vashajani, and over the next half an hour or so, we'll try and solve all those stock-related queries. It's been a truncated morning session, so we will take a lot
that
more.
We did not answer in the
that
morning,
we
right?
didn't. That we did not take a lot of questions, so we will take a lot of those in this session. And if you haven't already, do start sending in those questions as well on the numbers that are flashing on the top of your screen. A very quick check of the markets, because we're testing that 23,300 level again, just a tad above that right now, but we've come off the highs for now. So again, a day which started on a good note and then has seen some volatility at this point of time. The heat map also shows you that perspective as well in terms of individual movers for the Nifty 50 trade. You're seeing that on HUL, Bajaj Finance, as well as something like SBI Life. And Bajaj Finance has come off from its gains as well, up almost 3% at one point of time. Post policy has seen some reduction in share price. Wipro though has also recovered from the day's low, but continues to be down almost 4%. Hindalco and Tata Steel are also some of the names that are under pressure. So is Trent after its bonus issue yesterday as well, and continues to be down almost 2.5%. In terms of the sectoral heat map though, and we've seen the Nifty being largely even Stevens, it's slightly more red in terms of the sectoral heat map as of now. So apart from Nifty Media, which is up 2.5% for the second day in a row, that's led by Z Entertainment as well. The Nifty Metal, IT, as well as energy continues to be down as well. And in terms of the advanced decline ratio, you're seeing that pressure on some of those key indices and key stocks actually in the advanced decline ratio as well. And that it's been a very, very topsy-turvy day. From that midpoint where we met, we bounced back in terms of advances, but now have given up a lot of those gains. So almost 1,500 stocks that are declining in trade today becomes a crucial last 90 minutes, visible in small and mid caps as well. But in terms of, when you pull up the BSE 500 also for individual names as well, before we start taking all your stock related queries, that is visible as well. So let's pull up the BSE 500 also in terms of individual movers today. Network 18, Quest Corp is up 9%, and we've been discussing, that the stock Blue Spring got a 2,000 crore order. Quest Corp owns almost 30 to 40% stake in Blue Spring, and hence we're seeing a reaction on Quest Corp right now. Tata Tele up 5%. Z Entertainment continues to have its bullish momentum for the third consecutive day, while Finolex is also up 3.5%. Hindustan Zinc though is down 6%. A Bloomberg report claiming a OFS by the government is having a pressure on the stock right now, as well as HFCL, which is finally off its steroids and taking a breather right now, down 5% as we speak. But let's also look at Blue Springs also. Let's pull up that counter. Of course, one of the demerged entities out of Quest Corp, which got that order win, and there you go, that 10% move as well. But let's go across and start your stock related queries. Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal is joining in, and we'll also be joined by a fundamental guest very shortly. But Ruchit, very good afternoon to you. Thanks so much for joining in. Let me go across and take the first query on Nazara Tech. Murli from Hyderabad is holding shares at 171 and wants to know a quick view of the stock. Is it a good time to book profits, Ruchit?
Yeah, hi, very good afternoon. Well, I think the short-term trend for the stock still seems sideways. 260 is a very important support for the stock. So till that support is intact, I think he can hold the position since his buying price is quite low from current levels. So keep a stop loss below 260 and continue to hold your long positions.
Right, okay, so that's the view coming on Nazara Tech. The next one that we have is from Roshni, who's writing us from Bengaluru, asking about Hindustan Zinc. She's got around 1,000 odd shares, bought at the levels of 634. Whether to hold, sell, what should be the next course of action according to the chart, Surjit?
Metals as a space seems to be in a short-term corrective phase now. We have already seen a good outperformance from the metals till last week, but this week we can clearly see some selling pressure in many of the metal names. And this correction, what we are witnessing in Hindustan Zinc, has also been supported by higher than average volume. So whenever you see price corrections backed by higher volumes, those tech stocks tend to underperform in the short term. So my advice would be to take an exit from Hindustan Zinc.
Got it. Well, an exit is what Ruchit is recommending on Hindustan Zinc. But, the next query is coming on Sterling and Wilson. Sriram Raghuraman from Chennai is holding 150 shares, bought at 228, and wants a quick view on the stock. Let me welcome in our fundamental guest, Avinash Gorashakkar, the founder and head research at Avinash Mentors Research Services. Avinash, always a pleasure. Thanks so much for joining in. And what would be your view on Sterling and Wilson? It's been largely an underperformer, but some orders from its parent company in the next 3 to 4 years could bolster the stock. Is that your thought process, or would you prefer something else?
No, I think clearly, Puneet, the stock has been an underperformer despite the fact that it operates in the renewable energy space. I think, clearly other players like Wari, or for that reason, Premier Energies, or typically even Alpex Solar, these are companies which have done much better. So my guess is that, rather than holding on to Sterling and Wilson, something like a Premier Energies or maybe an Alpex Solar could be a better choice. My sense is that the next 12 to 18 months is going to be quite good for all these renewable companies, considering the large spike we have seen in crude oil prices and the government's increasing focus on renewable energy. So I think, if the investor wants a better risk reward over the next 12 to 18 months, it's better to, opt for some other companies which I mentioned, because here the earnings traction and the scalability of the business is much better. Sterling Wilson will probably take a longer time to recover. So to that extent, a switch is always advisable.
Yeah, right. So that's the view coming in on Sterling and Wilson. The next one is on Sai Life Sciences. Shanti has got around 48 shares, the IPO price of 549. Wants to know if she can continue to hold this one from a long-term perspective or book profits for now. Avinash, your view on Sai Life Sciences?
No, I think the investor has made a decent amount of money here. My guess is that Mahima, if the investor can hold on for the next 12 to 15 months, the scalability of the business is proven. The promoters have also got the right bandwidth, and I think they are sitting on a reasonably good order book. So 27 should also be a reasonably good year. So probably 20-25% one can book out, and the rest quantity can be held on for the next 12 to 15 months.
Got that view. The next question coming in, and this one is from Puneet Saxena from Ghaziabad on Chennai Petroleum. Now, Ruchit, he wants to know for a period of 1 to 2 months if what could be a target price or a stop loss that you're looking at. Is it a good time to enter the stock now?
Yes, the near-term trend seems positive for the stock. A high top, high bottom structure can continue, can clearly be seen. And the 50 DMA for the stock is around 1040. So on the long positions, if you already have or are making new, then the stop loss should be placed below 1040. And if we take the retracement levels of the recent correction, then possible targets should be around 1320 to 1330 range. So maybe around 1330, 1340, you can take a review again then.
Okay, all right. The next one is on Bajaj Finserv. Lalita from Hyderabad is holding 216 odd shares at the levels of 1740. Wants to know if she can continue to hold or sell this one. On the charts, Ruchit, Bajaj Finserv, should she continue to hold?
Yes, should hold at current levels at least. These are not the levels where one should look to exit because already we have seen a good price-wise correction over last few months. Stock is going through some short-term time-wise correction now, and the downside seems to be very limited, with 1600 being very important support for the stock. So 1600 is the support. Till that is intact, one should continue to hold on. On pullback move, the 200 EMI resistance would be seen around 1900. So if it comes around 1900 going ahead, that should be the level to review it again.
1900 is something to watch out for on Bajaj Finserv is what Ruchit is recommending. So got that view. The next question, coming in, this one's from Satyan, who's a regular viewer, and he wants to know about MPC development, Avinash, because he is currently, in losses for this counter, has been a volatile one. He wants to sell out and probably look at buying SCI. Would you recommend that, Avinash, that particular trade? Is it a good time to look at it?
Yeah, I think if his time frame is next 12 to 15 months, he can definitely think of putting a switch. I think definitely in terms of the risk reward, that would be better. But I think he needs to give some time because my guess is that SCI has also moved up quite well. So unless he gives the next 12 to 18 months, SCI definitely will benefit from the global logistic kind of scenario. And considering the fact that apart from crude, there are many commodities which are shipped by the shipping route. SCI is one of the largest players in this market, and I think going forward, looking at its expansion plans over the next 12 to 18 months, you could expect a much more decent risk reward here.
Okay, the next one is Aster DM. Siddhi Ambre from Mumbai is holding 5,000 shares at the levels of 643. Wants to know the target price on this one for the next 2 to 3 odd months and whether she can continue to hold or sell. Ruchit?
Can hold for potential up move towards 800 kind of levels, whereas support for the stock is at 710. So keeping stop loss below 700 on existing long positions should be a good strategy.
Got that view, Ruchit. But the next question now, and this one's on defense. Our viewer holds BEL at 432, and he wants to know if there is any other defense company, and this is Birandeep Singh, for the next 3 to 5 years that he can buy into and hold. Avinash, would you recommend any other name or buying more into BEL? Because we've seen that consolidation yet again back at that 400 level. What would be your opinion?
No, I think BEL is definitely a very stable counter. I think it's sitting on a very large order book, and most importantly, it's a debt-free business. So for the next 3 to 4 years, definitely this stock will compound good amount of wealth. But I think, other companies like Garden Reach or for that reason, Mazgaon Docks, I think these are also companies, which have got good amount of scalability potential. So probably you can do an SIP in all these 2-3 companies and always, buy in small pieces and stagger his investment. But I think that would be a right strategy. A basket of good defense stocks would actually help him generate a much better alpha in the next, say, 2 to 3 years.
Okay, all right. By the way, it's time to slip into a very, very short break. But viewers, don't go anywhere. We'll be answering more queries on the other side of this quick break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Welcome back. You're watching Ask Profit, the afternoon edition, and let's go across and take our caller from Kerala. Pavitran is now dialing in for a stock query. Pavitran, very good afternoon to you. What's your query?
Sir, I have a 1000 MCX stock, MCX.
Okay. And is this a long-term bet, Pavitran, or a technical one?
Short term, sir.
Short term. Okay, got it. Ruchit, on MCX, Pavitran's bought shares at 2,500 and he's holding 1,000 shares. Would you recommend him to continue holding these or book out?
Well, last few trading sessions, the stock has shown some signs of weakness from the recent highs, and it has breached its near-term averages. So at least in the short term, it seems that we could see the stock trading under pressure. So I would recommend to book profits and exit from this.
All right, so that's the view coming in on MCX. But it's time for our rapid fire round. Ruchit and Avinash, you both know the drill. Try to keep your answers as short as possible. The first one is from Suman, who's writing us from Kolkata. Ask you about Uno Minda, whether this is the right time to make it into this one from a long-term perspective. Avinash?
Yeah, definitely. I think one can buy in pieces and in a staggered way. I think for the next, say, 12 to 15 months.
Got Raymond Realty bought at 635, Ruchit, and this is Lavish from Indore. He wants to know a view on the charts. And he's been following you is what he is saying.
560 is the support. So till that is intact, this trend is not negative. So hold with stop loss below 560.
Okay, the next one that we have is on EPAC Durable. Our viewer is holding at the levels of 326 and 46 shares is what he's bought since 2017 is what he's saying. So interesting buying price. I don't think it's ever touched that. But anyways, EPAC Durable is the counter. Avinash, any view from a long-term perspective?
I think you can average out and hold on, but keep a time frame of at least 12 to 18 months.
Yep, got it.
Has it ever gone to 46?
No, I don't think so, because it listed also in January of 2024. So I was wondering how it's probably gone there. But that's the view coming in on EPAC from Avinash. The next question, coming in now, it's on GHCL, Avinash. Our viewer Harsh from Bangalore wants to make a 3-year investment and invest 50,000 rupees. Should he do that?
Yeah, as of now, I think it's better to wait for at least the the June and September quarter. Soda ash prices are still ruling weak, so I think it's better to wait for Q1 numbers and then take a call.
Okay, E2E Networks is the next one. Sunita from Delhi wants to know the right price to enter this counter from a 3-month perspective. Ruchit?
Keep a buy on dip approach, I believe. So if we get any dip towards 380, 400 to 420 range, then we can look for buying opportunities there.
Okay.
Mr. Shetty bought into Inox Wind at 106, Avinash. He's asking if he should still continue to hold on or sell out.
So I think he should hold on. Keep a time frame of 12 to 18 months, if possible, even average.
Is this the right time to enter BSE? Bharat from Andhra Pradesh wants to know, Ruchit.
I'd wait for some time because the kind of volumes that we have seen recently, support is around 700, so review over there.
There was also Mahesh's question, so hopefully that answers the question, Mahesh, on BSE. On Anantraj, Indira from Vishakhapatnam bought shares at 650. Avinash, they want to invest big now in Haryana. Should they continue to hold?
Yeah, I think they should continue to hold, but keep a time frame of at least 12 to 18 months. I think in the data center business, you could expect a big bump up, from Anantraj.
Okay, the next one is specifically for you, Ruchit. This is from Sampath Kumar from Chennai. He's holding 250 shares of Samvardhana Motherson. Can he continue to hold or sell?
We should continue to hold. Overall trend seems quite strong.
LIC, after averaging of the bonus, Raj is holding shares at 449, Avinash. There's still that overhang, right, of that government stake sale. Should he still hold or probably sell out right now?
No, I think he should exit and possibly get into some bank. I think either Axis, ICICI, or maybe Canara Bank.
Suzlon 12,500 shares bought at the levels of 42. Murugan wants to know the target price for this one, whether he can continue to hold or book partial profits. Ruchit?
Can hold at current levels for potential targets around 62, but need to keep the position view.
Got it. On Man Industries also, Ruchit, Venkat from Bangalore holds shares at 425. Should he exit now or continue to hold? And can he add more?
Should hold with the stop loss below 480. Can also add new position. Stop loss should be same, below 480.
Okay. Aquis Solar, is this the right time to enter at the current levels? Rajkumar from Bengaluru wants to know, Ruchit.
Already stock has shown an up move. Trend is positive, so enter partial positions what you want to buy at current. And if any dip comes, buy more at lower level.
Manthan has bought into Jaiswal Neco at 40 rupees per share and he's holding 1500 shares of Avinash. He's asking if he should continue to hold on or sell out.
So I think he should hold on. The coming current financial year should be significantly better. So I think continue to hold.
Got it. Well, that was the last question on this edition of the Rapid Fire as well as Ask Profit. Avinash as well as Ruchit, thanks so much for joining in, helping us solve all those stock-related queries. But viewers, out of time on this edition of the show, thanks so much for watching. India Market Close comes up next, and have a happy weekend.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost.
Markets have actually given up those initial gains, that initial euphoria, which has absolutely gone away. Welcome to India Market Close on NDTV Profit. I'm Hiral Daria as well. Clearly, if you see in terms of Nifty 50, we are actually below the threshold of 23,350 as well. And that is what is concerning to me right now. 0.4% lower. And with this, what you're seeing in terms of Bank Nifty is some bit of stability. You're not absolutely in the negative, but still trading flat. Mid-cap index down almost 0.5% in trade. And if you have to look at the small cap index as well, similar are the kind of cuts. If you can just pull up the small cap 250 on the screens, there you go. At the day's lowest levels, 0.2% lower. Let's look at the Nifty 50 intraday chart, and then we look at the Bank Nifty intraday chart as well to understand the kind of moves that have happened. You know, this is the time when the RBI governor had started to speak, and that's where we saw this spike that did come in. And we started giving up those kind of gains. And now, if you look at where we are right now, nearly at the lowest levels in terms of Bank Nifty as well, and similar is the case in terms of Nifty 50. Let's just quickly pull up the components in terms of Nifty 50, the heat map, to see what's happening in terms of individual counters. I mean, if you see in terms of individual stocks, HUL, Bajaj Finance, DRL, SBI, a very mixed sectoral picture is what you're getting in terms of the gainers as well. Adani Enterprises has been holding up to that uptick since morning along with Adani Ports. But Max Healthcare, this is on the back of the Citi brokerage note that we saw as well in today's session. HDFC Life trading with gains. But Wipro continues the downward pressure. Today is X buyback in terms of Wipro, and that's why probably you're seeing that pressure. Hindalco also down in trade along with Tata Steel, Trent. I mean, metal counters overall have been under pressure. You're seeing that kind of profit booking which is coming in this space. So that's with regards to what's happening. But even Stevens, I mean, nothing major in terms of if you look at a Bajaj Auto, Infosys, SBI, no major moves coming in terms of rate sensitives as well is the read. Now, the key highlight today, let's pull up the Indian rupee and let's pull up the bond deals as well, because that is what is the flavor of the day today, because the announcements, the relief that has come in with regards to where FIs go, these are the two spaces which have got impacted. Here, you're seeing that strength which is building in terms of the dollar rupee pair. We are almost at that 95 mark, and it will be a big deal if we hit below that 95 levels as well in terms of where the Indian rupee goes. And very lastly, some cooling off happening in terms of bond deals. We are now at 6.95. We started off the day at around 6.99, and some cooling off impact coming in terms of bond deals. So there is some bit of relief that is coming in on this front as well. Let's just look at the wicks, and then we'll look at the advanced decline ratio as well very quickly in terms of the screens. If we can have the India wicks, there you go. Absolutely stable. Just a 1% move. We are at levels of around 16, which is something which the markets are still digesting. Let's look at what's happening in terms of the advanced decline ratio. If you have the intraday chart, there you go. You see the kind of convergence that we've seen in intraday days trading session as well, but clearly you are very even Stevens there. 1400 declines to almost 1200 advances is where we are. So that push and pull continues, and it's the broader markets, individual stocks where the action is. But let's quickly understand what are the key triggers for trade in today's session. Now, the RBI governor has said that they will be going ahead with new funding rules from the 1st of July, but the date for the new funding rules was something which was already known. And these are two things what the capital markets are reacting to. It's just a reiteration of what the governor had come out and said in the month of March 2026. Your broader indices actually have turned bearish because of this. The RBI MPC meet, they've said that the rates are unchanged, stance is neutral. So your interest rate sensitives are seeing a rally. If you have to look at names like real estate, that is showing you some bit of strength. Selling in terms of metals and IT, that has continued. Your capital market theme is something where you're seeing selling as well. Lastly, if you have to look at the rupee, that has strengthened. We spoke about it, and this is after the FPI tax relief announcement that has come in. In fact, FinMin has announced that FPI's non-resident benefits will also come in. And there has been a sharp cool-off in Indian domestic yields from, we saw the levels in intraday trade as well. Now, all eyes will be on India GDP data that will be slated to be announced today. And we're talking about around 4:30. The interesting point that I pick up over here is that the governor has actually increased the forecast when it comes to inflation and reduced the growth forecast for FY27. So these two are slightly concerning areas that we need to deal with. But what that GDP data will show you today is going to be crucial. And your US non-farm payroll data that will be announced tonight also is the crucial data point that one should be watching out for. You know, today we've not really looked at levels because clearly you're seeing the kind of push and pull that the markets are going through, but interesting announcements and interesting takeaways that we have so far. In fact, let's welcome in our guest. We have Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining in. Gaurav, good afternoon and welcome to the show. I mean, you've seen the kind of, gyrations that we've seen in terms of Nifty. Bank Nifty to an extent has remained slightly stable. I mean, you have a HDFC which is on the losing end today versus a ICICI Bank which is on the gaining side. If you have to look at the markets at this point in time, what are charts actually indicating?
So, very good afternoon to you first, and good afternoon to all the viewers of NDTV Profit. So, Hiral, the charts are clearly indicating a sense of negativity here. With indecisive kind of a mode that is due to the Friday mode and a lot of data which is actually expected. US trade deal, some domestic data. So they are actually having a toll on the broader markets itself. Market bets is clearly on a flattish note, 50-55 points negative for Nifty. We are having no signals. I am expecting a break below 23,200. We quickly take it towards 2300 and 22,800 marks. So pessimism and negativity is actually what I am looking at. Not too optimistic on the market. Yes, some bit of support is there, but the kind of things and which are rolling around, this is difficult. Only a good and a healthy pact with US could actually, at least for temporarily, lead to some buoyancy in markets. Again, that will be a question mark on certain other factors need to be considered.
Okay, so that's with regards to where markets go, Gaurav. In this kind of a market scenario, then, what would your top picks be? Would they be on the buy side or would they be on the sell side?
We are optimistic. We are very choosy at the moment. We have of late recommended a stock like Bharti Airtel to our clients. So before we talk about it, I want to put up a general disclaimer here. They may be having a position in the stock. We are, as I said, very, very choosy on this. As far as index is concerned, somewhat like a pharma places are most, we are very stock specific on it. Torrent Pharma or Aurobindo Pharma, Divi's Lab remain our favorite of the lot. There are not much of hunting that we are doing as of now.
Okay, so that's with regards to the overall mood check right now. Let's just pull up the sectoral heat map and see what's happening on that front, because defense as a space has been seeing a lot of buying interest since yesterday as well, and especially your drone companies. But today, media, for obvious reasons, because of Z Entertainment, is up in trade. Real estate is another one which is rate sensitive, which is seeing some smart moves. Metals is taking a beating. IT is also taking a beating in today's session. Let me take this question with you, Gaurav, in terms of IT as a sector. The kind of gyrations that have come in over the last couple of trading days, the ups and downs, it's absolutely topsy-turvy for the IT index. If you see the 5-day chart, that will tell you the story of what's really happening there. Anything where you're seeing strength in terms of IT, may it be from the large cap, mid cap, or the small cap space, or any of the stocks which have actually run up, where you're saying that, okay, probably this is the best time to now book profits?
Hiral, as far as IT is concerned, OFSS is one stock that is actually taking the beaten, a one-way run-up, steep rise. BFSI is one space that we are bullish at. There are three entities that I want to point out here. First being OFSS, that drives around 80 to 90% of its revenue from this space. The other two Indian companies are Coforge and Mphasis, that drive over 50% of their revenue business from a BFSI space. So citing a positivity in this space, we are optimistic on these three names. OFSS has already performed. Coforge and Mphasis are yet to do so. They being completely Indian firms, I think they will take little more time. So these levels can be considered for accumulation with a time frame of 2 to 3 years perspective. Any decline in OFSS from the current level, especially towards 9,000 zone, 8,200 to 9,000 will be a perfect zone to re-enter for those who have missed the bus earlier.
Okay, so that's with regards to Oracle Financial as we speak. But moving on, stay with us. I want to talk about the metal space, specifically a Hindustan Zinc. That stock is under pressure today. And there are media reports indicating that there is a stake sale via OFS that could be done by the government. Parth joins us with more details. Parth, it's an interesting company to watch out for. Stock down nearly, over 6%. What are the key details that you're picking up so far? And what's that setup looking like for the company?
Absolutely. So before we dive into the details, let's just put things into perspective and start with how the stock has behaved over the last 2 to 3 weeks. So as you rightly mentioned, the stock is down around 6% today. In fact, in the last 3 weeks, the stock hit a high of 678, and from those levels, it has declined 15%. Today's volumes as well are around 1.5 times its normal 20-day average. So a lot of action that is happening, but majorly the sentiment is still on the negative side. Now let's move on to the reasons behind the stock, why the stock has declined today. So some media reports are indicating that the government is looking to sell a part of its stake in Hindustan Zinc via an offer for sale. The media reports say that the government might sell a 2% stake in Hindustan Zinc from their current holding of 27.92% in the company. So it's a pretty big chunk when you compare the stake sale to the government's current shareholding in Hindustan Zinc. This offer for sale could raise up to 5,000 crore for the government of India, and this OFS is expected to launch either this month or in the month of July. So this is the key trigger which has pushed the stock of Hindustan Zinc down in trade today. Now the question arises, why is the government selling their stake in the company? So the government is trying to boost their revenue by selling stakes in state-owned assets. As we know that the government has its divestment target which they're trying to meet. So this is what the government has come up with. In fact, we have seen recently in companies like Coal India and NHPC where they have successfully launched an offer for sale components, and we have seen the oversubscription numbers in both of these OFS as well. So this strong institutional participation that we saw in Coal India and NHPC, it has encouraged the government even more to do even more such OFSs in more companies. Now moving on to the analyst view, around 18 analysts track Hindustan Zinc right now, and majority have a buy rating on the company with an average return potential of 15.7%. Now moving on to the valuations as well, the company is valued on an EV to EBITDA basis, currently standing at 10.67 times, which is at a premium to its 5-year historical average of 8.9 times. But on a forward basis, it still looks pretty well at 8.18 times.
Thank you so much for that. This is important, but what else is important right now is the INR. Let's just quickly pull up the Indian rupee. We've gone and strengthened further at levels of around 94.95, if I'm not mistaken. If you can just quickly pull up the Indian rupee on the screens right now as we speak. There you go, 94.99. That strength has continued as we speak, and this is one of the most important aspects, and this is what the RBI has been doing as well with regards to where giving out measures in terms of the FIs go. I mean, the tax save, the tax cut that has come in overall in terms of where GSECs go, that was one of the measures that the RBI has taken to go and protect the rupee, and that you're clearly seeing in terms of the dollar rupee pair. Before I get anyone to speak to us in terms of the Indian rupee, Gaurav, on the charts as well, if you can help me. I mean, I'm not sure if you're tracking the Indian rupee on the charts, but if you do, anything that's telling you in terms of what levels we should be now watching out for, that it has strengthened beyond 95?
Here, yes, we do track currency, and as far as the USD INR is concerned, a further slide looks pretty much imminent here. 94.4 to 94.1, 94 levels is what we are expecting in the near term. This is a very welcome move by our governor, and this will actually attract a lot of foreign investments into India and will strengthen rupee. So a further slide and strengthening of Indian rupee is very much possible.
Okay, so that's with regards to where the dollar rupee pair goes. Siddharth Khemka from Motilal Oswal Financial Services also joins in. Siddharth, welcome to the show. My question to you is, with the RBI's measures that have come in, or I wouldn't say the RBI, the government and the RBI who've collaboratively announced the measures towards the FIs, how are you looking at it and the impact that you're seeing in terms of the strength that the rupee has been picking up? Your initial comments.
Hi, good afternoon, Niral. So I think definitely this was something which the street was chattering for last few days, and finally the official notification came in along with the RBI's policy. So I think this is a right step, and especially given that we have seen sharp outflows from FIs, both from the equity markets as well as from the bonds market. I think the effort to calm the FI now is heartening, especially given that there has been a big pressure on the Indian rupee, given... Can you hear me?
You can go ahead.
Yeah. So basically there has been a big pressure on the rupee from the inflated import bill because of the high crude oil prices, and at the same time because of the heavy FI selling, there was another pressure on the rupee as demand for dollar went up. So now with some relief measures in terms of the tax benefits or the tax relief that these institutional investors can get on the domestic bond market, I think it will definitely lead to some pressure easing off on the dollar, and hence I think that is being visible in the strengthening of the rupee.
Because if you see the Indian rupee, it has been volatile over the week, but a notable recovery is what we've seen in the last 5 trading sessions. If you can just chart a 5-day in terms of the Indian rupee, it's actually reversed. We hit a low of 96.16 to the dollar, and from there a sharp recovery to 95. In fact, even a 94.99 is what we've seen. And that's what is telling you, I mean, 14%, last 1 month is, I mean, not really inevitable right now. But if you have to look at even for the last 1 week, if you can just have a 1 week chart of the dollar-rupee pair, that will tell you the kind of recovery and the reversal that we're talking about. Because 95.55 is what we've seen in terms of Monday opening. Further strengthened to around 95.26 when you talk about a Tuesday. Wednesday, again, a steep collapse to 96.16 is what we saw. And this was on the back of the, energy disruptions, the aggressive capital outflows that we were seeing, and a partial recovery that did come in yesterday and today. There you go, 95 is what you're tracking. And India Banerjee, SPP Currency and Commodities from Kotak Securities comes in. And India, welcome to the show, always a pleasure. Hiral on this side. My question to you is, I mean, the RBI corrective measures in terms of we're getting the FIs back into the country, specifically when you talk about the Sensex side of it. Now, the idea over here is to go and arrest the depreciation that we've been seeing in terms of the rupee and stabilize it. Right now, we've already gone below that 95 mark. We've strengthened further. Your initial take?
It's in fact a very welcome move, because we were all anticipating this kind of a bazooka, and actually RBI has delivered a bazooka. They have announced a slew of measures which will create short-term inflows. At the same time, once this oil crisis is over, we will see a large amount of inflow into the debt segment through the FAR route and plus through other routes. So I think it's a very positive move. But we have to also temper our expectation as to how much the Indian rupee can appreciate over the short term. Yes, the stop losses can get hit. Some speculative positions will be unwound, and we could see levels of 94 or even an undershoot below 94. But as long as the oil crisis continues over the near term, I think we will again see a bounce in the USD/INR from those levels.
And India, that bounce will be to what levels?
It looks, I think it should not break beyond 96.5 now, because with these factors, especially as I said, the short-term inflows through the FCNRB as well as through the ECB route can be quite lumpy, and that can help to arrest the fall. So I think 96.5 on the upside, and if it undershoots, then it's around let's say 93.80, 93.70 kind of levels.
93.80, 93.70 if it undershoots. But do you see, maybe not in the near term, but slightly longer term, when oil eases further because of the West Asia crisis easing out, do you see a rupee-INR dollar pair again coming back to those levels of 90 where it could stabilize? And if so, I mean, what are the timelines that you are actually looking at?
See, once this Hormuz situation is sorted, I think then we could see a substantial appreciation in the rupee. Actually, then we could get into a situation where RBI actually would have to intervene on the other side. They would have to buy dollars, because then the inflows can up substantially. Yes, we could even hit levels of 90-91 at that time, because Indian rupee is quite undervalued compared to its peers on a RER basis. It's just that this oil shock which is keeping the rupee undervalued. But once that threat is gone, the appreciation can be quite substantial.
So I think both the sides, we are looking at levels of what, 93.8 and 96.16, which is the high right now. But thank you so much for joining in. It's always a pleasure to speak to you as well. So that's with regards to the rupee. But Tamanna, it's very interesting to see the commentary from the governor with regard. It wasn't even a commentary when a reporter asked him that what happens in terms of the margin funding by banks. And the reason that was an important question was because everyone was trying to ascertain, will there a relief come in to some extent for the equity markets as well?
You're talking about the 1st July deadline.
The 1st July deadline,
but
right?
But can I tell you something? I think there is relief for the equity markets, which has been overlooked by the markets.
That's what it seems like right now.
So, and I'll tell you why. So they announced something called the PIS scheme and special allowances for PROI, persons residing outside India. Yeah. I think mistakenly this is being seen as another version of the NRI scheme of 2030. Because it's not non-resident Indians. It's persons residing outside India. By definition, it means anyone who has no connection to India as well can now invest in listed Indian entities to an extent of 10% under this one scheme instead of 5%.
5%.
So double.
So it's double.
Yeah, and so you are going to see maybe more inflows coming in. You know, you're having a very interesting conversation right now with on the rupee, and he's talking about 93 on 93. The other end. Look at what Samir Arora is saying. He's saying he's expecting 50 to 60 million USD coming in possibly by September. Just pull in what he said. No, 40 to 50 billion. Sorry, that's the right figure. He's saying if I have correctly understood the FCNRB scheme, India will get maybe 40 to 50 billion dollars by September through this scheme. Wow. This is something he has just posted. So that's a huge picture. And my sense is that Indian government is not yet done. This was just the
beginning, correct.
You're not going to end by doing one tweak to taxation on G6 and that's it, because they've taken their time to figure out what to do. Even while there was a clamor.
It's a very thoughtful and they've actually charted it out really well. I think this is what it tells you right now. Yeah. And as we started off our conversation this morning as well, and Neeraj, and you also pointed out that this is just Dhurandhar part 1. I think part 2 is still remaining.
Yeah.
And then we don't know what happens. But clearly, this is a move in the right direction. Meanwhile, let's just quickly listen in what RBI Governor Sanjay Malhotra had to say about the central bank, where they will go ahead with the rules on lending for proprietary trading, a move that's actually rattled the capital markets. And as Tamanna is mentioning, this is not as negative as the way people are looking at it. But let's quickly listen in and then we'll get Sharad to get us some details on it.
वो हमने जो है वो डील नहीं दी थी, वो हमने समय दिया था क्योंकि समय बहुत कम था उसको इम्प्लीमेंट करने के लिए, तो इसलिए हमने जो है वो उसकी जो इम्प्लीमेंटेशन जो डेट है उसको लागू करने की जो तिथि है केवल उसको बढ़ाया हमने, और कोई उसमें ढील या छूट नहीं दी। कोई टाइम आगे बढ़ने की कोई उसमें गुंजाइश या जरूरत नहीं है। ओके, देयर इज नो नीड, एंड दैट वाज ओनली वी ओनली मेड द सर्कुलर द रूल्स, the date of applicability was extended. It should not be seen as a relief in that sense.
Okay, so there are two parts of it. I was talking about the broader market. This specific squeeze on, I would say, leveraged trading was bound to happen. There is no relief there. Sharad joining in with more details. Sharad, we've already seen the impact on some of the capital market listed entities, isn't it?
Well, yes, Tamanna, this is basically already known in the markets, but this time when RBI Governor stated two important things. One was the date, no extension coming in, and no kind of benefit coming, which is already announced in the circulars. Let's do a revision of what was actually announced. The banks had stated that they are no longer going to permit any fund of the intraday margin funding, and secondly, the bank guarantees must now be fully secured with almost 100% cash or cash equivalent backing. M2F funding, that also now must comply with stricter secured norms. And remember, the impact is quite negative on the FNU volume segment. It is negative for the exchanges and the brokers, especially your discount as well as full-scale service brokers. Brokers will face higher working capital requirements and also leverage benefits that becomes lesser. The May numbers, let's have a look at what the May numbers suggest. In May 26, the option contracts, they are down almost 5% on a month-on-month basis. Cash contracts have remained flattish, and the M2F book has picked up 8% on a month-on-month basis. But yes, capital market themed stocks have seen a correction from the recent highs. For CDSL, BSE, Grow and Angel One ranging between 5 to 18%.
Just want to get a quick view from Siddharth Khemka. Might not want to talk about capital market stocks, Siddharth. I don't know if that's something that you want to talk about. If you do, then most welcome. But just the broader view about how the market is looking at the measures and this ordinance which has been announced today. We're seeing the rupee responding as it should be. But other concerns for the markets right now?
Yeah, Taman, I think several measures announced on the broking side. I think the measures were already announced in March, and only the implementation which was delayed. So what we believe is that most of the broking houses, especially on the prop book side, they would have had enough time to realign their funding requirements as well as capital requirement. So in that sense, the impact on broking companies should be to that extent not that much. The retail trading that continues unaffected. So we believe that overall, if you look at some of the companies, Angel One, Grow, both of which we like, we see strong performance from Grow in Q4. It continues to report strong revenue growth. There is a increasing, rising user adoption of all products. Plus, its brokerage business is gaining market share across segments. So Grow is something that we like. We have a target price of 235 there. Angel One also looks attractive there. So I think that's the space while the market is looking at the short term where the sentiment could be weak. But I think from a long term perspective, the broking industry looks attractive.
Okay. Thank you so much, Siddharth, for speaking with us. Have a great weekend. I think that's also part of why you're seeing a bit of concern in the markets. No one likes to go into a strong position one way or the other ahead of a 2-day market holiday right now when everything is so uncertain in the world. So which is why the quick market check, it's the bank Nifty which is holding up really more than anything else. What's interesting is that a lot of what the governor said about the economy, etc., has gotten overshadowed by this relief for foreign investors in debt. So you're seeing some reactions there a little muted because the governor did talk about how there would be a very close watch and some concerns about what's happening geopolitically. Frankly, no one knows what's happening there. What's buzzing today, I think BSE Realty and Nifty Realty is seeing some excitement. Let's pull up the Nifty Realty Index, and that is seeing some excitement because, again, there is no immediate rate hike which came in that was not even expected, but that is seeing some excitement. Nifty Healthcare is also not doing too badly. That's also looking like a safe space right now. We'll take a very quick break. We're coming back with closing ideas after this break, including what you should buy today, sell Monday. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
right, let's go across to Gaurav Sharma. He's Associate VP and Head of Research Globe Capital, joining in right now where we're talking about what's happening in the markets on the Nifty and the Bank Nifty specifically. Gaurav, is this going to be a missed opportunity for those who didn't come in? Markets have not really caught up to what's happening on the bonds and the rupee side. But do you think that there is now strength in the rupee that is perhaps not visible currently?
I think there are two ways to look at it, Tamanna. Yes, the welcome move by RBI and a right response by USD INR as we speak. Another point to look at it as crude oil prices. The depleting inventories globally will eventually lead to higher purchasing going forward, and that will eventually have a positive impact on crude oil prices. I think the market is actually factoring in the future headwinds here, rather than what's exactly precisely happening in the very narrow term. But yes, dollar is something to keep a close eye at. But I think a lot of other headwinds are also there for Indian economy, which actually the investors are penciling in. Apart from this, I think the Friday factor is also having their toll on markets as of now.
Okay. The other story that we're focusing on is Blue Spring and Quess Corp that have surged in trade following an order win for Quess Corp subsidiary Blue Spring. The order, in fact, exceeds the company's own market cap. Jasmeet joining in with more details. Jasmeet, this sounds like something quite unusual.
Well, right, Tawana rightly said, this is quite a news in the market today, and on the same basis, we see Blue Spring buzzing almost 14% in today's trade. Let's quickly understand what has happened. While Blue Spring's arm, that is Steg Energies, has received an order worth ₹2,000 crore, and the order is from Balco. Now, the interesting part is, Blue Spring acquired Steg Energies 2 months ago for 180 crore, and now they have gotten an order for the same subsidiary of nearly 2,000 crore. That's 11x return, what we are seeing here in terms of the order win. Now, other key details are the order is to operate and maintain over 1740 megawatts of power plant, which is under Balco. And as we know, Blue Spring operates as a service management, and so they have to manage the services of this particular power plant. And this order is spread across next 5 years. That's 60 months for the company. And if you look at the order win, the order has come under the telecom segment of the company, which nearly contributes 90% to the overall revenue. Now, in terms of the FY26, we do know that telecom sector of the company nearly added roughly 218 crores. Now, if you look at the key promoter holdings, and let's quickly understand why do we even have Quess Corp buzzing. Well, the Blue Spring is a recently demerged entity from Quess Corp, and the Quess Corp and Blue Spring have similar promoter holding. If you look at the key promoter holdings, almost 57% of the holdings of Blue Spring is the similar entities are holding stakes in Blue Spring as well as in Quess Corp. Now, while the Ajit Isaac, who is the MD director of the overall Quess Corp, nearly holds 13% stakes in Blue Spring at this moment, and that's why we see a positive sentiment across the group companies. Now, if you look at the FY26 figures for Blue Spring, how it operates is overall revenue touches 3,300 crores, and it's up roughly 11% for particular counter, and the margins have remained flat at 3.7%. Now, given this new order win, we can expect an up move coming in terms of the top line going ahead in the coming years. Further, we also know that the overall profit turned positive for this particular entity in the previous year on the back of that exceptional item which we saw in the FY25, where the overall profit was negative. While if you look at the all in all, the street remains positive. This particular counter, the stock touched 14% high and currently is up 11% in today's trade.
Okay, thank you, Jasmeet, for that. Both the counters are actually firing. Let's get in Jay Bala as well. Jay, good afternoon. Before we talk about anything else in terms of markets, I want your views on Blue Spring and Quess Corp. Would you buy into the momentum that you're seeing today?
Yeah, see, Blue Spring is a relatively new list. I got history from July 2025. But given the very short-term price history, it does look bullish from current levels, and it looks like it's going to take out the listing highs, post-listing highs of about 100 odds. So the momentum is quite strong here. But I would rather look at this stock as a pullback candidate. Then it will make a lot of sense from a risk-reward perspective. So the short term is quite bullish for the stock, but I would wait for it. But when it comes to Quess Corp, that's slightly bullish. It's been on a prolonged downtrend, and that it's trying to reverse that. So basically, a close above 245 would be a positive for it. And it seems to be trying to put in a bottoming process here.
Okay, so that's with regards to Quess Corp and Blue Spring. Neeraj, Divan, market expert, also joins in. Neeraj, any views that you have? We're talking about a company whose market cap is probably less than or equivalent to the order that they have won. How are you looking at both these companies, Quest Corp and Blue Spring?
Yeah, good afternoon. See, as far as Blue Spring is concerned, I really don't track the stock, so I can't really comment on what their business is and what this order will do for them. Plus, I don't know what kind of margins are there for this order, so I can't comment on Blue Spring. Quest Corp has been into a downturn. You've seen the stock has been correcting for the last, I think, almost 1 year now. And maybe today's move is just a one-off move. So I also will not really be chasing Quest Corp after today's move. I'll rather see whether this is going to have any earnings improvement for Quest Corp as such. If that is not the case, I think then it will purely be on the merits of the valuation which Quest Corp is trading in, and it's been into a downturn.
Neeraj, hi, Tamanna here. Would you look favorably at banks today after everything that the Reserve Bank of India has said? There's clearly a bit of a relief rally coming in. Do you see anything attractive which is worth looking at these levels?
I think some of the banks, like even PSU banks, like State Bank and all, which have a good, foreign currency deposits also. I think those do look good. I think for them, and maybe some improvement will happen as far as, they'll be able to get more of those foreign currency deposits. And, one should identify similar banks which have I think Federal Bank also has, South Indian Bank also has. So you have to see which banks have. I think they will definitely benefit with the kind of measures that RBI has done to attract foreign currency deposits and, improve the rupee position.
Okay, so that's with regards to banks as well. On the charts, Jay, how are you looking at the private versus the PSU space, and anything that looks interesting?
Yeah, the private sector banks are very due for a bottom. And if you recall, February 2026, it was the private sector banks that led the markets higher. I'm anticipating the public sector banks that led the market higher. So I'm anticipating private sector banks to lead the next leg of banks move higher. But I don't anticipate the banking sector to be an outperformer. I'm anticipating the private sector banks to do better than the PSU banks within the banking space.
Okay, so that's the take on banks. Some of the other stocks that have really been in focus this afternoon, and I want to talk a bit about what's happening with Saregama. Saregama, in fact, let's pull up the chart for the last 1 month on Saregama. Today, another 5% up, but this is one stock which has been buzzing. Strangely enough, you have a lot of media stocks buzzing today, about 40% up on just Saregama. On charts, Jay, is this something that you're tracking? What are you making of this? I'm going to add a Z Entertainment on it while we're at it.
That's right. See, the Nifty media sector as such, it's breaking out of an inverse head and shoulders pattern. And Z is the leader within that space. And I would, as long as the Nifty media index stays about 1360, I think it's on it's reversing a sustainable breakout. I anticipate the Nifty media index to rally to somewhere close to 1840 from current levels. So this is looking like a sustainable break. I haven't looked at Saregama closely, but I think Z has possibly put in the bottom. And so, yeah, more upsides potential for the entire sector.
That's with regards to media as a space. But moving on, let's also get in my colleague Shivam, who's taking us through the stocks which are actually buzzing in today in such a muted market. Shivam, good afternoon. What do you have for us?
Well, yes, the first stock in the list is TVS Supply Chains, as the company has entered aerospace and defense supply chain segment business. The company has partnered with Italy-based ALA Group and has formed a joint venture. And with this joint venture, the focus will be on aerospace procurement, inventory and fulfillment solutions. Now, the TVS will hold around 51% of the ownership, while the ALA Group will hold around 49% in this joint venture. And with this joint venture, the company targets to achieve more than 2,000 2,000 crore cumulative revenue by 2031. Next stock is Juniper Hotels. The company has signed a share purchase agreement to acquire 100% of Juniper Hospitality Assets Private Limited, and the purpose of this acquisition is the company is going to develop a 5-star hotel in Delhi on a 2.5 acres land, and prior to this there were no shareholding of Juniper Hotels in the JHAPL, while post deal the Juniper hotels will hold around 100% of the company. Third stock is FDC, which is seeing some pressure as the Maharashtra FD officials have visited the warehouse and has seized and collected some stock of Enerzel, and the final examination result is still yet to be received by for the company, and the company has said that they will take a legal recourse against this seizure.
Okay, thank you so much for that, Shivam. You know, we've been talking about monetary policy, and this quick take from Bank of America I thought was noteworthy, Hiral, where they're saying that the RBI is cautiously balanced and has delivered for now risks to current account deficit depending on the duration of the conflict and adverse weather conditions remain near-term headwinds. This part I thought was important. They brought forward their rate hike estimate from December 26 to August 26, with a second rate hike likely in December 26 and then in Feb 27. They've also revised their projections for growth and inflation, showing a greater shift towards stagflationary trends, and believe the projections incrementally are moving towards a trend focused on managing the inflation shock over the growth shock. They consider rate hikes in the near future once clarity emerges on the monsoons. Frankly, the chances of a rate hike coming faster are not incorrect, because from the Reserve Bank of India's perspective also, you would wait to see what happens with both the monsoon and with the West Asia crisis.
Yeah, and I think, you know, from a couple of conversations that I was having as well, everyone's of the opinion right now is that probably there is that undertone of being hawkish right now, and they're not seeing any hurry in terms of the RBI going ahead and doing anything with the rates. Yes, there are two rates, two changes that are being priced in right now. But again, as Tamanna is mentioning, they will wait and see the impact as well. But from there, you know, one interesting aspect that Sharad is just pointing out right now is the Indian rupee, Tamanna, has become the best performing currency in the world today. It's only today. It's only, and that's the caveat over here, right?
Yeah.
Yes.
Let's
underline that it's today, but it is good to see this as well, right? I mean, all this while we've been talking about the pressure, the depreciation that is coming in as well. One day, I think appreciation is a good factor.
Yeah, I know. The analyst that you were speaking, the expert that you were speaking to, said that if the flows come in as expected, the RBI will have to intervene on the opposite side by beginning to buy dollars. Well, talking about intervention when there is a big move in any asset class, after HDFC AMC's ICICI Prudential Mutual Fund that has restricted bulk investments in gold ETFs, restrictions on gold ETF inflows will start from June 5th post 3 p.m., which is 9 minutes ago. Now, Ridhima is joining in with more. Ridhima, this is the second major player that has announced this, isn't it?
Absolutely, and we just spoke about this in the morning as well, that major AMCs will be taking this. Associates also confirmed this, and now ICICI Mutual Fund has indeed restricted bulk investments in gold ETFs starting June 5th, and now it's already 3 p.m. So, this is after HDFC had just announced this yesterday that they will also be restricting their bulk investments in ETFs, gold ETFs and gold ETF fund of funds. And their restriction will start a bit later on June of 8th. And also, for gold fund of fund ETFs, they had made these restrictions as well. Now, this move comes. There's gold import pressure on India, and the government of India has also increased the custom duty on the precious metals from 6 to 15%, and it goes in line with that. And even the HDFC AMC had also said that they would want investors to go for equity and debt mutual funds, which means that we could see more investment coming in from those areas from the investor side. And now, the other big AMCs which could be seeing this similar action is SBI Mutual Fund. Nippon, the largest gold ETF AUM, comes from there, around 58,000 crores. And SBI followed by ICICI and HDFC, and they both have already done it. So we have to wait.
We may see others doing it as well. So the question is, if you have these gold ETFs, what does it mean for you? If you have ongoing investments, nothing really. They just don't want more of this money coming in at this point, because clearly investors now are looking at other options apart from equity. Thank you for that, Ridhima. Neeraj Diwan, in fact, I'm going to get your take on this very quickly and talk about how gold ETFs, we saw the same thing with silver ETFs, because prices are so volatile. But as an investment instrument for our viewers, how should they look at gold ETFs?
I think that this restriction is, I think, on bulk, big amounts. It won't be for small investors. So I feel that if someone needs to have a total portfolio allocation, as per what we are suggesting to our investors, is that at least 10 to 12% of your liquid investment should go in gold and silver, because the gold gives that stability over long term, and silver, because the various uses silver is being put to, I think that also gives a good long term investment view for silver. So I think that 10 to 12% should go in these two commodities.
Okay, so that's ICICI Prudential, and you're talking about HDFC as well. Both of them have actually looked at curbing investments in terms of ETFs right now. But very quickly, before we go to anything else, Adani Enterprises and Energy, two counters I want to pull up on the screens right now. We did see a block deal this morning we spoke about. See the kind of surge that we're seeing, 2.5%, 3%, and energy as well. And if you have to look at from April to now, spectacular returns. Just a disclaimer as well that, NDTV Profit is AMG Group, AMG company, which is owned by Adani Group as well. But on both these counters, Neeraj, any views that you have, you think with the surge that has already come in, I mean, what should investors do? Because there's lots more lined up. The group did announce a capex plan as well, and the timing is very interesting.
As far as energy power is concerned, I'm positive on this segment, and we've already seen stocks moving also. Even Adani Energy, talked about energy, Adani Power. We've seen a good move there. So I'm not giving a full view on the full Adani Group as such, but specifically the power-related segments, the power, energy, green energy, whether it's Adani or otherwise sector, other companies in the sector. I'm positive on that.
So that's with regards to where the Adani Group companies go. But speaking about the RBI's FPI relief move, World Bank of India Executive Director, that's Nilkant Mishra, says that the tax relief will restore dollar visibility and strengthen the case for faster bond index inclusions. Here's his quick view.
I think more than the investment itself, see, what we have to understand is that the currency market was in a state of panic. And I don't lightly use the word. We have seen that the demand for dollars was way higher than what our balance of payment deficit was. The only way to stem this panic is to show visibility that there are a lot of dollars coming. And frankly, this will allow or accelerate the process of India getting included in the bond indices, global bond indices.
Okay, so that's the word coming in there when it comes to the kind of impact it could have for the FIs to come back in. And number two is defending the Indian rupee. But moving on, you have the defense sector also that has in focus. In fact, good buying interest coming in there today, though the index is absolutely flat, but a lot of counters that are moving. Now, yesterday you had the Raksha Mantri, which approved a twofold increase in financial ceiling for field commanders. Now, this will strengthen the operational efficiency. The financial delegation is something that will support procurement exceeding almost 1.25 lakh crores through a revenue route. The revised financial powers for indigenization and R&D has actually doubled, and that will boost the Atmanirbharta and minimize the import dependency. The new provisions are also introduced to accelerate joint service procurement by the lead services, and that has enhanced powers. Because of this, strong moves coming in terms of, if you just look at the defense components, look at a Paras defense in trade as we speak. You had a Zen Technologies as well, which was moving, but Astra, Dynamite Tech, HAL, BEML, some moves coming in on these counters. Any view on the charts, JF, have to look at defense as a back?
I've been saying for quite some weeks that the capital goods space, including the defense space, are in a very bullish space. I'm the basic capital goods index, which includes or encompasses the defense stocks, I've projected a level of 99,000 for the basic capital goods. So I've been quite bullish on both the capital goods and the defense space. So it's not surprising that they are rising here. So I anticipate this action to continue for the defense space as well as the capital goods space. They got a considerable amount of upsides left.
I just want to look at what the view is on some of those pharma stocks. And Jay, I wonder how you're looking at Wockhardt. I mean, if there has ever been a seesaw for a company this week, it has been Wockhardt. Pull up the chart for the whole week. Right now, about 8% down. But I think if you look at how it's been altogether, it becomes pretty much flat because it had those highs Monday onwards and actually started last Friday in trade. First, the CDSCO gave its clearances in the US FDA. After that, some profit booking coming back to the fore. What next for Wockhardt on the charts? And then, of course, I'll come to Neeraj on what he makes on it fundamentally.
See, the pharma sector has been late to the breakout, and Wockhardt is one of the leading stocks within that space. But at current levels about 1900 plus, it's a bit risky. I would wait for some more pullback to happen, but I think it's still got some more upside left. And even within the pharma sector, it reached a high of somewhere close to 24,900. I think a bare minimum of about 26,000 is the potential for the Nifty Pharma Index. So I would equate both these together. And I would consider Wockhardt as being continuing to be in an uptrend, but still got very extreme short-term downside potential. But once that's done, anticipated to continue to fresh record highs.
Levels. What are the levels you see for it? Where does it make sense to buy?
I would look at somewhere close to 1825 to 1775. That will be. I'm not guaranteeing it's going to come there, but if it does come there, it will make it very attractive.
Okay, and on the upside?
I would expect Wockhardt to touch somewhere close to 2,400.
2,400 on the upside, possibly for Wockhardt. Neeraj Sivan, have you bought into that whole story of Zenix?
Actually, had into bought and already booked profit also there. But I think that considering the move that we've seen in Wockhardt over the last few months, I think that now it's getting a little risky to invest at this time. I agree with Jay Bala there, that one should wait for some pullback to invest into Wockhardt. It's becoming expensive now. But as pharma as a whole, I think there is definitely some stock-specific move which has to do more with API, CRAM, that segment. I feel that has more scope going ahead for the next. If someone is investing for 2 to 3 years, that has more potential as far as returns are concerned.
Okay, so that's with regards to pharma names as well right now. Can we just pull up the metal index on the screens, because there is that selling pressure which is coming in there. IT as a sector is also seeing that selling pressure in today's session, but specifically when it comes to metals, if we look at the components as well, we've spoken about OFS that could be a potential in terms of hinging by the government. 2% is what you're looking at. That stock is down a little over 6%. Vedanta under pressure, SAIL, Hindalco, Hind Copper, all of them taking a beating. What is your view, Neeraj, when it comes to the metal space? Because it's been a topsy-turvy ride to some extent, I would say, because good amount of surge that we've seen. And then the last couple of days, yes, some days positive, some days negative. But structurally, how are you looking at it?
Actually, if you see the last few months, metal has given a very good return. Whether it's ferrous, non-ferrous, we got very good return. So I think the stocks have corrected from those highs and now consolidating. But over the short to medium term also, I'm positive on the metal space. I feel that even, though if you see the results, the volumes have gone up, margins are good, prices have been supportive as far as metals are concerned. So I feel that after this consolidation, maybe small correction there and there, I think metal, valuation-wise, especially ferrous steel, stocks are not expensive, so even their valuations are supportive. So I would be buying on dips, I would accumulating on dips as far as the metal is concerned, whether it's ferrous or even non-ferrous space.
Okay, so that's with regards to metals. Jay, on the charts, are you seeing an opportunity to buy from here on because there is pressure today?
you got to be very selective here. The Nifty Metals Index is one of the few indices that have clocked fresh all-time highs. And this is along with the Pharma Index, Mid-Cap Index, and Defense Index, and Capital Goods Index. So you've got to be very selective there. If you look at something like outside the main components of the Nifty Metals Index, there's something like Sandur Manganese. Those are all very, very interesting stocks. But frontline names, you got to be doing a little bit of wait and watch because the Nifty Metals Index, it's not completely clear if the recent all-time high completed the entire move that started from the 2025 low. So I'm watching with a bit of caution here. But there are opportunities, like I mentioned, like RHI Magnesita or Sandur Manganese. Look at those names which haven't been participated yet.
Okay, as we go into the last bits of trade, Jay, let's get your BTST ideas, or more likely buy today, sell Monday. Are there any ideas that you're looking at for the week which is upcoming?
Yeah, it's in the small cap space. There's a stock called Roto Pumps. It's breaking out of an inverse head and shoulders pattern. And so, I anticipate the stock to move on a positional basis as well as on a BTST perspective. Positional perspective, I'm more confident. I'm expecting the stock to double from current levels. So I anticipate it to hit about 112 to 125. So from a BTST perspective, I don't anticipate the stock to drop below 61 before it touches 63.5 tomorrow or on Monday.
Roto Pumps, okay. There is, it's a small cap, so please look at it after you do all of your due diligence. Just want to put that out there. Neeraj Diwan, what are you finding exciting for the upcoming week?
I feel that the energy space is one space which should continue doing well. There are opportunities there. Of course, stock-specific opportunities are still there. So, so that should do well. And then, even financials like we discussed earlier, even some of these private sector banks like ICICI Bank, they've corrected and consolidated enough. I think not for the next week, but I'm talking about next 1 to 2 years. Even I think they valuation-wise make sense to invest in some of these private sector banks also. And energy is one segment where I'm positive on. Then, even in pharma, like I mentioned, the stocks which are into CRAMS, API, I think that is one space where, for the 2 to 3 year perspective, one can look at investing. Some of these FMCG names also came out with good set of results. So I think if you saw some of them, like even Tata Consumer results are very good. Viva was also not bad results. And we saw a good move happening there post results in stocks like Nestle. Then the stocks have been consolidated. They've corrected also a bit from the high. I think there also some moves can continue.
Okay, Nestle, would you really go into FMCG going forward ahead of the monsoon, Neeraj? Does that become one key factor for next week, looking at what consumption trends are because of the monsoon?
Yeah, again, for 1 week I can't, suggest anything because I'm a fundamental analyst. But if you generally talk about it, for a FMCG company, when inflation goes up, it gives them a reason to increase prices also. So they can, increase prices, and the prices, if they sustain at those levels, and their margins improve over a period. So in rising inflation, normally it's good for FMCG stocks. So keeping that in mind, for the next couple of years, I think if that should be positive as far as FMCG is concerned.
Okay, in fact, as we speak, the spike is very interesting in terms of Nestle as well, though it's up nearly 0.6% as we speak. But, we just have a HDFC Securities which has come out with a note on the back of the new fund rules that will be applicable from the 1st of July. Where they've said that the measure could actually impact trading activity as 35% of the industry margins are backed by FDs and bank guarantees. Now, they're assuming that half of these are pure bank guarantees and they're applying a 50% impact rule. This would actually result in derivative volumes which will be estimated to be down by about 8 to 10%. This is what HDFC Securities is highlighting right now. Neeraj, basis the note that HDFC Securities has come up with, and their estimation, how are you looking at the impact in terms of capital market stocks? Because you just have a BSE, which is under pressure today.
Yeah, actually, from the high, BSE is corrected, and even MCX is being corrected to some extent. So capital market stocks like BSE, I think they're already accounting for this disruption or this, volume change which may happen because of the margin rules and because of the BG's, the margin rule. So that, I think, impact is already built into it. I think from these levels, if you see some more correction, I think BSE will again become like a buy. I think this is already priced in as far as my understanding is.
Okay. Thank you so much, Neeraj and Jay, for joining us on this leg of the markets. Let's quickly close out what's been happening and what has been quite an eventful week coming in. You wouldn't think it's eventful, Hiral, if you looked at where the Nifty is closing, just about flat.
You have to see the intraday chart. I think that will tell you what the event was.
That will tell you the story. If we can just quickly pull up the intraday chart for the Nifty, and that tells you the story.
I mean, look at this, right? This is where the RBI governor started speaking, and that's where you saw that recovery that started to come in, and gave up the gains, again tried to make that recovery attempt as well. And exactly from what you're saying, when you started the show as well, that the markets have not really understood the impact in terms of how negative it is or how positive it is for the equity markets. Everyone is just looking at the impact from a bond perspective right now.
No, but so that's the disappointment.
Exactly.
Because I'll tell you what's happening. If you pull up the weekly chart as well, and we'll be going into closing in just a minute, but the weekly chart for the Nifty will tell that story. So a lot of buzz going on, right? Between Tuesday and Wednesday, that something's coming. It did not come on Wednesday. Thursday, that buzz starts picking up, and the expectation is that there's going to be some tax relief for foreign investors into equity markets. I mean, whoever was thinking that has clearly not gone back and actually observed what this government has been saying time and again, that they don't really want to encourage hot money. If foreign investment comes, that's great, but it should come in the form of very solid FDI, or you're investing in government bonds which go in.
They want long-term capital basically.
No, and government bonds, that money goes to build infrastructure in the country, etc., etc. Pull up the Nifty heat map as we go into close, because clearly you'll have maybe some winners but more losers on that. That split is very clear. Hindalco not doing great. Wipro, there was a block deal and a whole host of reasons.
And then a buyback. It's trading ex buyback as well today.
Which is why you're seeing this happening. Trent also losing a bit of its steam, as is TCS. But on the winning side, I mean, Adani Enterprises, what a week that stock has had. If you can pull up the weekly for Adani Enterprises, and of course standard disclaimers here, Adani Enterprises and Adani Ports, both those stocks have been buzzing through the week, about 2% up finally for Adani, and a lot of that coming in right now. Adani Ports is completely flat as far as the week goes. But let's go back to that Nifty heat map just for a second and talk about what's happening there. The spike in HUL, and I think you noticed that in Nestle as well. Let's pull up the intraday for HUL and Nestle and look at what's happening there. There seems to be some excitement about FMCG majors too.
There you go, exactly. In fact, let's just pull up the FMCG index along with the components. There you go, FMCG index with the components, and that will tell you HUL, Britannia, Nestle, IT. I mean, this is where that marginal spike has come in this last probably 15 minutes of trade. What is that optimism is what we have to figure out.
Yeah, maybe something very, very specific really, because there's no overpowering theme. Let's look at the small cap and the mid cap before we go into the last few minutes of trade, just about 3 or 4 minutes to go. The small cap in 250 also completely flat. So is the mid cap, but advanced decline is evenly positioned, 1234 to 1366. There's both sides of the story going on here, and you're seeing that in the intraday as well.
And I think what's holding up is Bank Nifty. Let's just pull up the intraday chart, because that's one which has actually outperformed your benchmark as well as your other indices. I mean, it did dip, but now ending with gains of 0.4%. So there is little strength coming in here, and you don't have a HDFC Bank which has participated today in the Bank Nifty, which is interesting.
Yes, which might actually come to the fore. Let's pull up all the weekly charts of all of these key indices before we wrap up. I want to look at Bank Nifty. Nifty IT, that will be an interesting one to see. And then of course the majors, 1% down for the Bank Nifty, 1.5% down for Nifty IT,
over the week coming in. You also have, let's pull up the Nifty, the mid cap and the small cap. Mid cap is about 3% down. One sec, just go back to the mid cap index for a second, because that was where you saw all of the buzz coming in, right? People talking about a parallel bull market happening in the mid-cap stocks. That's where the profit booking has come this week. Let's pull up the small cap for you, and then, of course, the Nifty.
Slightly more resilient in terms of the small cap, so probably that's where the action has slightly continued, right? If you just look at the NSE 500 as well in terms of components, very interesting names, Tamanna. Look at, on Network 18 is the Quest Corp we spoke about it, Z Entertainment. That has been buzzing over the last couple of days. Adani Green, RITES, very interesting names. Adani Energy as well. And on the losing end, today it's the day for the metals back.
Yeah, the metals taking a break over there. Rajesh Exports making it down to lower circuit, second day in a row. Sterlite again seeing some steam come off, and HFCL in that list as well. But that's all the time we have on India Market Close. Don't go anywhere, because right after this break, we're coming up with our Friday offering of the editor's cut. On the show today is Sridhar Sivaram. He'll be in the studios in just a bit. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've
Well, hello and welcome to our special offering on Fridays, the Editor's Cut, wherein we try and talk about what we think as the key outcome of the developments that have happened in the week, and then get in our guest editor to try and weigh in on whether she or he agrees with the three argumentative Indians on this table or not. And guys,
speak for yourself. I agree with everyone.
Yeah, well, I can safely say first-hand experience that that's not true. No, but frankly, if we thought that we want to talk about the week, Friday told us that you might as well talk only about Friday and you will end up talking about the week. So in some sense, for me, the key takeaways as I looked through the week, and I heard you guys say that the mid-cap index has had a bit of a profit booking, so the parallel bull market This week has not turned out to be true, but the big expectation was the policy, and I think the policy was an expected line. So policy was on expected lines per se, the hold, etc., etc. But the moves on taxation are really, really encouraging. And our cheat sheet, because I was talking to Sridhar Shriram just before the show started, you guys were anchoring, and the numbers that he has in store for what the inflows could be like are very, very encouraging. So that is one good thing. I would suspect, and I don't know how you guys think about it, but I would suspect that we'll probably have a series of other steps accompanying this, which might help the inflows and the sentiment. Though there's a story that's floating around what could happen for brokerages in terms of margin funding and the capital that they put in, etc., and stuff like that. And if that were to turn out to be true, it could be an overhang for that particular
You mean
sector.
the margin trading facility deadline?
Yes.
On 1st July. But that's confirmed.
Yeah.
It's not being extended.
And the other moves that come in for prop trading, etc., and the capital that they have to put up, if all of that turns out to be true, it's a bit of a problem. So therefore, the simplest argument that almost everybody's making on the street is the rupee depreciation brings about losers. Don't focus on them. Look at the gainers, look at winners which benefit out of the rupee, and therefore look at the exporters, look at textiles, look at auto ancillaries, maybe at some point of time look at IT. I think that seems to be the simplest investment argument that one can make right now.
To some extent, yes. But the way I was looking at it is, with the measures that have been announced, you are seeing a structure which is strengthening. And from what Tamanna just started off India Market Close as well, where she categorically highlighted as well, which is absolutely right, that the markets are not really looking at the positive picture yet. And that's the reason why we saw profit booking. Because if you see the euphoria that we've seen pre-policy, somewhere you can say the markets have given that away to some extent, because we've traded actually kind of at a razor's edge, is what I would say, in the last 4-5 trading sessions. Now, there have been defensive capital shifts that are happening as well in terms of individual sectors. Look at metals and tech. Both of them high-flying sectors, they've given away gains. Your multi-sector rally that you were seeing has given out a breather right now. So that's from the market side of it. Now, if you look at the RBI, it's kind of a reality check as well, because your multi-billion-dollar regulatory and tax relief package that has come in for the FIIs. However, the unanimous decision that we're talking about, to add to that, you've slashed your growth outlook for FY27. You've increased your inflation forecast. So the counter argument to that is, on growth and inflation front, are the FIs, if they're going to come into the country, are they going to be okay with that kind of a structure? That's the argument where everyone is talking about right now, and the ifs and the buts. But yes, the structure, the path that they are taking in terms of the RBI is absolutely positive. But the moment other measures do come in, that's when probably there will be an answer to this question.
But the standalone is good, right? I mean, what they've done, standalone
is
a really good move.
I think people are obfuscating what they want with what they need. Okay, so let me explain this. And this happens sometimes because you want to eat mithai, but actually you need salad. So it might be a weird comparison, but what the market wants is LTCG hata do, make things very attractive. You want that cheesecake served to you. What you need as a nation is a high fiber diet. And I'm thinking about that because I'm going into the weekend, which is always very tough. So pardon me for that. But you need to get a good, steady diet of protein, which will keep you going. That's what this kind of foreign flows will look like. So, I mean, here's my take for the week. India's countermeasures, in my view, have just begun. And I completely agree with you, Neeraj. In fact, a lot of reports doing the round, the top ministries have been asked to compile information on what we are doing, and there will be a lot more in the coming week from India's side officially that, hey, here's our plan. We've been quiet so far as a nation onto what our plan is to save the economy. There haven't been much out there publicly. I think that's about to change. Today was just day one. The fact that this measure, which we saw today, was bought in by an ordinance, in my view, is significant because it shows that there's urgency but not desperation.
Why do I say that? Because the way they choose, the form and fashion in the way they chose to communicate is also important. It was through the Reserve Bank of India's monetary policy and the measures that they are taking. Remember, the ordinance and the Gazette came out at the same time as the governor was giving out his speech. So that also tells me that there will be a very calibrated move to put out this information and this communication to the wider cohort of global investors that India is now talking to. I honestly believe that the significance of this PROI announcement has been overlooked by markets today. What is PROI? Person residing out of India. And this individual entity can now invest 10% in a listed entity instead of 5% earlier. This is mistakenly by some being likened to the NRI bonds scheme of 2013, saying we're coming back with it. Well, it's not, because your cohort of beneficiaries is now beyond NRIs or anyone related to India, right? It's person residing outside India. Technically, that could be anybody, any individual entity, and not just a non-resident. And that increases access to capital markets and goes beyond a high-yielding debt instrument for the rupee, the way we saw in 2013. When we're talking about the rupee, we saw a huge recovery. I mean, that was the star of the show today, going past, strengthening past 95.
You can call it the standout victory of the week, I would say, probably.
Yeah, in one day, you know, some of that pain was over. For whoever is planning to buy dollars and travel in the next few days, good for you, and too bad if you've already done that exchange. But anyway, that's on a lighter note. I truly believe that recovery journey may have just begun, and this is unlikely, what we've seen so far, to be the only weapon in the government's arsenal. Expect more fireworks in the days to come. And that's something we'll be speaking to Sridhar Sivaram in a bit just now as well, and he's just walking in as we're seeing. But you know, even as we're talking only about Friday, because Friday was such a banger of a day, what an interesting week it has been, because it has been, as we've been calling it, conference season. We've been meeting so many investors, and one of the top market guys I met at one of the recent investor meets, it was a corporate investor meet, I asked, itna mood kyun kharab hai market ka? The answer was, kahan kharab hai? Kahan hai mandi? Mujhe to nahi dikh rahi hai. That's not necessarily what everyone is saying. Many people are a little muted, but is that the right answer or not? I don't know. Sridhar, hi, welcome.
Hi.
Welcome, please.
Thanks for inviting me.
This is how we do it at NDTV Profit. We capture you coming all the way in, and thank you so much for being here.
No, thanks for inviting me.
Has the RBI and the government of India actually over-delivered on what was expected as a measure to bring back foreign investment, or have they under-delivered?
No, they have delivered for sure.
Okay, that's true.
Yeah, so I think it's, as we were discussing before, that what they have delivered on the debt FI taxation is very good. It doesn't mean that you get inflows immediately, because you have to keep in mind that the US interest rates at the 10 years is close to 5%. You look at some of the corporate bonds that you can buy there, you could easily get 6.5 odd percent. But this will come over a period of, so some of the irritants have been removed. Passive funds can easily come in now.
What does the effective return become after all of these tax incentives, if in case you've done that math for any FPI?
The effective return will be the return that you get on the bond. Exactly the same, because there is no, earlier you had a 20% TDS or a withholding tax, and you had a capital gains. Now none of those, neither of them are there. So the return is exactly the same as, except for the currency. And in my view, if you look at the RER of India, which is and we are at around 88 right now. The last time we were around this range was in 2013, which was the taper tantrum, the fragile 5. So clearly we are, undervalued right now. So if I was a foreign investor in debt, and I look at the RER at 88 or 87, and I look at all the measures that the government has done today, I'll be tempted to invest in the debt securities, in the government securities today, with a view that the currency, if you ask me, I'm not an expert on currency, but you could easily see a currency appreciate, stroke not depreciate for almost 12 to 18 months, given where RER is right now. And the history tells you that the currency appreciates when RER reaches such levels. And we saw that in 2013 also, the RBI and the government took a lot of actions. But eventually the currency will depreciate, but currently we are undervalued. That's how I look at it.
You know, the point that you made with RER as well, at that point in time, if I'm not mistaken, oil was at around $100 as well. Right now we are below that. If you have to look at the interest in terms of the Indian bond markets versus what's in what corporate bonds are offering in the US, does the math still fit in well where you will be able to actually attract that quantum that we've already lost?
So when I look at what they have done on the FI debt side, then I look at what they've done on the ECB side and on the FC and RB side, I'll be disappointed if we don't get at least 50 billion over the next 6 to 8 months. So that will make a big change. So I think you have to look at it from all the combined policy action, which is the government and the Reserve Bank. I think this is very positive. See, the other thing was, it was a vicious cycle that the exporters were not bringing their dollars back. The importers were wanting to pay immediately. So this was a vicious cycle because nobody had confidence in the rupee.
Yeah.
When you get measures like this, there is a confidence that the RBI and the government are serious about doing something about the rupee. Then it stabilizes, and that itself is enough. Where if you take the gross trade for India, if you take the exports and the imports, over a year it's close to $1 trillion. So if you analyze it on a monthly, on a daily basis, that's a large number. And if everybody is doing exactly what RBI doesn't want them to do,
it was a run on the rupee.
So it's a run on rupee, exactly. So that is what stops. So you just need stability, and then you get these inflows. That is enough for the currency to, which is what I'm saying. The RER in 2013, you can argue was fair at that time because our current account deficit was almost 4.5%. There's no way you can justify an RER at 88 today, is the point I'm making.
Nice. Music to the ears. What does this also mean in terms of rate action, Sridhar? Because there was a lot of voices on the channel after the policy happened that, but wait for the second half and looking at the inflation projections. And I know you differ there, right? Totally. But looking at the inflation projections, could we see a rate hike? Are you in the camp which believes that there will be a rate hike? Or because the RBI now doesn't have to do a rate action to defend the currency, if you will.
Yeah. So I'm happy they didn't confuse the currency and the rate to start with, that they focused on this policy only on managing the currency and nothing on the rate. My view, and the data is available for everybody to see, RBI's credibility on inflation is very poor, to say the least. So let's go back to June of last year, same time, same projection they did for FY26. They said 3.7. And I had come on your channel after that, and I said that they are totally off the charts. I was getting closer to 2.5 at that point of time, and I bumped it up because RBI was at 3.7. So I said, okay, closer to 3, maybe 2.5, 2.75. Actually, we got 2. So RBI's projection was 3.7, we got 2. That's a massive difference for somebody who's projecting inflation. Now, we come back to the projection now, 5.9 for the third quarter. There's no way we are getting that number.
Despite everything.
So you have to keep in mind that we are talking of CPI. The weight of fuel and power combined is about 9%. Food is still closer to 40%. And I think one point which people are missing is that last year's 2%, about 60 to 70 basis points came from gold and silver. Now, gold and silver are going to positively contribute to inflation. So, not only because gold and silver were up almost 100 to 80%, it was a 70 basis points weight. So, that contributed to about 70 basis points
so
on the inflation.
Instead of 5.9, where do you think it's going to be?
Around 4.5, 4.75.
Okay, so we are overestimating at this point.
Let's admit projecting inflation is not very easy.
And right now, one would even give a little bit of a leeway to anyone trying to do that because things are so uncertain.
Yeah, but my only problem with RBI's projections is that they're always wrong on one side, which is they're always overestimating.
Yeah.
You know, as a chartered accountant, we always used to say that whether you overestimate or underestimate, both are wrong from an accounting standpoint. It is very similar. If you're always overestimating, and you're wanting to be safer on one side, I mean, it somewhere tells me that something is not correct.
So then very quickly, 30 seconds, rate action in the second half on the upside or not really?
Possible, but maybe after September. Maybe 25 basis points. But as we stand today and I look at the data, you can even go without a rate hike because the currency is stable now. So the only argument for rate hike was you wanted to use it as a stabilizer for the currency that they've taken care of. And if this is transient, the above 4% is transient and it falls back to 4, then what is the need to do a rate hike?
No, but then one is assuming that crude will stay where it is, continue to trend lower, all of this gets resolved. That is one part.
Are we saying that the government is going to pass on all the crude hikes? Are they in a position? So I'm looking at data, I'm not looking at the sentiments and the side frills. The crude, the CPI calculation is based on the actual petrol diesel price, not what
not
is
the crude
on the
basket or Indian basket or whatever.
The majority of the weight is for food, and
but
I
the
have
price
traveled.
hikes have been taken there.
Yes,
Milk has
but
gone
I have
up,
traveled
rice has
4
gone up.
states in the last 2 months, and I can tell you that pre-monsoon showers are very good. You're not seeing any impact. So the easiest thing for you to check is what is happening to onion potato price. Nothing else you have to see. They haven't gone up. They're actually down from last year.
Okay.
So
inflation is a bit of a boogeyman right now.
Yeah, and I think this El Nino is, I've heard this story many years. I will totally discount it. On the ground, I can't see anything.
We're looking for it in the sky. Yeah.
No, but
I've seen the skies and I'm telling you, I mean, last year I told you the same thing. I can't see 5.9. I could be wrong, but I'm just saying based on the data, 5.9 looks very difficult.
I think Sridhar will say बादल तो होंगे लेकिन बूंदे तो बरसनी चाहिए.
बूंदे ऑलरेडी बरस रही है. बूंदे ऑलरेडी बरस रही है. मैं 4 स्टेट जाके आया हूँ. बूंदे हर जगह बरस रही हैं. जब 45 डिग्रीज में बूंदे नहीं बरसनी चाहिए, बूंदे बरस रही हैं, which is
इन
good.
4 states में consumption का क्या हाल है, mood का क्या हाल है? Because that's also the fear, right? What is happening with the economy on ground, consumption, will Q4 and what we've seen in Q4 results actually.
So I think there are some challenges on consumption. So I will not say that there isn't any challenges on consumption because as your fuel prices go up, there is apprehension that it can go up more. It is a sentiment. So there is some challenges, but it is not as grave as it was made out to be on inflation in the policy, is the point I'm making.
no, and you know what Sridhar is saying with onion prices as well, but it's down. In fact, just last week, I was traveling towards Lonavala side. Their onion prices are actually at 10 rupees a kg. Have you ever seen onion prices at 10 rupees a kg?
I have no reference.
No, I have reference to this.
I need a backstory.
And it was a question mark to my mind as well.
Shopping for onions.
And when I saw that board that onion prices at 10 rupees a kg, it was really, I mean, I haven't seen 10 rupees per kg onions ever.
People buy chikki and fudge.
नहीं अभी
walnut fudge.
हमको देखना पड़ता है ना आजू बाजू when we have Sridhar who's going to 4 states and tracking onion and potato prices.
Talk to us a bit about equity markets. We've talked about debt, inflation, macro. A lot of viewers seeing this will say, "Ye sab to theek hai, beautiful, but portfolios are looking terrible."
Okay, that is the other thing. What is the issue with the equity market? So let me give you data. Okay. Calendar year, we've had 10 straight years of positive returns. Okay, so this is calendar year as of December every year, which is a record by any standards. I have been investing since 93 in the markets. My first 10 years, 5 years were negative years. For 9 years, the markets did nothing. Now, when you take the CAGR of these 10 years, your average is around 12.5%. This is the large cap, which is the Nifty. Now, cut to look at the mid caps. Mid caps are almost at their all-time highs. Last 5 years, CAGR is 20% for a mid cap. So, if a mid cap fund manager would have given you a few percentage points more, if he hasn't, then there is you can have a grudge. But if I'm giving it to a fund manager, I assume that he is doing a good job. Now the problem is that we are used to high returns every year. I mean, we can have a down year. I mean, what is the issue with the markets?
It's a down 2 years. It's a down two and a
No,
half
it
years.
isn't. It isn't. That's what I'm telling you. 26, 25 also was a positive year. You can't have, if the 5-year CAGR is 20%, why should you complain? So my point is, yes, we've had challenging 12 months where earnings haven't been great. I think the problem is the relative returns. That when we are seeing US markets do what they're doing, Korean markets do what they're doing, that is a challenge that we have a FOMO, that ye miss ho gaya. But if I look at standalone the Indian markets, one, we have to accept that these are equity markets. You can't expect positive returns every year. So this may be the first negative year in 11 years. What is so bad about it? I mean, why are we complaining?
No, but I think, the complaint is also because everyone is looking at India as a collateral damage.
So yet
As
our
compared
mid-caps
to your
are
other
giving you 20%
countries.
returns in the last 5 years. It's almost at its all-time high. What is your problem then? Where is the collateral damage?
Vis-a-vis, exactly, vis-a-vis your...
I agree. Vis-a-vis Korea, Taiwan, we have an issue. But I'm just saying that if we keep comparing ourselves with other asset classes, we'll have issue. I'm not saying India doesn't have an issue. All I'm trying to say is that our expectation of returns have become so high that we are not even able to bear one negative year. So that is the point I'm making, that you don't get positive returns in equity markets every year. I started with 5 negative years out of 9, and the markets gave nothing for 9 years. So I think people have to get used to it. Despite all this, markets are giving you returns.
The question is why? Why do you have that negative sentiment? You're talking about it statistically, but that's not taking into consideration that we don't have an AI play, we don't have a large semiconductor company, we don't have a chip maker. The biggest weightage, or one of the biggest weightage in our Nifty, in our top 50 companies, or of a cohort of companies which no one knows whether they will make it to the next leg of technology change or not. It doesn't take into account all of that, Sridhar, to be fair.
It doesn't, and we've spoken about this for many years. 2 years back at your show, I said that we think IT is in a very difficult spot.
Yeah.
And it has played out that way. So we stayed away to a large extent from IT. As we speak, we have split opinions in our office where some people think that
Everywhere
it is deep
there
value.
is a split opinion.
I'm still not in that camp. My point is maybe the index may struggle because you have banks which are going through their own set of issues as we speak, the large banks, because the PSU banks are very aggressive. So 40% of the index is struggling with profitability because one cohort is growing very fast, but then they don't care about the profits. The other cohort is trying to protect its profits, so cannot grow. IT has its own set of challenges, but there are others. So you have manufacturing, which is doing well. Defense is doing well. Pharma, which is doing extremely well. You can pick and choose, which pockets of pharma you want. So if you are constructing a portfolio, there are pockets where you can make money. I'm not saying it is easy, but it is far better today than it was 18 months back because the valuations were really stretched then. At least today, when we look at opportunities, you do find reasonable opportunities in the market. I'm not saying everything is in the large cap. Maybe the top 50, maybe the index may struggle for some more time, but below I'm saying the large cap index, but below the large cap index, there is definitely story and it's showing up in the returns. I'm just saying, you don't have to ask me, you just look at the mid cap index, it's doing well. And if you see the top performers in the mid cap index, you'll see power equipment, you'll see manufacturing, you'll see pharma. So obviously there are stories, there are earnings, and we saw the earnings growth last quarter. So I'm trying to put based on data, I'm trying to put a picture, and I'm accepting that there are challenges for our markets. It is not like everything is perfect, but nothing is perfect always, right? So you find...
Sridhar, we have 30 seconds. Is it almost simple that make a portfolio which has got the exporters because they will benefit out of the currency tailwind that is behind them for the next, behind their sales for the next 12 months?
No, not as simple as that. There are consumption stories also.
Domestic consumption, which you think
so you can find domestic consumption stories. Exporters, the largest exporter is in trouble.
Yeah.
So you have to leave the services export. Yeah. So beyond that, you can look at. But I'm just saying it is not just as simple. You'll find stories even in banks. You'll NBFCs are looking very interesting. Look at the way the housing, low-cost housing finance companies, their price-to-book multiples have collapsed from 5, 6 to literally 2 for ROAs of over 4%. They look very interesting. I mean, I was never a fan of that cohort at all. But now they look very interesting.
Is this the same setup that PSU banks were in 2020 or similar?
I would say similar. Adjusted
okay.
for the ROAs. I mean, if you're getting 4% ROA for this entire cohort and growing at 20%, then they do definitely look interesting. I mean, you can pick and choose the stock you want here. There are 10 of them. There's one coming up for IPO right now. You can pick and choose. There is.
Okay, so a lot of ideas there. It's a positive view coming in from Sridhar. That's great to hear as we wrap up this edition of Editor's Cut. Thank you so much for coming in. And thank you to all of you for joining in. We'll be back here next week, same time, same place.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts
Government's big move to attract foreign investments, capital gains tax scrapped for FPIs investing in government bonds. FIIs will now enjoy zero tax on both interest and capital gains from G6. Rupee makes a sharp comeback, easing all its losses for the week after the RBI unveiled fresh measures to attract foreign capital. Rupee sees best performance in 2 months. RBI keeps repo rate unchanged at 5.25% amid the oil price shock. RBI opts for caution as inflation outlook rises. Market ends above 23,000 mark, slightly changed after a volatile session as investors digest a slew of measures by the government as well as the RBI governor's remarks. on policy. Nifty and Sensex shed 0.7% for the week. Crude eases slightly amid uncertainty and prices steady since yesterday. Trump signals optimism on talks. Brent holds around $94 a barrel, while Israel strikes persist in Lebanon despite ceasefire tensions simmering. Ukraine President Zelensky writes an open letter to Putin for a face-to-face meeting in a renewed bid to end the war, but Kremlin denies seeing the letter yet. The Annamalai BJP breakup is official. Party Saftar quitting. Also BJP and Annamalai eyes new party for 2031 polls. BJP says no loss for the party. VinFast-backed Green SM enters India with all-electric taxi services. Launched in Delhi NCR, betting big on EV mobility as a ride-hailing battle heats up in key urban markets established by Ola and Uber. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and big breaking story at this point. From the macroeconomic perspective, India sees FY26 GDP growth at 7.7%. Estimate was of 7.5%. India's Jan-March GDP rises 7.8%. Estimate was 7.3%. And India's Jan-March GVA rises 7.9%. Estimate of 7.3%. Now remember that Jan's and March farm growth is 3.6% growth, mining growth of 5.4%. And remember, the manufacturing growth comes in at 7.1%. Power, gas account for 4.1%. All right, so those are the numbers really flashing. Estimate of 7.5%, and the actual is at 7.7%. All right, let's take it straight to an economist. Mithali Nikore, founder of Nikore Associates, joins in. Mithali, your first take on the estimates being beaten when it comes to GDP growth.
No, absolutely, Nisha. I think this is really something which we should be really happy about. We should celebrate this, especially given the tough headwinds that we're actually going to be facing in the Q1 of FY26. A strong Q4 of FY25 is what we really needed today. And, what we have seen is that this is really growth which has been driven by a number of, sectors. Consumption, of course, remains one of the key, foundations of this growth. But also we see that agriculture coming in at a stronger number, 3.6 was projected. Now we're seeing a 3.8 and actual coming in over there. Mining really coming in as one of the most important contributors to this growth. And then also the services sector, bucking its trend and also showing very strong numbers. So I think it just shows that the first quarter of the country, of the economy, is really a barometer for India's structural prowess and the structural strength of the Indian economy, which of course has, been taking the onslaught of the West Asia crisis. But it shows us that our basic fundamentals remain extremely strong.
Right. So while, Mithali, we are exuberant about beating the estimates, but let's look at all the parameters. While FY26 GDP growth is at 7.7%, estimates of 7.5%, Jan to March GDP at 7.8% versus 7.3% estimate. While consumption, mining are the big boosters coming in, but it was also only 1 month of the war-related pressure, and that too, the pressure would have trickled into the economy and not onto the data as much. How do you assess that, and also an outlook on what could really come when it comes to GDP in the first quarter of FY27 then?
So I think the first quarter of FY27 is the one whose numbers are the ones that are making a lot of analysts, a lot of economists. I wouldn't say nervous, but we are, disappointed at the fact that the global economy, I wouldn't even say the Indian economy, right? The entire global economy was doing so well. We were seeing record low unemployment in the United States, for example. We were seeing that, in countries like Bangladesh, there was recovery taking place. In several African economies, were posting positive rates of GDP growth. Gulf countries were at an all-time high in terms of foreign investment. So, the overall exuberance in the global economy has been tampered and has been tamed because of this oil price shock. And I do expect that, in this quarter, what we've seen, this strong growth can tide us through for at least 3 more quarters, that is the entirety of 2026 calendar year. And you look at the manufacturing growth, right? The numbers that are coming in, and 11% growth in manufacturing in this quarter, that is absolutely unprecedented, because you look at the previous 6 or 7 quarters and we haven't seen that kind of growth in India, again showing that semiconductors, electronics, some of these new age industries are the ones that have carried India forward.
That's right. In fact, Mithali, it pains to see this kind of a number now, because we know that a large part of that could be really facing some challenges in this first quarter of FY27. So the world has changed. If we could have carried that particular momentum that we are showcasing now in numbers, it would have been a great deal for this whole momentum of even this financial year, as you correctly said. All right. Thank you so much, Mithali, for joining in with your expert take on the GDP numbers and what it really shows about the economy. Moving on, another important top story of the day, India is making a strong pitch for global debt flows by scrapping the taxes on foreign investors' government bond investments. And the centre is really aiming to make Indian G-Secs more competitive in the world market, attractive and also, remember, liquid in global portfolios. Meanwhile, the government has also opened the doors wider for the foreign investors, easing the investment limits and expanding the access routes. Let's listen into what RBI's Governor Sanjay Malhotra had to say on this.
We are expanding the universe of specified securities by including all new issuances of 15, 30 and 40-year tenor G-Secs. Till now, only securities, government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing.
All right, help attract foreign capital, especially in the bond market. So in a sweeping set of tax changes, FIIs will now enjoy zero tax on both interest as well as capital gains from G-Secs. Let's take it across to Shrimi for a detailed breakdown of what this really means for the flows, yields, as well as the rupee movement. Shrimi, tell us.
Of course, the headline move is a full tax exemption for FPIs on the interest income and capital gains from the government securities effective April 1st, 2026. This means that the foreign investors will no longer pay the 12.5 LTCG tax on GSEC, while 20% withholding tax on interest income will also be removed. Now, for the clarity and the benefit of our viewers, just for clarity, that exemption applies to any eligible interest income received or capital gains earned on or after April 1st, 2026, even if the ordinance issued later. A separate notification will ensure that no tax is deducted at source on such income. Now, this two clarity is very important to understand the overall benefit. Now, on the equity front, the government has eased FEMA rules for the persons resident outside India, PROIs. This investment limit for individual PROIs and listed companies has been doubled to 10% from existing 5%. while the aggregate limit for all individual has been raised to 24% from the 10% under the portfolio investment scheme. Now, in the bond market, the government has expanded the fully accessible route to include 15 years, 30 years, 40 years government securities along with the sovereign green bonds. Now, it has removed, several long-standing FPI's restrictions, including, short-term investment limits, your concentration limits, and overall security-wise caps, etc., on the government securities. But one thing we need to keep in mind that overall FPI's investment cap remains unchanged at 6% for central government and 2% for state government bonds. So taken together, of course, the measure represents one of the biggest liberalization step for the foreign investors in the recent year and are aimed at deepening the India's bond market.
That's right. Very well put, Shrimi. Thanks so much for all the details. Now, we also spoke to various industry experts on the government's decision to waive the 12.5% long-term capital gains tax on foreign investments in government bonds. In fact, Axis Bank's Neeraj Gambhir calls it a strong incentive that could attract long-term global inflows into India's 40-year bond market. And Dhruva Advisors Dinesh Kanabar says that the move makes it far easier for the investors to participate in Indian bonds. Listen in.
So I feel that this is a good incentive for the investors to start investing in domestic market. India is one of those few markets where you have long-term bonds, where you have bonds going all the way up to 40 years. Not many economies of the size of India offer that kind of duration, which is very, very attractive to insurance companies. So I feel that you will see some real long-term flows coming in as a result of this.
The fact that there is zero compliance burden, because now I don't need to really file a tax return at all. There is no such thing. I don't need to meet a custodian. I don't need a chartered accountant in India. I need nobody to give me advice. I'm simply sanguine that the interest which I have got is my income, nothing further to be done. And I do wish that even as we look at many of the other things on equity, it's a different subject, of course, altogether, that we are able to provide better certainty and ease of compliance to investors as we are doing for government securities.
All right, so those were the experts talking about what this move can really mean. And the rupee, because of dollar inflows getting attractive, rupee obviously had a sentimental improvement also today on the very first day. Rupee has staged a sharp comeback, easing all its losses for the week after the RBI unveiled the fresh measures to attract foreign capital. Now, the currency strengthened nearly 0.8% today and this week and has slipped below the 95 per dollar mark for the first time since Monday, while easing pressure from the Middle East conflict and RBI support have really boosted the sentiment, and the bigger picture remains challenging. Now, the rupee is still down around 6% against the dollar so far in 2026 and remains nearly 5% weaker compared to the levels seen before the Middle East war erupted. Markets will now watch out whether the foreign inflows can really sustain this kind of a recovery in the Indian currency. All right, from the Reserve Bank of India, while this stole the show when it comes to the reforms to attract the foreign capital in the bond market, but the bigger news definitely is the monetary policy as well. And the RBI has kept the repo rate unchanged at 5.25%, choosing caution over a rate move as global uncertainties really continue to cloud the outlook. Now, Governor Sanjay Malhotra also flagged the risks from elevated crude prices, supply chain disruptions and even geopolitical tensions, while the central bank also revised down its growth forecast and raised its inflation outlook. Listen in.
The Monetary Policy Committee met on the 3rd, 4th and 5th of this month to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate under the LAF unchanged at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. the MPC also decided to continue with the neutral stance.
All right, so that was the RBI governor, and India's growth story may be stronger than official projections suggest. That's the view coming in from now the newly attained role that Neelkant Mishra has got. World Bank's executive director Neelkant Mishra says that RBI's growth estimates appears conservative, with internal assessment really indicating growth could really approach 8%. Listen in to his comments and his views.
On the growth side, I think RBI's forecasts are too conservative. I think the economy is doing far better than what they're building in. But that's the difference, I guess. When they have to be the official forecaster, they may be slightly more conservative. Our expectation, our assessment is that the economy was growing at almost 8% in the Feb-March period. Because of the oil prices going up and some headwinds, it has corrected, just slowed down a bit. Our current rate would be closer to 7% or maybe slightly below. But as the year progresses, and if the oil markets are right, and we say end the year at $80, we may be accelerating above 7%.
All right, and to find out what were the main constituents of the monetary policy today, here are the top takeaways from my colleague Piyush Shukla, right from the RBI's headquarters. Piyush.
The RBI's MPC has announced its final decision to keep the repo rate unchanged at 5.25%. Here are the top 5 key takeaways that we understand from this policy are important. First, the slew of measures that the RBI has announced to bring in more dollars, whether it be allowing FPIs to invest in 15-year, 30-year, 40-year G-Secs as against 10-year G-Sec only earlier, and bearing the hedging cost for banks to raise FCNR deposit of 3 to 5 year tenor. These measures are aimed at boosting foreign inflows. Although the governor said that he does not target any level or they do not estimate any particular amount that will come in, he said that the RBI expects healthy inflows to come in because of these measures. We are aware the government, in tandem working with the RBI, also said that it will remove the taxes for FPIs who are investing in G-Secs. Key takeaway number 2 is that with regard to the tone of RBI MPC, it has shifted. Now we can clearly see a hawkish sort of a tone by the governor. In his initial remarks, he mentioned how global central banks have now pivoted towards rate hikes, and economists also say because of the West Asia conflict going down the financial year in December policy, from December policy onwards, we may start seeing the repo rate being hiked by around 25 to 50 basis points. Now, key takeaway number 3 was that RBI governor specified that India's gold reserves are intact. India has not sold any gold. We have enough forex reserves to tide over the current crisis, and this will be a lesson for future crises as well on how to manage your forex kitty to deal with such external conflicts. Now, key takeaway number 4 is that RBI is yet to get access to Mythos, which is one of the most talked about new AI model in the banking industry. It can spot bugs in a real-time manner, and all the bankers and regulators globally are working towards assessing the threats that this particular new AI model poses and its abilities to extract bugs. Now, key takeaway number 5 is that RBI governor has said that the upper layer category of NBFC list, the updated one, will be issued soon. This is a very important subject because, as we are aware, Tata Sons has applied for a deregistration, and that deadline to list has already passed in September 2025. So we have seen this 7-8 month period where the RBI has actually not commented anything on this front. So it will be interesting to see if Tata Sons' names comes out in the upper layer list of category.
All right, thanks so much, Piyush, for stating that and giving us the takeaways. Well, markets ended Friday's session in the red, with the Nifty slipping nearly 0.2% amid the weakness in metal and IT stocks. And for the week, Nifty fell 0.7%, marking its second consecutive week of losses. Well, the broader markets, they were mixed. The mid-cap 150 index declined 1.2%, snapping a 2-week winning streak. While the small cap 250 gained nearly 0.5% to extend the gains for a third straight week. Amongst the sectors, well, the PSU banks outperformed, while FMCG, pharma, real estate, defense and IT stocks remained under pressure. So not much movement when it comes to the market today, but a lot of work done in the money market as well as bond market and the monetary policy. With that, it's a wrap on this edition of Profit 360, but do keep it with NDTV Profit. Lots of news and views lined up on the other side. Thank you so much.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and war. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Ms. Bhashin, DG PIB, my friends from MOSPI, press and media people. Now this is the presentation after the base year revision. First time we are presenting on Q4 estimates and provisional estimate for 25-26. Next slide, please. In this presentation, it is mainly content is broad methodology, then data sources, then we'll discuss about the quarterly estimates of this Q4, and then overall provisional estimate of 25-26. Now before starting, let's first tell you the brief methodology for quarterly estimates. Next slide. What is done actually here in compilation of quarterly national account, we use that benchmark indicator method. In benchmark, we take the figures from the previous year's estimate and then we quarterize it first, and then after quarterizing, using certain indicator like some high frequency indicator related to that particular sector, we use to estimate that particular quarter's estimate. The indicators we are getting from various ministries, departments, states, private agencies while compiling these estimates. These indicators are very big in numbers, say about 180 to 200 indicators are used, mainly for agriculture and allied. We use the production estimate data from Minister of Agriculture and Family Welfare, then Minister of Fisheries, animal husbandry data. Then for mining, electricity, etc., we use IIP coal, petroleum, natural gas, metallic, non-metallic minerals of IIP electricity, gas, consumption from petroleum and natural gas. For manufacturing, trade, hotel, real estate, professional service, and other services like health and education, etc., we use the listed companies' financial returns data as well as GST for indicator. Then for construction, we use the cement production index from DPIIT, steel consumption from Joint Plan Committee, then IIPs, then for balance of payments data from RBI, then Vahan data, then export-import from DGCIS, food grain bulletin for PFC, GFC, export, import, and also valuables. Then PFN's data for public administration, defense, and net taxes, etc. From IADIR for financial services. Then rail, passenger, goods, air traffic, cargo, handled at ports and from Ministry of Ports, shipping, vehicle sales from SIAM, telecom data, etc. for transport and communication sectors. As well as we are coming out with the constant price estimate. For constant price estimate, we use the granular WPI, CPI and unit value index data. So using these data, we generate the quarterly estimate, and provisional estimate for whole year is essentially sum total of this quarter-wise estimate. Next slide, please. Now, what we have found in the real GDP growth in quarter 4 estimate of 25-26, it is essentially, you can see in the picture graphs that it is a reasonably good growth rate has been found from the quarter 1 to quarter 4, and quarter 2 shown the highest 8.3%, whereas for this quarter 4 figure found to be 7.8%. It is essentially driven by the tertiary sector, which will come later, and all the quarters of FY 25-26 performed well. Next slide. Now, if we see the activity-wise, sector-wise growth in quarter 4, you will see that it is mainly driven by tertiary sector, that is trade, hotel, transport, communication, financial, real estate, which had shown more than 10% growth, as well as the manufacturing sector was also growing reasonably good at 7.3% in quarter 4, and agriculture and allied sector, which was also showing good growth compared to its past quarter 1, 2, 3, that it is about 3.6%, earlier it was 2.6%. Next slide, yes. Now, if we go to the expenditure component, then we will see that major share of expenditure is GFCF and PFC, which is about 85 to 90% share, and GFCF recorded about 10.8% growth, and PFC is 7.1% growth. And export and import was showing 3.7 and 1.9% in quarter 4 respectively in the 25-26. However, this was little bit lower compared to its earlier quarters. Now we turn to the whole financial year. Now, whole financial year, if we compare to SAE, it was 7.6% earlier, which was released on 27 February this year. Now it is, the provisional estimate is coming to 7.7% growth. And the 7.7% growth is consistent, and it is more than 7% is in the last several years. We are seeing that in 23-24 it was 7.2, then 7.1, then 7.6 in the for the same year in second advance estimate. Now, if we see the sector wise, next slide please. The sector wise, then sector wise it is showing that manufacturing sector is showing a reasonably good growth rate, that 10.7%, and double-digit growth was found in the first 3 quarters. Tertiary sector, that is services sector, shown a consistent growth of more than 9% in all the quarters, driven by mainly trade, financial services and professional services. Along with it, growth in agriculture and allied sector also recorded growth rate of 3.0%. Earlier it was 2.7%, and now updated production estimate of crop and fish information have been received, and accordingly the figure is 3.0% for the agriculture and allied sector. Now, if we turn to the expenditure component of this financial year 25-26, that contribution for PFC and GFC is about 89% in overall GDP. PFC is recorded 7.7% compared to 5.8% which was in the previous year. Now, GFCF is the main instrument for growth. It is registered 8.2% growth, higher than 6.4% which was in the previous year. Now, with this more or less estimates are over. Now, along with it, I would like to say that IIP is revised very recently and PPI is also coming. Then we will use this information for the 22-23, 23-24 and 24-25 till in the August estimate, updated estimates will be made available to you. And along with it, we will also provide the detailed methodology stating that quote-unquote sources and methods we say, that will also be made available in August 26. Along with national account statistics of 26 will also come in August. Then the back series, which we are working with, is planned to be made available by the end of this current calendar year. So that's all. Thank you.
Summary results of the fourth quarter 25-26 of the full year data by my colleague in MOSPI. We will now walk you through some of the finer details and also give a flavor of the opportunities and the challenges we face with respect to 26-27. Next slide. So if you look at the growth momentum, this slide was already shared by my MOSPI colleague as well, and the quarterly breakdown, so I don't need to belabor this slide. We saw the post-COVID growth rates of more than 7% in the old series, and we are able to see that in the new series as well. And with the promise of incorporation of PPI and IIP data in August, I'm sure that some of these numbers will look even more well-grounded in in terms of the GDP outcomes. If you look at the granular data, again, was presented by my colleague, but you can see that the gratifying thing is not only the pickup in services sector growth rate, but also the near double digit in 1 year, but more than double digit in the other 2 years in manufacturing share growth rate as well. And if you look at the expenditure components, we can see that the private final consumption expenditure found its footing in FY26, and the more gratifying thing, as in the case of manufacturing, in the bottom left chart, you can see the gross fixed capital formation rate being 8.2%, which is a good pickup. And that continued in the quarterly numbers as well that we saw. So overall, I think it's a balanced picture with respect to the different components of the economy contributing to growth from the GVA perspective and also from the expenditure perspective. Now, obviously, this is the solid backdrop with which the Indian economy began to confront the February 28th West Asia conflict. So as we entered, and in fact, if you recall, on February 27th, Secretary Garg and I were there in the press conference related to the new GDP series. And at that time, I had mentioned that the forecast, or the estimate rather, for FY27, which in the economic survey we had placed at between 6.8 and 7.2, I was revising it to between 7 and 7.4, but then the following day, the conflict opened up. So now obviously we are looking at the various challenges, and the central bank this morning told us that they are revising their estimate from 6.9% down to 6.6 for the real GDP growth in FY27. but with the downside risk attached to it. And they also said that 5.1% will be the inflation rate from CPI headline basis for 26-27, and again attaching an upside risk to that number. That seems to be a fair assessment of the situation by the central bank, and we have no reason to second guess them at this point, because there are both possibilities on the upside and on the downside with respect to the numbers that they had presented us this morning. So if you look at the 4 different challenges we are facing, one is of course the energy shock. The crude oil prices are still in relation to what one could have anticipated. Given the amount of supply disruptions created by the conflict, the Brent crude is still trading below $100 in the financial futures contracts. But we also hear of a lot of physical market prices being much higher. At the same time, we also hear stories about a complete reduction in the imports of crude oil by China and a drawdown of inventory by the United States, etc., all of which are contributing to oil prices staying below the 3-figure mark. But will it continue to stay below the 3-figure mark and continue to decline as the financial futures contract suggests? Or will supply disruptions come into prominence in the second half of the Indian financial year, leading to much higher prices? And that will determine the course of both growth and inflation outcomes, not only in India but elsewhere in the world, both for calendar year 2026 and for FY27 as far as India is concerned. And what our government has been able to do is to ensure adequate availability of all necessary petroleum and petrochemical ingredients for the real sector. It is the prices that are globally determined that remain the uncertain factor. And the tanker traffic is still relatively scarce, almost close to non-existent. And the fact that 3 months into the conflict, there is no clear apparent pathway to a resolution, after which the removal of the mines in the strait will take place, and after which it will be open for tanker traffic, and then the supply disruptions in the petroleum and petrochemical complexes in the Gulf area will have to be restored before pre-February 28 normalcy, both in terms of production, export, and tanker traffic can be restored. So you can imagine the uncertainties embedded in all these stages that need to happen for the global economy and the Indian economy to be restored to the pre-February 28 kind of arrangement in terms of flows of energy across the world. So in fact, one of the things we closely follow is the US Department of Energy's Energy Information Administration, EIA, puts out a short-term energy outlook. And it is a monthly publication. In fact, the next one will be due next week. Now, what is interesting or rather concerning, depending on one's perspective, the supply disruption that they estimated for in the month of April, especially for the 3rd quarter and the 4th quarter. In April, the estimate was that 2.2 million barrels per day of oil supply would remain disrupted. In the May edition of the short-term energy outlook, they increased that number to 6.4 million barrels per day. So 3x increase. For the 4th quarter, they had estimated a near normalization of the oil supplies in the world. But now they have estimated that the supply disruption will still be of the order of magnitude of 1.7 million barrels per day, which is a 10x increase. So given this kind of massive increase or upward revision to supply disruption numbers, we have to be mindful of the fact that the oil price remains still a big question mark as we go into the second half of the calendar year and 3 quarters of the financial year as far as India is concerned. But nonetheless, at the same time, as is the case with respect to global trade, there are positive surprises that global trade has remained resilient. Indian exports have remained resilient in the month of April. That is what the trade statistics tells us, because the core exports, if we take away the petroleum products and gems and jewelry exports, the export growth rate of merchandise was in double digits. and so was services sector exports. So, and early indications for May also suggest that exports performance remains strong, which is something not we would have expected given the disruption to global trade flows because of the strait. So there are a lot of things that are happening, moving parts, which we don't fully comprehend, both positive and negative. Therefore, it will be premature to come to conclusions about the direction that growth and inflation outcomes would take. And that is why we would refrain from giving point estimates at this stage from the Ministry of Finance side, but refer to the RBI's numbers released this morning as the base and work with their assumptions and downside and upside risks as stated by them.
Chief Economic Advisor of the country, and he was talking about the GDP numbers and where all the growth really came in from, beating the estimates for the last financial year and especially the last quarter of FY26 has been a good news for the Indian economy. But remember, the projections that have been shared by the RBI are the projections which takes into account the impact of West Asia crisis and has been projected downwards. Dipti Deshpande, Principal Economist at CRISIL, joins in. Dipti, what do you make of first the numbers? And of course, that was a different economy altogether with different factors and pain points as well. But now with West Asia crisis, the new projected numbers, and how do you see the state of the economy on GDP front?
Sure, Nisha. Thank you for having me. Of course, it was a pleasant surprise to see that the FY26 number has been revised up, even though marginally. When you look at the internals, I believe it tells you a little more on the momentum of the economy. One is the underlying momentum, which will provide some sort of tailwinds, which will provide some sort of a cushion. At the same time, I think we've entered this fiscal year with two exogenous shocks, which are completely out of hand for us. Number one is naturally the West Asia shock, which, if I may say so, began as a supply shock in a way, but has quickly morphed into a price shock, something that's going to linger through the rest of the year and maybe a little beyond that as well. The second shock essentially is on the monsoon front, where we know relatively little about. We know for sure that it's going to be below normal. Beyond that, it's also important in terms of understanding how uneven it's going to be, how El Nino is going to make it more patchy, if at all, or if there are some counterbalancing forces. So clearly, I think there are these two forces which are going to play a role. And as they play a role, our estimate is that this year, FY27, we will see about growth at about 6.6% or so. Much of it comes in because of this hit. There will be some production related hits, that we see in Q1. So Q1 of FY27, in fact, will be a bigger growth number to really talk about, because it will have both forces from both sides playing out. One is the fact that supply shortages will lead to some downside on production. Number two, towards the end of the, this particular quarter, we will see prices having an impact. So when you look at GVA, which is gross value added, that should also look much more slower in terms of growth when you compare it to the previous quarters.
That's right.
Having said, yeah.
So Deepti, a very important PowerPoint that you touched upon. Of course, as I am seeing it, the full impact of the war crisis will impact us in the first quarter of FY27. And the next quarter, that is Q2, will have a large part of the El Nino as well as the lower than expected, lower than normal monsoon. How do you see the two quarters and what could be the in-house projection on the GDP numbers, Deepti?
So our GDP numbers are pretty much aligned with what the RBI also rolled out. They would be around 6.5% or so in the first half. I think we are speaking about the supply side factors when we talk about the West Asia impact, and we speak about the monsoon impact as well. But equally important is that the first half of this fiscal will see support on the demand front. Why do I say so? Is because we have tailwinds from IT reductions of last year, GST reductions of last year, as a result of which those remain supportive of demand at least until the first half of this particular fiscal. To add to that, we've seen the gross fixed capital formation number, and we believe government spending, capex spending will remain robust this year too. The other factor which is also pretty important, especially given the fact that we're talking about higher retail inflation, purchasing power and all of that, is that we have about 16, 17 states delivering large cash transfers to the populace. And I think all of these are demand supporters in some way or the other. So yes, I think this year is going to be a complex year where supply shortages, price increases, etc., will have an impact on purchasing power and demand to some extent. However, some of the tailwinds from fiscal measures already announced last year will provide that downside to growth. Having said that, our 6.6% GDP growth also has downside risks to it, and all of that essentially depend upon these two exogenous factors that I mentioned about.
All right, Deepthi, many factors to really watch out for. But of course, next 2 quarters, GDP numbers would be on the watch with many factors impacting it. And thank you so much for giving us that snapshot of your expert take on the GDP numbers that have been. It's a beat. It's a time to probably celebrate, but the world has changed with many external factors impacting the economy. And therefore, the GDP estimates that have been incorporating the West Asia crisis, as has been stated by the Reserve Bank of India. With that, it's a wrap on this show, but keep it with NDTV Profit. Thank you so much for tuning in.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
Out of the many topics that we have conversations about on this platform, there's one that is by far and away the most divisive, and that is real estate. You say that for a large number of people, at least till they're of a certain age, it makes more sense for them to rent than to buy, and you'll have thousands of people telling you that you have no idea what you're talking about. And yet, the buying of a house is fraught with danger. And that is because it is very likely to be the most that you will pay for anything in your life. I've been looking forward to this conversation on MoneyWise, and that is because the person that I'm going to speak to has significant insight on real estate that I'm definitely going to benefit from, and I think you can too. Vishal Bhargav, a real estate media professional and host of our newest show, The Habitat, joining me today. Vishal, thanks so much for taking the time.
Thank you, Alex.
So let me start at this, at the question, right? There is this tendency, like any other asset class, to paint real estate with the same brush. Should you definitely not do that?
Well, you can't do that. Just like in stocks, you have your small cap, mid cap, large cap. In real estate, it's broken down into many more segments. So there's at the country, then city, within a city, micro markets, within micro markets, even a building. So you have to be very careful as to how you assess a market. Can you do it with a broad brush? Absolutely not. But there are some inherent patterns that in a way govern all the real estate micro markets and possibly sometimes the entire city as well.
What are those common factors? Because ultimately, obviously, ultimately it is real estate.
So see, the biggest factor is sentiment. Okay, real estate is sentiment. If you feel optimistic about the future, you will buy. If you feel pessimistic about the future, you most likely will delay or not buy. So sentiment overrides everything. So sentiment is the deal breaker, okay, or the deal maker in many cases. After that, it comes across as to, is there a good project for me? Is there a good builder for me? Is there a good price for me? Invariably, all those three never come together, okay. But you have to do the compromise. It's like the impossible trinity. You have to see maybe 2 out of 3 work. If 2 out of 3 work, most times the job gets done to the satisfaction of the developer and the buyer.
Very interesting that you're saying that. So therefore, while there are commonalities between real estate and other asset classes, and you drew parallel to equity, can it be said, however, that you have to look at it differently? In that, if I look at a real estate project, can I compare it to what Warren Buffett says about equity? You buy when others are fearful and you sell when others are greedy. Does it work like that?
I would discourage people from that philosophy. See, the thing is, I'm sure the legendary stock investor has a very nuanced reason for his point of view. In real estate, I would suggest when things are really shaky, you should behave like a rat. You jump. Okay? Because in real estate,
the cycle to recovery is very long, painful, and it is fraught with too many legal complications. Unlike in equity, where you buy a stock and there is scope to, in a way, liquidate some part at whatever price point.
Yeah.
In real estate, it's one asset. You either have that or you don't have that.
Yeah.
So you're all in.
Yeah.
So you got to be very careful when you get in, because getting out is very tough. In this regard, I will disagree with the legendary investor for real estate. The way you should have to approach real estate is, if I have to give it a stock market analogy, and since yours is a stock market platform, is that if you're buying a under construction property at an early stage, think of it that you're buying a small cap stock.
Okay.
There is a healthy upside, but there's a healthy amount of risk as well. Then if you buy it at a mid-level construction stage, think you're buying like a mid-cap stock. Okay.
Interesting.
And then if you're buying it at almost completion, you're buying a blue chip stock. The upside is very limited, but it's more, you want steady appreciation, so on and so forth. Once you buy it after OC or after completion, think of it like a fixed deposit. It can't go wrong, but it'll give you those sort of returns. Inflation index in a way.
Interesting. So therefore, I think the original objective when you're buying the real estate needs to be identified. Are you buying it because you want to live in it? Or are you buying it because you want to diversify, or you think that real estate is the next best investment to make? Can real estate be an amazing investment in the residential market in India?
So residential market, it can be, but it's very tough. It's not as easy to find a very good residential opportunity in terms of investment in the Indian sphere. The best investment opportunity invariably comes across in land.
Sure.
Okay. Because the cycle is pretty simple, that if you first buy it in, one guy buys it in land, then he sells it in square meters, then the eventual guy buys it in square feet. The big play happens over there, right?
Yeah.
You buy it in one denomination, the price optically looks lower when you buy it in per square feet. So in that regard, I think the clear focus, if someone has to buy residential real estate, he has to be able to pick those hidden gems. And there are like 2 or 3 formulas that are there, but not too many beyond that. And somebody will often think that, is it worth taking the risk when the return is not substantial, but the risk is high?
So why do you say, though, that residential real estate, the opportunities don't exist? Because, look, the stories are galore, right? And everybody has anecdotal evidence of that. One family member that comes to the party and says, "मैंने 1998 में घर इस value में खरीदा था, अभी देखो, it is so many crores." It doesn't work that way, does it?
No, it works that way. See, the thing is, we only hear about the good stories.
Yeah.
We don't hear about the bad stories, because, there is... Everybody likes to talk about their successes. So that same relative uncle who says, I made 5x by buying this property, he probably won't tell you that he bought a piece of land that is now stuck in litigation.
Right.
So what happens is, because people don't talk about the negative stories, it becomes a self-perpetuating narrative. Because everybody is saying that, only good stories. Because the bad stories invariably come out only when shit has hit the floor, right? The only time, see, one of the problems in real estate is that, and I say this about scandals a lot, that in real estate, 9 out of the 10 scandals don't ever come in the public domain, because it becomes in the interest of the home buyer to not make it public, even though he knows he's been scammed.
What are the kind of stuff that you've come across?
So see, one very interesting one that I found was, just when somebody buys a home, there's an architect certificate you have to get to make sure that you do your next disbursement. Okay, because payment happens based on slab, right?
Yeah.
So somebody says, now 10 slab is there, so make the next disbursement. Then 13 slab is done, 13 floor is done, so make the next payment. One very interesting case I saw in Mumbai some time back, where the architect certificate was only forged, the person paid up to the 20th floor, but the building was at the plinth, was at the ground floor.
But didn't they go and check?
See, okay, now I know a lot of people say this, that buyers should check, but the buyer's point of view is, and I don't fault the buyer for this, is that one is the builder is giving you the document, the architect is providing that document, which should have sanctity, otherwise he can lose his license. The lender has been given this document, so somebody in that chain would have ideally verified.
Sure.
But everybody thinks that the other one will do it. But the one holding the can is the buyer.
My goodness. I wanted to talk to you about risks, and I think this is an opportune moment to do that. You likened buying an under construction property like buying a small cap, and I think to a large extent people won't really relate the two, because let's face it, and Vishal, you probably know about this, we're going to say it anyway,
after COVID-19, people bought a lot of small caps. And, they've borne the brunt of that over the last 2.5 years because the small cap space as a whole has gone through its own cycle. So maybe that's not an analogy that's going to hit. So basically you're saying that it's fraught with risk. It's a lot of risk. Why do you say that?
See, early stage under construction, to be fair, you can't blame in India developers also to a large extent. I know a lot of people think I'm very anti-developer. I'm not anti-developer. But when you're buying under construction, invariably, there are so many variables for a developer also. There is some government guideline, there's some judiciary regulation, there is some green tribunal who says something, and the project comes to a halt. Okay, like last year, example, we didn't see many launches in Mumbai because of a environment clearance holding up projects beyond a certain size.
Sure.
Now people have factored in that I'll take up this project, I'll launch it on so and so date. But what do you do when there's a regulation that blocks you from doing it for 6 to 9 months? So it's partly the developer's fault. To the extent that he doesn't plan his finances. But there are many things outside of his control that come into play. And if you buy early and the project gets stuck for a year, the typical model you have to go in your head, at least now in Mumbai real estate, is that if your project is stuck for more than a year and a half, there is a very strong likelihood the developer will not make any money in the project. Sure. And if he'll not make money in the project, there's a very good likelihood that he'll compromise on the project, either in the quality or in the delivery.
Okay. But aren't you protected by the RERA, by the Real Estate Regulatory Authority Act?
See, RERA has been a boon for the real estate industry, for the home buyer. But see, RERA is still a quasi-judicial body. It doesn't have enforcement powers. And one of the unfortunate realities about Indian real estate is that many developers have a bigger legal team than a construction team. So they don't mind fighting it out in court, even if RERA rules against them.
Oh.
So RERA is, I'll put it this way, RERA provides you limited safeguards. Is it completely useless as many of the critics say? No. But is it that, is it the silver bullet that has come to the rescue of home buyers? Absolutely not.
Okay. The reason why people gravitate towards buying under construction property, ultimately, my judgment, and you tell me if I'm right, is affordability. And the fact that it's available at a significant discount to what you would get. And you liken that for good reason to buying various types of investments, right? Limited upside. Some people take a punt, and you probably have good understanding of that in certain micro markets. But a lot of people in Mumbai, in certain other pockets, will do so because there's a very big difference. Is affordability a major problem in metro cities?
See, affordability is a very big challenge. The biggest challenge is there in Mumbai and Gurgaon. Gurgaon more than Mumbai, I'll say at this point of time. But see, a lot of people buy homes at under construction stage because they have this illusion that under construction homes are distinctly cheaper than ready homes.
Are they?
So, in many cases they're not. I'll put it that way. And they are not, the gap is not as wide as people perceive it to be. Okay? Because when you buy something at under construction, you have to be very, very clear. I mean, in my experience or my knowledge, I'll say that unless you expect your current price at under construction to be at least a 30% discount to the expected final price, don't buy it. Because that 30% is the least amount of cushion you should have for taking that risk.
Let me ask you this, okay, what is the normal, I guess it would be different based on different sizes of construction, but if you're talking about a normal construction in the city of Mumbai or in Gurgaon or in Bengaluru, what is the normal time for the completion of a project?
See, Mumbai is the longest because we go very tall.
Okay.
And if you go very tall, you have to first go very down in the foundation.
Right. Yeah.
So I think for a 60-floor building in Mumbai, it'll take about 5 years.
5 years, okay.
Gurgaon
from the breaking of ground to everything, approvals and all of it.
Gurgaon is bonkers. Gurgaon will do that same thing for maybe 30-floor buildings. Okay?
Oh, okay.
But then Gurgaon has a different ecosystem in terms of the model that they follow. In Mumbai, the builder constructs for the end user.
Sure.
So he wants a home quickly.
Right.
In Gurgaon, the builder constructs for the trader or the investor who wants the cycle to be longer so that he can exit.
Ah, okay.
So Bangalore, in my view, is the best actually. Bangalore.
Because it's quickest, you're saying?
It's quickest. So Bangalore, in a way, tells you where Gurgaon lacks.
Okay.
Because you have similar number of stories typically done, 30 floors, 35 floors. They do it very quickly.
In 3 years.
3 years, fast, very high efficiency, and they get the job done. They don't spend too much time in advertising first day sellout and bonanza, some Bollywood actor dancing at the ceremonies and all. They're very clinical in the operation. So I think if you have to ask me one market that most major cities should learn from, in my view, it will be like a Bangalore or a Pune.
So here's the thing, right? And my follow-up question to that: if you're talking about a good developer, and this idea that you're not going to get an option or opportunity down the line, if you don't book a flat in the opening stage, it's going to get sold out. Is that a fallacy?
Yeah, that is
artificial scarcity.
No, there's no scarcity. I'll put it that way.
Artificial or otherwise.
There's no this. See, the thing is, you're talking about Mumbai here. You're talking
Mumbai generally.
See, okay, I'll put it this way. In Mumbai, there is no artificial scarcity. Okay, there's no scarcity. Developers are very clear as to how much is sold out, how much is unsold. Okay, which is why we don't see too many of these first day sellout boards over here, right? Gurgaon is the opposite. I agree. If your reference is to Gurgaon, in that I agree.
True.
That I agree. Because the thing is, you have to create artificial scarcity for the belief or the narrative to be in the air that there's no supply, and suddenly I hold that one unit and every unit becomes more valuable because of that. So you have to think of, in a way, Gurgaon real estate like how, the old time movie theaters used to announce sold out, house full.
Sure.
It is house full, but outside the black market is selling.
Sure.
Okay. Now, I'm not saying that the trader is a black marketeer, but the illusion has been there. This is a house full movie. That means it's a hit. But outside, you're getting lots of stock.
Or an automotive company saying, first day I'm opening my thing for 30 minutes. Oh, I'm sold out. You could have actually produced more units.
You could have. True. So here, it's similar to that. You have to create that FOMO and all. But every city goes through that. Okay. A few weeks back, I was chatting with Prestige Irfan Razak, and he was telling me that in the 90s they had the same stunt that they tried, but they've learned that it backfires over a period of time, because it's eventually, iski tope uske sar.
Sure.
In that regard, if you are stuck, you don't get the money, the project goes to a limbo.
Yeah.
So Gurgaon will also learn and adapt to it.
Okay, so the purpose of that conversation, the last two questions rather, was the opportunity cost. In economics, in personal finance, ultimately that's the first thing you will look at. If I'm not going to book a project at that early stage and wait for that 3.5, 4, 5 years, what would you do with that money? So you can actually invest it in a mutual fund or otherwise, and spend that 5 years, even if you get a 10 to 11% compounded rate over the next 3 to 5 years, you're well placed, and you can then take a loan down the line, and you're well served, aren't you?
You can. The only difference between equity and real estate in this regard is that in equity you have to put all the entire investment upfront to get that return.
Yeah.
In a real estate project, you buy a 2 crore home by putting in 40
leverage.
Lakhs. Yeah, so you're getting, if it goes up 10%, you're making 20 lakh rupees on a 40 lakh investment.
Yeah.
So the other reason people buy early is because they say, I want my choice of inventory. To be honest, I've never quite understood this reality, when people say, I want it for my inventory. There's so many buildings coming across. You want exactly that particular, I want 9th floor, this facing that. I mean, I don't believe most people when they tell me that I did it because of inventory reasons. Most of the times it's actually the price or the illusion that you're getting at a lower price for people to get into it.
So let's talk about price, because this is assuming that prices will always go up and will never fall. Is that true?
Anyone who tells you that prices never fall is either a broker or does not know real estate. Okay. So, in fact, I often tell people that the way to check who's a good broker is that ask him this question. Do real estate prices ever fall? If he says no, they never fall, he's not your broker. Get out of the room, find another broker.
Run away.
Because then you have to know if somebody's a broker, whose side is he on? Because if he's on your side, he will always
get you the best price.
He'll get the best price. But if he tells you that prices only rise, then you know he's not batting on your behalf, because he'll tell you whatever price is available to you, buy it now, because it'll only rise.
Right.
So be wary of the broker who tells you that home prices never fall.
But okay, so never fall. When are the instances that you've seen big falls, right? You've seen it in micro markets, certainly. Around the financial crisis, the global financial crisis, there was a crash and then it got bought into, and that rebound took place very quickly. I don't know, did it happen COVID? I don't think it did happen COVID-19. You haven't seen big falls, right?
No. So, okay. 2008, that was a sharp hit that happened. Then from 2015 onwards, we saw what I call painful death or slow death.
So time-wise correction.
Time-wise correction, but that hurts more than an instant shot.
Yeah.
Okay. What happens in that case is that it's, when you get an instant shot, you have to bounce back. What is more painful for a developer often is, that hope. Next month will get better, and it never gets better. It's like that. It's like that patient who's there in hospital for so long, hoping he'll recover. He doesn't recover. Yeah. It's painful. It's expensive.
Yeah.
Versus somebody who gets in, gets the surgery done, gets out, gets back healthy. Sure. So we saw that phase between 2015 to 2020. In COVID, for the first 6 months, things fell off very sharply. Sure. The type of deals that have come to buyers.
Oh yeah, they did actually, because there was panic at that time.
There was panic. They sold, and I think builders behaved for the first time in at least my memory. They behaved very nimble-footedly. They gave good deals, good offers.
I remember the conversations were, you sit across the table and we'll give you a good deal. It was not advertisements in the paper saying, hey, discount sale, etc. But you sit across the table and say, you know what, give me 5% less, 10% less. I'll pay upfront, etc.
Yeah, so I think, to be honest, right now we're also in the same zone. Okay,
right? We are.
We're already in the same
Interesting.
zone. Because see...
In Mumbai or?
In Mumbai, Gurgaon. Okay. For them. In smaller markets, even more actually. See, the thing is, in most of these markets, you have to be very careful as to how you really judge your developer. One of my big disappointments with the COVID has been that, I saw that brief phase where I noticed many developers becoming very humble and very buyer-driven. Unfortunately, what happened is in 21, the market sort of started recovering, and 22, 23, it was strong. So most builders escaped the that pain, and they've in a way gone back to that old zone of treating buyers as very dispensable players in the ecosystem. But for that 6 or 7 month period, I could see that builders were introspective. We should have treated the buyer better. We should have committed right. We should have. But right now, if you talk to the same people who were giving those conversations on webinars, their tune has changed fully. They've gone back to that same arrogance that created the crisis in the first place.
So, out of the impossible trinity, one of the factors, of course, was choosing your developer. And a lot of people gravitate towards the tried and tested. There are a few that are blue chip names, so to speak, for good reason. Are you taking a significant risk by choosing to not go, because they command a premium as well, Vishal?
See, blue chip I'll tell you what. A blue chip in Indian real estate does not mean you'll get a great product.
Okay.
It just means you'll get the product.
Okay, you're guaranteed of delivery.
You're guaranteed of delivery, not the quality of the delivery.
Okay.
And the proof of that is in one of the largest developers who's listed also on the stock exchange, having constant issues on his product quality that his buyers have been raging about, both in Mumbai and in Gurgaon. Okay. So it is unfortunately, the benchmark of an Indian home buyer is so low that he thinks mere delivery of the house is an achievement, which is why that premium versus a branded developer versus an unbranded developer can be as much as 25 to 30%.
Yeah.
But when you get the product, you don't feel that.
Yeah.
Which is why there's this backlash from home buyers who think that, I paid 30% extra, and what do I get? The tile peeling off from here, the construction quality being weak. So I think this is the next stage of the evolution of real estate, where I think branded developers will have to learn that just giving homes to the buyer will not be enough. I'll have to raise the quality as well.
So therefore, and I'm sure that there are plenty of unbranded developers that are giving very good quality at this point. How do you find them?
So see, every branded developer is not a good developer, but every unbranded developer is not a bad developer.
Sure, yeah.
Okay. So you have to go and look at the track record. Many of these unbranded developers don't believe in spending money on marketing, branding.
Word of mouth.
You have to go and see his last 5 buildings. I think that's, there are only 3 or 4 ways you can segment how to choose. One is, if I want to know the track record, go and see his last few buildings. I'll know what is to be done. If I want to know his intent, read the legal agreement between the builder and the buyer. In that, you'll always find enough clauses that will give you suspicion as to why is he putting that there in the agreement. He has a plan B, plan C, plan D. If you want to know the developer's financials, his capital capability, go to that developer's lenders to understand what rate they are giving him money, what terms he's giving him money.
Yeah.
If it is something very, very expensive, you know they have a very high risk placed on the developer. You should have the same risk placed on him.
How much do you have to peruse the documentation in that? The original plan, the sanctioned plan, what has actually come through? Because I've heard of stories where one balcony is shaved off or something is gone from the original sanctioned plan and now that's no longer there. That happens quite a bit, doesn't it?
That doesn't happen as much now, though
it used to happen.
Yeah. I agree with you. It used to happen. See, earlier it was the Wild West. In that regard, I think RERA has played a very strong role in ensuring that we have at least got our plans in place. People still make some changes if they get consent of the home buyers, to arrange things. And see, unfortunately, what happens, most home buyers give a consent because after a certain stage of construction of the project, the home buyers have more skin in the project than the builder himself.
Yeah.
So it's one of those very ironical dilemmas where, he is the developer, it's your money, but he has more power.
So coming to the last part of this conversation, which is that real estate, and you mentioned this as well, liquidity is a big issue, right? And if you're investing in real estate, you're not guaranteed your price because ultimately beauty is in the eye of the beholder, and the buyer will always come and say, hey, you know what, this is not working for me. I'm getting a new property at XYZ, so why should I buy this? Give me a 20% discount or 15% discount. Depending on your desperation, you will agree with it. Any advice for people looking to sell in the secondary market?
See, if you're looking to sell, you should always, the first problem comes is you have been told a wrong price about the value of your apartment. Okay. You think your value of your apartment is 5 crores. Okay. Who tells you that? Your broker.
Right.
Okay. But the thing is, you have to tell your broker, you don't have to tell your broker whether he's the buyer or the seller. Okay. If you tell you are the buyer, he'll tell you the high price. If you say the seller, it's a low price.
Right.
So you have to know how to get your message out to know the true value of the property. Most times buyers go wrong is that they believe their value is overpriced because some bugger has told them, "Arey, your rate should be 5 crore or 3 crore or 2 crore." And that's not the real rate.
Yeah, it's inflated.
And the true test of your property is when the broker tells you now your property value is 3 crore. Said, okay, I'm okay selling it for 2 crore 98 lakhs. Get me a buyer. Most times I've seen the broker can't manage that. Then he will spin those stories. Market is very low. There's this Iran war going on. Crude prices have gone higher. There's so much supply in the market. Interest rates are going to go up. Blah, blah, blah. Then the stories come on. But the way you have to judge it is that you have to believe no one. You have to talk to enough people and then get a calculated perspective on what your value holds. Don't be needlessly greedy. Most cases I've known where buyers go wrong, the property value is 2 crores. They stick on to 2 crores for 2 years, 3 years, 4 years and gets that same amount.
Yeah.
If you believe your property will not appreciate meaningfully, sell today, get out. The opportunity cost is very high. Yeah, it's very high.
That's the bottom line. It's been a fabulous conversation, Vishal. Thanks so much for taking the time. And I'm looking forward to seeing more episodes of The Habitat. And I'm sure everybody else tuning in is as well. Well, like I said, that brings us to the end of this edition of MoneyWise. Thanks so much for tuning in and stay tuned. Lots more coming up on NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
we'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Well, hello and welcome to our special offering on Fridays, the Editor's Cut, wherein we try and talk about what we think as the key outcome of the developments that have happened in the week, and then get in our guest editor to try and weigh in on whether she or he agrees with the three argumentative Indians on this table or not. And guys,
speak for yourself. I agree with everyone.
Yeah, well, I can safely say first-hand experience that that's not true. No, but frankly, if we thought that we want to talk about the week, Friday told us that you might as well talk only about Friday and you will end up talking about the week. So in some sense, for me, the key takeaways as I looked through the week, and I heard you guys say that the mid-cap index has had a bit of a profit booking, so the parallel bull market this week has not turned out to be true, but the big expectation was the policy, and I think the policy was an expected line. So policy was an expected lines per se, the hold, etc., but the moves on taxation are really, really encouraging. And our cheat sheet, because I was talking to Sridhar Shriram just before the show started, you guys were anchoring, and the numbers that he has in store for what the inflows could be like are very, very encouraging. So that is one good thing. I would suspect, and I don't know how you guys think about it, but I would suspect that we'll probably have a series of other steps accompanying this, which might help the inflows and the sentiment. Though there's a story that's floating around what could happen for brokerages in terms of margin funding and the capital that they put in, etc., and stuff like that. And if that were to turn out to be true, it could be an overhang for that particular
You mean
sector.
the margin trading facility deadline?
Yes.
On 1st July. But that's confirmed.
Yeah.
It's not being extended.
And the other moves that come in for prop trading, etc., and the capital that they have to put up, if all of that turns out to be true, it's a bit of a problem. So therefore, the simplest argument that almost everybody's making on the street is the rupee depreciation brings about losers. Don't focus on them. Look at the gainers, look at winners which benefit out of the rupee, and therefore look at the exporters, look at textiles, look at auto ancillaries, maybe at some point of time look at IT. I think that seems to be the simplest investment argument that one can make right now.
You know, to some extent, yes. But the way I was looking at it is, with the measures that have been announced, you are seeing a structure which is strengthening. And from what Tamanna just started off, India Market Close as well, where she categorically highlighted as well, which is absolutely right, that the markets are not really looking at the positive picture yet. And that's the reason why we saw profit booking. Because if you see the euphoria that we've seen pre-policy, somewhere you can say the markets have given that away to some extent, because we've traded actually kind of at a razor's edge, is what I would say, in the last 4 or 5 trading sessions. Now, there have been defensive capital shifts that are happening as well in terms of individual sectors. Look at metals and tech. Both of them high-flying sectors, they've given away gains. Your multi-sector rally that you were seeing has given out a breather right now. So that's from the market side of it. Now, if you look at the RBI, it's kind of a reality check as well, because your multi-billion-dollar regulatory and tax relief package that has come in for the FIIs. However, the unanimous decision that we're talking about, to add to that, you've slashed your growth outlook for FY27. You've increased your inflation forecast. So the counter argument to that is, on growth and inflation front, are the FIs, if they're going to come into the country, are they going to be okay with that kind of a structure? That's the argument where everyone is talking about right now, and the ifs and the buts. But yes, the structure, the path that they are taking in terms of the RBI is absolutely positive. But the moment other measures do come in, that's when probably there will be an answer to this question.
But the standalone is good, right? I mean, what they've done, standalone
it is
a really good move.
I think people are obfuscating what they want with what they need. Okay, so let me explain this. And this happens sometimes because you want to eat mithai, but actually you need salad. So it might be a weird comparison, but what the market wants is LTCG hata do, make things very attractive. You know, you want that cheesecake served to you. What you need as a nation is a high fiber diet. And you know, I'm thinking about that because I'm going into the weekend, which is always very tough. So pardon me for that. But you need to get a good, steady diet of protein, which will keep you going. That's what this kind of foreign flows will look like. So, I mean, here's my take for the week. India's countermeasures, in my view, have just begun. And I completely agree with you, Neeraj. In fact, a lot of reports during the round, the top ministries have been asked to compile information on what we are doing, and there will be a lot more in the coming week from India's side officially that, hey, here's our plan. We've been quiet so far as a nation onto what our plan is to save the economy. There haven't been much out there publicly. I think that's about to change. Today was just day one. The fact that this measure, which we saw today, was bought in by an ordinance, in my view, is significant because it shows that there's urgency but not desperation. Why do I say that? Because the way they choose, the form and fashion in the way they chose to communicate is also important. It was through the Reserve Bank of India's monetary policy and the measures that they are taking. Remember, the ordinance and the Gazette came out at the same time as the governor was giving out his speech. So that also tells me that there will be a very calibrated move to put out this information and this communication to the wider cohort of global investors that India is now talking to. I honestly believe that the significance of this PROI announcement has been overlooked by markets today. What is PROI? Person residing out of India. And this individual entity can now invest 10% in a listed entity instead of 5% earlier. This is mistakenly by some being likened to the NRI bonds scheme of 2013, saying we're coming back with it. Well, it's not, because your cohort of beneficiaries is now beyond NRIs or anyone related to India, right? It's person residing outside India. Technically, that could be anybody, any individual entity, and not just a non-resident. And that increases access to capital markets and goes beyond a high-yielding debt instrument for the rupee, the way we saw in 2013. When we're talking about the rupee, we saw a huge recovery. I mean, that was the star of the show today, going past, strengthening past 95.
You can call it the standout victory of the week, I would say, probably.
Yeah, in one day, you know, some of that pain was over. For whoever is planning to buy dollars and travel in the next few days, good for you, and too bad if you've already done that exchange. But anyway, that's on a lighter note. I truly believe that recovery journey may have just begun, and this is unlikely, what we've seen so far, to be the only weapon in the government's arsenal. Expect more fireworks in the days to come. And that's something we'll be speaking to Sridhar Sivaram in a bit just now as well, and he's just walking in as we're seeing. But you know, even as we're talking only about Friday, because Friday was such a banger of a day, what an interesting week it has been, because it has been, as we've been calling it, conference season. We've been meeting so many investors, and one of the top market guys I met at one of the recent investor meets, it was a corporate investor meet, I asked, itna mood kyun kharab hai market ka? The answer was कहाँ खराब है? कहाँ है मंदी? मुझे तो नहीं दिख रही है. That's not necessarily what everyone is saying. Many people are a little muted, but is that the right answer or not? I don't know. Sridhar, hi, welcome.
Hi.
Welcome, please.
Thanks for inviting me.
This is how we do it at NDTV Profit. We capture you coming all the way in, and thank you so much for being here.
No, thanks for inviting me.
Has the RBI and the government of India actually over-delivered on what was expected as a measure to bring back foreign investment, or have they under-delivered?
No, they have delivered for sure.
Okay, that's true.
Yeah, so I think it's, as we were discussing before, that what they have delivered on the debt FI taxation is very good. It doesn't mean that you get inflows immediately, because you have to keep in mind that the US interest rates at the 10-year is close to 5%. You look at some of the corporate bonds that you can buy there, you could easily get 6.5 odd percent. But this will come over a period of, so some of the irritants have been removed. Passive funds can easily come in now.
What does the effective return become after all of these tax incentives, if in case you've done that math for any FPI?
The effective return will be the return that you get on the bond. Exactly the same, because there is no, earlier you had a 20% TDS or a withholding tax, and you had a capital gains. Now none of those, neither of them are there. So the return is exactly the same as, except for the currency. And in my view, if you look at the RER of India, which is and we are at around 88 right now. The last time we were around this range was in 2013, which was the taper tantrum, the fragile 5. So clearly we are, undervalued right now. So if I was a foreign investor in debt, and I look at the RER at 88 or 87, and I look at all the measures that the government has done today, I'll be tempted to invest in the debt securities, in the government securities today, with a view that the currency, if you ask me, I'm not an expert on currency, but you could easily see a currency appreciate, not depreciate for almost 12 to 18 months, given where RER is right now. And the history tells you that the currency appreciates when RER reaches such levels. And we saw that in 2013 also, the RBI and the government took a lot of actions. But eventually the currency will depreciate, but currently we are undervalued. That's how I look at it.
The point that you made with RER as well, at that point in time, if I'm not mistaken, oil was at around $100 as well. Right now we are below that. If you have to look at the interest in terms of the Indian bond markets versus what corporate bonds are offering in the US, does the math still fit in well, where you will be able to actually attract that quantum that we've already lost?
So when I look at what they have done on the FI debt side, then I look at what they have done on the ECB side and on the FCNRB side, I'll be disappointed if we don't get at least 50 billion over the next 6 to 8 months. So that will make a big change. So I think you have to look at it from all the combined policy action, which is the government and the Reserve Bank. I think this is very positive. See, the other thing was, it was a vicious cycle that the exporters were not bringing their dollars back. The importers were wanting to pay immediately. So this was a vicious cycle because nobody had confidence in the rupee.
Yeah.
When you get measures like this, there is a confidence that the RBI and the government are serious about doing something about the rupee. Then it stabilizes, and that itself is enough. Where if you take the gross trade for India, if you take the exports and the imports, over a year it's close to $1 trillion. So if you analyze it on a monthly, on a daily basis, that's a large number. And if everybody is doing exactly what RBI doesn't want them to do,
it was a run on the rupee.
So it's a run on rupee, exactly. So that is what stops. So you just need stability, and then you get these inflows. That is enough for the currency to, which is what I'm saying. The RER in 2013, you can argue was fair at that time because our current account deficit was almost 4.5%. There's no way you can justify an RER at 88 today. is the point I'm making.
Nice. Music to the ears. What does this also mean in terms of rate action, Sridhar? Because there was a lot of voices on the channel after the policy happened that, oh, but wait for the second half and looking at the inflation projections. And I know you differ there, right?
Totally.
But looking at the inflation projections, could we see a rate hike? Are you in the camp which believes that there will be a rate hike? Or does because the RBI now doesn't have to do a rate action to defend the currency, if you will.
Yeah. So I'm happy they didn't confuse the currency and the rate to start with, that they focused on this policy only on managing the currency and nothing on the rate. My view, and the data is available for everybody to see, RBI's credibility on inflation is very poor, to say the least. So let's go back to June of last year, same time, same projection they did for FY26. They said 3.7. And I had come on your channel after that, and I said that they are totally off the charts. I was getting closer to 2.5 at that point of time, and I bumped it up because RBI was at 3.7. So I said, okay, closer to 3, maybe 2.5, 275. Actually, we got 2. So RBI's projection was 3.7, we got 2. That's a massive difference for somebody who's projecting inflation. Now, we come back to the projection now, 5.9 for the third quarter. There's no way we are getting that number.
Despite everything.
So you have to keep in mind that we are talking of CPI. The weight of fuel and power combined is about 9%. Food is still closer to 40%. And I think one point which people are missing is that last year's 2%, about 60 to 70 basis points came from gold and silver. Now, gold and silver are going to positively contribute to inflation. So, not only because gold and silver were up almost 100 to 80%, it was a 70 basis points weight. So, that contributed to about 70 basis points
so
on the inflation.
Instead of 5.9, where do you think it's going to be?
Around 4.5, 475.
Okay, so we are overestimating at this point.
Let's admit, projecting inflation is not very easy.
And right now, one would even give a little bit of a leeway to anyone trying to do that because things are so uncertain.
Yeah, but my only problem with RBI's projections is that they're always wrong on one side, which is they're always overestimating.
Yeah.
You know, as a chartered accountant, we always used to say that whether you overestimate or underestimate, both are wrong from an accounting standpoint. It is very similar. If you're always overestimating, and you're wanting to be safer on one side, I mean, it somewhere tells me that something is not correct.
So then very quickly, 30 seconds, rate action in the second half on the upside or not really?
Possible, but maybe after September. Maybe 25 basis points. But as we stand today and I look at the data, you can even go without a rate hike because the currency is stable now. So the only argument for rate hike was you wanted to use it as a stabilizer for the currency that they've taken care of. And if this is transient, the above 4% is transient and it falls back to 4, then what is the need to do a rate hike?
No, but then one is assuming that crude will stay where it is, continue to trend lower, all of this gets resolved. That is one part.
Are we saying that the government is going to pass on all the crude hikes? Are they in a position? So I'm looking at data, I'm not looking at the sentiments and the side frills. The CPI calculation is based on the actual petrol diesel price, not what
not
is
the crude
on the
basket or Indian basket or whatever.
The majority of the weight is for food, and
but
I
the
have
price
traveled.
hikes have been taken there.
Yeah,
Milk has
but
gone
I have
up,
traveled
rice has
4
gone up.
states in the last 2 months, and I can tell you that pre-monsoon showers are very good. You're not seeing any impact. So the easiest thing for you to check is what is happening to onion potato price. Nothing else you have to see. They haven't gone up. They're actually down from last year.
Okay.
So
inflation is a bit of a boogeyman right now.
Yeah, and I think this El Nino is, I've heard this story many years. I will totally discount it. On the ground, I can't see anything.
We're looking for it in the sky. Yeah.
No, but
I've seen the skies and I'm telling you, I mean, last year I told you the same thing. I can't see 5.9. I could be wrong, but I'm just saying based on the data, 5.9 looks very difficult.
I think Sridhar will say बादल तो होंगे लेकिन बूंदे तो बरसनी चाहिए.
बूंदे ऑलरेडी बरस रही है. बूंदे ऑलरेडी बरस रही है. मैं 4 स्टेट जाके आया हूँ. बूंदे हर जगह बरस रही हैं. जब 45 डिग्रीज में बूंदे नहीं बरसनी चाहिए, बूंदे बरस रही हैं.
इन 4 स्टेट्स में कंजम्पशन का क्या हाल है, मूड का क्या हाल है? Because that's also the fear, right? What is happening with the economy on ground, consumption, will Q4 and what we've seen in Q4 results actually?
So I think there are some challenges on consumption. So I will not say that there isn't any challenges on consumption, because as your fuel prices go up, there is apprehension that it can go up more. It is a sentiment. So there is some challenges, but it is not as grave as it was made out to be on inflation in the policy, is the point I'm making.
No, and from what Sridhar is saying with onion prices as well, but it's down. In fact, just last week, I was traveling towards Lonavala side. Their onion prices are actually at 10 rupees a kg.
Okay.
Have you ever seen onion prices at 10 rupees a kg?
I have no reference.
No, I have reference to this.
I need a backstory.
And it was a question mark to my mind as well.
Shopping for onions.
And when I saw that board that onion prices at 10 rupees a kg, it was really, I mean, I haven't seen 10 rupees per kg onions ever.
People buy chikki and fudge.
नहीं अभी
walnut fudge.
हमको देखना पड़ता है ना आजू बाजू. When we have Sridhar who's going to 4 states and tracking onion and potato prices.
Talk to us a bit about equity markets. We've talked about debt, inflation, macro. A lot of viewers seeing this will say, "Ye sab to theek hai, beautiful, but portfolios are looking terrible."
Okay, that is the other thing. What is the issue with the equity market? So let me give you data. Okay. Calendar year, we've had 10 straight years of positive returns. Okay, so this is calendar year as of December every year, which is a record by any standards. I have been investing since '93 in the markets. My first 10 years, 5 years were negative years. For 9 years, the markets did nothing. Now, when you take the CAGR of these 10 years, your average is around 12.5%. This is the large cap, which is the Nifty. Now cut to look at the mid caps. Mid caps are almost at their all-time highs. Last 5 years CAGR is 20% for a mid cap. So if a mid cap fund manager would have given you a few percentage points more, if he hasn't, then there is a you can have a grudge. But if I'm giving it to a fund manager, assume that he is doing a good job. Now the problem is that we are used to high returns every year. I mean, we can have a down year. I mean, what is the issue with the market?
It's a down 2 years. It's a down 2.5 years.
No, it isn't. It isn't. That's what I'm telling you. 26, 25 also was a positive year. You can't have, if the 5-year CAGR is 20%, why should you complain? So my point is, yes, we've had challenging 12 months where earnings haven't been great. I think the problem is the relative returns, that when we are seeing US markets do what they're doing, Korean markets do what they're doing, that is a challenge that we have a FOMO, that ye miss ho gaya. But if I look at standalone the Indian markets, one, we have to accept that these are equity markets. You can't expect positive returns every year. So this may be the first negative year in 11 years. What is so bad about it? I mean, why are we complaining?
No, but I think, the complaint is also because everyone is looking at India as a collateral damage.
So yet our mid-caps are giving you 20% returns in the last 5 years. It's almost at its all-time high. What is your problem then? Where is the collateral damage?
Vis-a-vis, exactly, vis-a-vis
I agree. Vis-a-vis Korea, Taiwan, we have an issue. But I'm just saying that if we keep comparing ourselves with other asset classes, we'll have issue. I'm not saying India doesn't have an issue. All I'm trying to say is that our expectation of returns have become so high that we are not even able to bear one negative year. So that is the point I'm making, that you don't get positive returns in equity markets every year. I started with 5 negative years out of 9, and the markets gave nothing for 9 years. So I think people have to get used to it. Despite all this, markets are giving you returns.
The question is why? Why do you have that negative sentiment? You're talking about it statistically, but that's not taking into consideration that we don't have an AI play, we don't have a large semiconductor company, we don't have a chip maker. The biggest weightage, or one of the biggest weightage in our Nifty, in our top 50 companies, or of a cohort of companies which no one knows whether they will make it to the next leg of technology change or not. It doesn't take into account all of that, Sridhar, to be fair.
It doesn't, and we've spoken about this for many years. 2 years back, and your show, I said that we think IT is in a very difficult spot.
Yeah.
And it has played out that way. So we stayed away to a large extent from IT. As we speak, we have split opinions in our office where some people think that
Everywhere
it is deep
there
value.
is a split opinion.
I'm still not in that camp. My point is maybe the index may struggle because you have banks which are going through their own set of issues as we speak, the large banks, because the PSU banks are very aggressive. So 40% of the index is struggling with profitability because one cohort is growing very fast, but then they don't care about the profits. The other cohort is trying to protect its profits, so cannot grow. IT has its own set of challenges, but there are others. So you have manufacturing, which is doing well. Defense is doing well. Pharma, which is doing extremely well. You can pick and choose, which pockets of pharma you want. So if you are constructing a portfolio, there are pockets where you can make money. I'm not saying it is easy, but it is far better today than it was 18 months back because the valuations were really stretched then. At least today when we look at opportunities, you do find reasonable opportunities in the market. I'm not saying everything is in the large cap. Maybe the top 50, maybe the index may struggle for some more time, but below I'm saying the large cap index, but below the large cap index, there is definitely story and it's showing up in the returns. I'm just saying, you don't have to ask me, you just look at the mid cap index, it's doing well. And if you see the top performers in the mid cap index, you'll see power equipment, you'll see manufacturing, you'll see pharma. So obviously there are stories, there are earnings, and we saw the earnings growth last quarter. So I'm trying to put based on data, I'm trying to put a picture, and I'm accepting that there are challenges for our markets. It is not like everything is perfect, but nothing is perfect always, right? So you find...
Shridhar, we have 30 seconds. Is it almost simple that make a portfolio which has got the exporters because they will benefit out of the currency tailwind that is behind them for the next, behind their sales for the next 12 months?
No, not as simple as that. There are consumption stories also.
Domestic consumption, which you think will
so you
work.
can find domestic consumption stories. Exporters, the largest exporter is in trouble.
Yeah.
So you have to leave the services export. Yeah. So beyond that, you can look at. But I'm just saying it is not just as simple. You will find stories even in banks. NBFCs are looking very interesting. Look at the way the housing, low-cost housing finance companies, their price-to-book multiples have collapsed from 5, 6 to literally 2 for ROAs of over 4%. They look very interesting. I mean, I was never a fan of that cohort at all. But now they look very interesting.
Is this the same setup that PSU banks were in 2020 or similar?
I would say similar. Adjusted for the ROAs. I mean, if you're getting 4% ROA, for this entire cohort and growing at 20%, then they do definitely look interesting. I mean, you can pick and choose the stock you want here. There are 10 of them. There's one coming up for IPO right now. You can pick and choose. There is.
Okay, so a lot of ideas there. It's a positive view coming in from Shridhar. That's great to hear as we wrap up this edition of Editor's Cut. Thank you so much for coming in. And thank you to all of you for joining in. We'll be back here next week, same time, same place.
We're joined here by the Chief Economic Advisor, V.N. Nageshwaran. Thank you so much, sir, for taking time out. A bunch of new measures have been announced to incentivize more and more foreign investment to come in. Talk to us about what went behind it, what is the rationale, and what do you make of it now?
I think the rationale is to make sure that India is in alignment with the global practices, and investors ultimately do make their decisions based on what is on offer from all countries. And on that basis, we have brought ourselves on par with what is happening elsewhere, and therefore at the same time keeping in mind the overall macro external stability considerations in mind, because there is an overall ceiling as to how much we want to have foreign investments in the government securities. That has been kept in mind. At the same time, within that framework, we wanted to make it smoother and easier for foreign investors to access the Indian sovereign bond market, which is what the government has done.
Sir, you also say that at this point in time, there's no point estimates coming in from the FinMin, and we should go by what the RBI is estimating when it comes to GDP growth. So does that mean that at this point it's below 7%, the estimates?
No, obviously, it is you have seen multiple private sector estimates, multiple multilateral agencies, credit rating agencies downgrading not just India's growth estimate, but world growth estimates, developed country estimates, and Asia in particular is an energy importer, and energy prices have gone up by 40-50% depending on the benchmark that you are looking at. So it is natural that it will have an impact on growth outcomes this year compared to the previous years.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Medicine cannot function without a good pathology backup. People would bring the blood samples, say from All India Institute, from Ram Manohar Lohia Hospital.
उनका खुद का in-house नहीं था?
No, सबके पास थे. But what the expertise which we had, they did not have.
Started in 1949. The journey has actually mirrored the journey of modern day India.
My father, who started his career in the army, and in the army he specialized in pathology. He opened the first North Indian lab in 1949, and in 77 when he died, I was a lecturer in pathology in FMC. So I came back and took over.
Were you always planning to do this, destined to do this, or were there other dreams along the way?
I never wanted to become a doctor. I wanted to join the Indian Navy.
Was there any point at which you felt that maybe, you had any doubts? Can you grow the business?
Every year or 2 years, I used to say that, Mom, I have to buy this instrument. And then she came down very heavily on me one day and she said, look, your father created such a big kind of a thing. And he never spent this kind of money in buying instruments which you are. So कहीं ये तो नहीं कि ये सारी तू हमारी practice बिकवा देगा.
I have a very special guest on the Disruptors today. I would say the OG of the diagnostic space, Dr. Arvind Lal, is with us in studio. It's an absolute pleasure, sir. Thank you so much for coming in.
My pleasure to be here. Thanks for getting me here.
Do you think the way I described the disruptive factor of your business is correct? How would you describe it?
Medicine has moved on. And modern medicine cannot function without a good pathology backup because, what you have, the physician will not know. Let's take the case of jaundice. Now, everybody can see the yellowness in the eyes, but how much is the bilirubin, etc., how bad is the liver, the SGPT, SGOT, etc., can only be told from a blood test. And sometimes, on the basis of a blood test, a person with very high blood sugars, 1,300 or so, etc., we've had to send that person straight away to the hospital. So blood test can be life-saving in certain situations, but it is good to get a blood test done at least once in life.
No, but I'm talking from the point of view of your company's journey. The company started in 1949. The journey has actually mirrored the journey of modern day India.
Sure.
And at a time when there was no big organized laboratory chain like there is now. Now there are so many diagnostic chains. That was not the case back then.
Yeah, so it had just come into India, and Indians, were discovering that they were good in medicine. Indian doctors always were very, very good. They were sought after during British times also. So my father was one such doctor who started his career in the army. And in the army, he specialized in pathology in Pune, which is, Armed Forces Medical College. So AFMC was there for post-graduation even those days. So he specialized in pathology and came back. And so to say, he opened the first North Indian lab in 1949. That was also the year I was born in. And, he specialized, went for further specialization to America in 1953, came back in 56, took the pathology services even further. And in 77, when he died, I was a lecturer in pathology in AFMC. So I came back and took over.
Were you always planning to do this, destined to do this, or were there other dreams along the way?
Good question. I never wanted to become a doctor. So that was an afterthought in my case because I wanted to join the Indian Navy. And I was the best kid at NCC Navy in my school, which was modern school, Barakhambar Road in Delhi. And when I was getting ready to join the NDA, I discovered that I had a minus number in my left eye. Now, the Navy those days, and even now I'm sure, they don't take guys with specs in the executive branch. In the non-executive branches, yes. In the engineering branch, they'll take. In the supply corps, they'll take some other architect, But in the Indian Navy, because you need to have very good vision, especially at night, to see objects, to see other ships and whatever. So my dreams of joining the Navy actually came to a standstill suddenly when I was 15, when I was about to think about going to NDA. And then I did not know what to do. And I did not have biology in school. And during my days, there was no class 12. So we were all supposed to change into arts or science in class 9. So 9th, 10th, and 11th. And in 9th, 10th, and 11th, you were supposed to, like me, who took sciences. So we had a choice between doing biology or geometrical drawing or doing geography. So I chose geometrical drawing because the Navy bug was still in me.
So what is the world looking like for you in 1977? You're in your 20s, maybe late 20s. You're taking over a business which is just starting out, it's doing well. And then now you have to grow. Because what your business is today is a very different beast, right? You've actually had to build that business acumen. What was that early journey like?
So the early journey in pathology, like most of the branches in medicine, was, rudimentary. And new tests were being discovered. New instruments were coming in. People were training either in India or abroad how to do it. But the clinical pathology side of pathology actually was slightly below par. In fact, Mumbai was much ahead of Delhi at that time. But well, thanks to me, I also had to do something, so I changed all that. And then we went far ahead than Mumbai. And sometime, I hope Bombay is now caught up with us. So pathology is the backbone of modern medicine because 70% of diagnostic things or decisions are made on the basis of lab tests.
Yeah, no, that's absolutely true. But, I'm just wondering what that expansion plan looked like to a 27 or 28-year-old, or at that point, was it just about stabilizing the business and understanding the business for you? How did you grow from there?
The business was, I just wanted to do a good, honest job. People come in the morning for a blood test, in the evening they must get a correct report. So that was the end all of my thinking. And then people started saying, I remember, an elderly Sikh gentleman who used to come all the way from Model Town, which is North Delhi, and we were in Central Delhi in Connaught Circus area. And he would say that, why don't you open up a lab in Model Town? So I listened to him. I said, yes, sir, of course, we can think about it. Then I realized that he was not asking me about a lab being opened there. He was saying that, mera blood test wahan kar do. You can take my blood there. So that is what got into my mind. And I, for the first time, I think, committed way, I thought of collection center. And I said, we don't have to test there. I have to train a phlebotomist who can, get blood out in the first go, because that was very important those days, even now I'm sure. And so we opened up in Model Town a collection center and would bring the samples all the way to Hanuman Road, which is Connaught Place area, and send the reports back in the evening. So that's how we started, just because of practicality. And I also realized that in my profession, every patient did not have to meet me personally. So that also helped. And they were nobody has time, so they said, Dr. Lal, as long as somebody can take the blood out, as good as you can, we are okay.
Was there any point at which you felt that maybe, you had any doubts? Can you grow the business? Did you want to maybe merge with a larger company through your journey? I just want to understand. I'll tell you where I'm coming from. Anyone watching this right now, they may today be in a position, and it's not 1977, it's 2026. They may be in a position where they've taken over a family business and there is this hunger to grow. And then the challenge always is, how do you take things further? Did any of those thoughts cross your mind?
So in my case, it was very apparent that everybody who wanted to get a blood test done from me could not come all the way to Hanuman Road in Central Delhi.
Yeah, so this whole thing of collection centers.
So collection center was, and that is, we were lucky that in my profession, we can collect the blood, somewhere else. And this idea was coming to me every day. Because people would bring the blood samples, say from All India Institute, from, Ram Manohar Lohia Hospital.
उनका खुद का in-house नहीं था?
No, सबके पास थे. But what the expertise which we had, they did not have.
Can you still stand out today as a diagnostics business when there are so many doing the same thing?
Well, yes and no. No, in the sense, because people, have to be very, very fastidious about the quality of testing. So the person who's behind the machine, now most of the tests can be automated. At that time when I started from a test tube and pipetting by mouth, etc. I've seen all those days. But now, you can take the blood from, the vacutainer incidentally was also introduced by me.
ये क्या होता है?
We don't use a syringe and needle to suck the blood out.
Yeah.
You put in a needle and it fills up itself. You probably don't even remember seeing that. The blood in the tube behind fills up by itself with vacuum, because it's, so those are vacuum evacuated tubes, which I brought to India. So many things like that, many tests and many instruments. So I had a large hand in, what modern pathology, is. So we started small.
You're being very humble about it, sir. That's why, we wanted you on the show, because you have had, I don't think people realize the journey that modern pathology in India has taken, and you've been at the front and center of it. Let's understand and share some of your experiences, anecdotes, incidents, which could be very, something that people can watch, understand and learn from, because you've had such a vast experience in business. When you're trying to grow your business, any business it could be, in your case it's pathology labs, what are some of the things that you should keep in mind? What are some of the biggest challenges that you faced?
So I'll tell you the first challenge. First, the challenge was that, as you know, my father had passed away. He and I never worked for a single day together. I was a lecturer in FMC in Pune. So when I came back, so now the elder person in my family was my mother. And she used to come and to do the the technical job.
She was involved in the business as well?
She came after my father went away. She would accompany me every day just to give me company. And she would do the other chores, and I was busy in testing. And so every time, every year or 2 years, I used to say that, Mom, I have to buy this instrument. And she used to listen. And then she came down very heavily on me one day and she said, look, your father created such a big kind of a thing. And he never spent this kind of money in buying instruments which you are. So कहीं ये तो नहीं कि ये सारी तू हमारी practice बिकवा देगा. From her point of view, that instrument to me was like a toy. And people can get, they don't think much about toys after, it's left them, they're interested in something else. So I said, no, Mom, these are, believe you me. And she believed me, but initially with skepticism.
You had to prove yourself.
Yeah. So then
even to your own mom, you had to prove yourself.
So my mom, because it was, she was the one who was handling the finances. And she was the one who would, tell me that, don't you think, you're going very far? I'll give you an example. Now, the thyroid tests had just come in late 70s. And we were probably the first ones in India to do the thyroid test in a private lab. Otherwise, it used to be only All India Institute or Institute of Nuclear Medicine in Delhi and in Tata Memorial Hospital here. So once I started doing those tests, there were new requirements because at that time, this test required radioactive reagents, which is supplied only by BARC. Now, thyroid test can be done by everybody. But those days, it was coming in a radiation medicine format. That's how it started. And for that, we had to be specially trained. And that special training also involved setting up a different kind of a, testing facility for that, which we had to. And that is how, and she came down very heavily on me and said, what the hell are you doing? And for you, it is just a blood test and, 1 or 2 blood tests. How much are you going to charge? I told her how much I'm going to. So this is not done. But then she saw that from a trickle, we were doing 1 thyroid test in a month, then 2 thyroid tests in a month. And now we do thousands of thyroid tests in one day.
Yeah. No, so when you started out, when you're describing this time, I find it fascinating. How large was the team where you were testing yourself?
3 main technicians. I was the 4th. And then helpers, people who clean up or put the glassware, because a lot of things have to be in very clean, just like a kitchen. A pathology lab is like a sophisticated kitchen, actually.
And today, how many people work in Dr. Lal Path across the country?
7,000 to 8,000.
Imagine that kind of growth that you have seen. Did you think you would make a success of the business when you took over to this extent?
No, Tamanna, I never thought about the size of the business. I only was interested in doing a good job. That let's go, do it, give each patient a good report, a thorough, accurate report, and then if chance, comes my way again, I can expand it. I can go to another town. And then it so happened that I was the first one, stepping out of Delhi. So we had to think of all the possible things, the transportation of the samples, the stability of the samples in Indian heat, 45 degrees in summers. So all those cold packs, etc., had to be, started by somebody, and I'm glad it was me.
लेकिन आज जैसे अगर मुझे choose करना है कि where should I get a blood test from? What should I look out for? Will I look out for the cheapest, closest, fastest?
No, you should.
It's all the same.
No, there is a government accreditation also available now, known as NABL. So National Accreditation Board for Laboratories, NABL. So you should at least get your blood tested by an NABL accredited laboratories because they have been inspected. They have been given that stamp of approval. Of course, the other things are, not connected to quality, commercial. If I have a collection center there, what time do I open? How fast can I give the report? Am I doing that particular test which you wanted to get done? All those things come later.
Now everyone's accurate. Yeah. Most are timely.
Most of them.
Convenience is there.
Yeah.
Everyone's competitive. What should stand out for Dr. Lal Path today? How do you now take it to the next level?
We always keep on doing that. That's our USP, that we'll take it to the next level, irrespective of what everybody else is doing. So we were the first ones who, started the collection centers of carrying samples, setting up labs in smaller towns, setting up more labs in a huge town like Delhi or in Mumbai, etc. So all those things, they come with age and come with time. Now, pathology testing is the backbone of pathology, modern medicine. So it has to be there in accurately and in good numbers. There's no point in if I just had churn out 10 tests in a day. when the patient requirement is 100. So all those things have to come together. And pathology labs have become very, very sophisticated. There are, computerized equipments, etc., which can be programmed, just like a spacecraft, etc. And you can put the sample in by hundreds and thousands of tubes. And after some time, if you've calibrated it well, you'll get accurate results. And that is how things are happening now.
Sometimes doctors say, and a lot of commentary is that these bundled tests, which pathology labs give, they are actually not useful for patients. Because your doctor will write 5 tests, you will go to a pathology lab, anyone,
right,
and they will say that ये तो आपको बहुत महंगा पड़ेगा, आप ये करो हमारा पैकेज ले लो और उसमें आप 60 टेस्ट कर लो. So are Indians doing more tests than they need, too many tests than they need, just because the equipment and the technology now exists?
See, the harsh reality of life is that India is still doing under-testing. It's the other, countries in the vicinity, slightly more developed than us, who actually, do a lot much more tests, which are obviously required. So once in a blue moon, you can get a whole panel of tests required and discover, there is something, which is wrong. I'll give you an example. A classmate of mine, a doctor, came to me and he said, "Yaar, mera ye test kar de." So we did the test, etc. And we found a CPK to be increased. A CPK actually gets increased when you're having a heart attack. It's done. But CPK can also be increased in certain other conditions like muscular, etc. So I discovered a muscular problem in his body which he never knew. So there are many times, you are doing a test, he came to you for something, disease A, but you found disease B. And vitamin D is now, something like that. And so many other tests. The lipid profile came in. Indians by nature are dying at a younger age group, say at least 10 years younger than their, Western counterparts. Because number one, we have a gene which, brings it down, the age down. And also because of a lifestyle. So these are also known as lifestyle diseases, and which can be improved. You improve your lifestyle and you'll become better. So our job is to increase the lifestyle because India is really suffering. And 2% of our GDP is dependent on lifestyle diseases not being controlled. So as doctors, we feel that the input of India, we also want to, chip in to the welfare of India, goodness of India, etc. So we want to make it aware. We want to tell everybody that please come, at least by the age of 20, 25, at least get 3-4 basic tests done. And the numbers are very high in India. So
okay. So by 25 years, what is the set of basic tests that every individual should do, man or woman?
For women especially, let ladies first. So hemoglobin is very important. So with hemoglobin, we have a short form known as CBC. And that CBC does 3-4 other tests also. I'm not going to go into that, including a WBC count, including a platelet count, something else. So that is a kind of a package of tests because it is all done in one go in one machine. You can tell that machine that I want only hemoglobin, but it's going to, use the same amount of blood and probably charge you the same amount. So hemoglobin, etc., is very important. Hemogram, we call it. CBC, we call it, complete blood count. And then there are 4 or 5 basic tests like blood sugar, cholesterol, SGPT for the liver, and creatinine for the kidney, and one odd test which I may be missing right now.
And it's the same for men?
For men also. Yeah.
How often should you get a full panel blood test?
So full plan, if it's okay that you can afford it, at least once in a year.
Okay.
And then go after the tests which are out of range, and which the doctor will discuss with you. You can take your own physician will tell you that, yes, I have found that your cholesterol was high. High cholesterol brings heart attacks closer to you. So we should not do that. So he'll improve your lifestyle, make you eat less fats and allied things, maybe even give you a statin, because now things can be controlled. So that's the way we look at it.
Do you think Indians are also under-tested because people don't have the ability and the monetary capacity to test so much? Because this is one aspect, at least Indian insurance doesn't cover diagnostics. Now, insurance coverage has improved, but it does not cover diagnostics. Do you think that that's something that needs to be remedied?
So it's being penny wise and pound foolish. because it is not, covered by insurance, these OPD kind of procedures, which we counted as OPD, by the way. And so they said that we are not going to reimburse you. Whereas our timely detection, a guy who's got high urea or creatinine or a high blood sugar or high cholesterol, well, if we tell him at that point of time, you are saving not only thousands and lakhs of rupees for that person, but you are saving a bread earner. In India, as I told you, that things are happening 10 to 15 years earlier than in Western counterparts.
Why do you think that's happening? We hear so much about young people in their 40s and 50s dying of heart attacks. Why do you think that's happening?
Number one, genetics, because we are Indian. Number two...
But we were always Indian. We're hearing about it more now.
Yeah, because people were dying, but they did not know why they were dying. So, Rab ko pyara ho gaya and all that, we used to hear. But now we can actually increase their lifespan by testing them earlier. So all what I'm trying to say is that there are 4 or 5 tests which should be done as soon as a person is 20 or 25 years old. One is blood sugar, one is cholesterol, one is creatinine for the kidney.
Whether you have any symptoms, disease, concern or all.
Because this will find out. This will find out if you have something. If you don't have it, you are clear. At least for 1 year, maybe even 2 years in a younger age group. But in the elderly age group, these things should be done every year.
Do you think that there is a need or something that you envision now as a next step, since this is what you've talked about?
Yeah.
Every Indian should have access. How do you take access beyond the large cities?
So the first is that, it's all relative, to India, that our costs are actually the cheapest in the world. And our costs are somehow, sounding higher for the patient, because the patients were never subjected to this kind of sophisticated testing. Third thing is that most of these reagents, now many reagents are being made in India, they used to be imported, especially from the time I'm talking about. And the government of India, not to be missed out, wanted its pound of flesh. So there was, God knows, 140% duty at that time. I forget the exact amount now. And that they still haven't given up. I think the duty is now in the region of about 30%.
This is on testing equipment?
On testing reagents.
Okay.
Equipment also, reagents also. So then, as happens in India and many things you must have heard, so there is a life-saving test. So life-saving test was classified under 3-4 categories. Thyroid was one of them. And then the duty was 0. So we have come a long way. We are improving every time. Things have been brought to the notice of the government, the fora in which I am. This is my job to keep telling the government that do this, and they listen.
Dr. Lal, you have been doing this for so long. You are still actively involved in your company. I'm sure you need not be if you don't want to. What really keeps you going?
I am in kind of old school of thinking that man must, do some work which is productive work. After all, I may be 76 now, but I'm still walking around. I go for morning walks. I can still work 8 to 10 hours a day, etc. So when I don't feel like working, I will not go.
So no concept of retirement?
So the retirement in private practice, there are old doctors who are practicing till their 80s, etc. And so I don't know. But if something, is going to happen to me, or I find something better than this to do, I have no idea. I may, think of changing, man, or keeps changing every time.
Yeah, so always look for something new. It's been inspirational speaking to you, sir. Thank you so much for coming in today.
Thank you very much, Tamanna. Honor being here.
Thank you, sir.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome to the special show that you're watching on NDTV Profit. India is making a strong pitch for global debt flows to come into India. By scrapping the taxes on foreign investors, government bond investments, the centre is really aiming to make Indian G-Secs more competitive, attractive as well as liquid in global portfolios. Meanwhile, the government has also opened the doors wider for the foreign investors, easing the investment limits and expanding the access routes. The move is designed to really improve the market depth, encourage the long-term flows and broaden the participation in India's bond market. To discuss more, we have a whole host of investors as well as experts really joining us on the show. But let's first hear out the RBI governor on this particular decision on slashing the FPI tax on bonds. Let's listen in.
We are expanding the universe of specified securities by including all new issuances of 15, 30 and 40-year tenor G-Secs. Till now, only securities, government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration, and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing.
All right, so it's a big reform coming in the taxation on the bond market. Government is rolling out this big reform push to really deepen the Indian bond market, making it much more robust and with larger participation, especially from the dollar economy, making sovereign debt far more attractive for the foreign investors. And this sweeping set of tax changes, FIIs, will now enjoy zero tax on both the interest as well as the capital gains from Sensex. Let's take it across to my colleague Shrimi, who has been really focusing on this particular development very, very closely, tracking it there, and breaks down what this means for the flows and yields in the rupee movement going forward. Shrimi, tell us.
Well, absolutely. The government has announced a sweeping set of reforms aiming at making India a more attractive destination for global capital, with the biggest takeaways being a complete tax exemption for foreign investors on income and gains from the government securities. Effective from April 1st, 2026, foreign portfolio investors will no longer paying the 12.5% long-term capital gains tax on the government securities. The government has also scrapped the 20% withholding tax on interest income from these bonds. Now, in effect, returns from eligible Indian government securities will become absolutely tax-free for foreign investors. So that's one. Further, the government has also, under FEMA rules, eased investment rules for persons resident outside India, which is PROIs, to invest in equities via the portfolio investment scheme. Now, while the investment limit for an individual PROIs in a listed companies has been increased to 10% from existing 5%. The combined limit for all individual PROIs has been raised sharply to 24% from existing 10%. On the debt market side also, the government has widened fully accessible routes, by including 15-year, 30-year, 40-year government securities, as well as sovereign green bonds. It has also removed several restrictions that foreign investor had long sought to be eased, including the short-term investment limits, the concentration limits, and the security-wise caps in the government securities. While these restrictions have been lifted, the overall FPI's investment cap, and that's very important, remain unchanged at 6% for central government securities and 2% for state government securities. The government has also merged the existing general and long-term investment categories for FPIs in government securities, simplifying, of course, the overall framework. So taken together, the measures mark one of the most significant liberalization steps for foreign investors in recent years, and that's what Finance Ministry highlighting, signaling the government intent to deepen, India's bond market, improving ease of sentiments, and of course strengthening the India's position in the global capital markets. But we need to see the revenue impact as well. So we are waiting for more information, and let's see how this will unfold.
All right, Shrimi, thanks so much for breaking it down for us. It's a big reform push for foreign investors to really be keen and attracted towards Indian bond market. Neeraj Gambhir, the Executive Director, Axis Bank, Dinesh Kanabar, CEO of Dhruva Advisors, Deven Choksi, MD at Dr. Choksi FinServ, join in now. Thank you so much, gentlemen, for joining in. Deven Choksi, my first question, before getting into the nitty-gritties of what this particular reform push really means, how much of a halo effect will this particular reform and lowering of taxation really have on the FII inflows on the equity market, and what is required there?
Yeah, good afternoon, Nisha. Well, I believe that I think the direct impact is not likely to be felt, but I think somewhere indirect impact will have to be analyzed. Assuming that RBI is not intervening while the inflow of dollar is taking place under these particular assumptions of $30 to $40 billion inflow of money, which could possibly come due to this particular taxation changes. Assuming that I think that money is entering into the system. So every $10 billion has a potential to basically give the rupee appreciation of between 25 bips to 40 bips. Now, assume that I think it is $40 billion worth of inflow. Theoretically, I think we are talking about somewhere around close to 1.4, 1.5% kind of an appreciation, or 1.4, 1.5% appreciation, I think, which is basically theoretically possible. Should RBI not intervene into this? Now, if that is a situation which is envisaged, and that is dependent on RBI's policy, of course, then that answer to your question would be that yes, some of the foreign investors will be taking the money out. I think almost 2.5 lakh crore worth of money has been moved out. I think they may probably stop that particular route, and that is where I think you may see the stability come returning back of capital happens in the equity market. So yes, I think there is no direct answer to it, but I think it is subjective answer to what RBI takes hereafter. But the potential remains high as far as I think the foreign investors are concerned to bring the equity money back into the country.
Right, Devin, very well put. It will have some impact when it comes to the minds of the foreign investors in terms of India as an attractive destination. But whether it will solve the problem of FII outflows in the equity space, that needs to be seen. And Dinesh Kanabar, what does this really reform mean for the foreign investors when we position India and India's bonds?
So to my knowledge, Anisha, there have been multiple representations, at least over the last 3 years, which were made to the government, to the Ministry of Finance, to say that there is a deep interest that exists, whether it is sovereign wealth funds, whether it is FPIs, who would like to invest in long-term government bonds. That market exists. It's a fairly robust market. And the question was that the taxation of the interest at 20%, the capital gains, of course, are de minimis. It's really the interest which one is looking at here. The question was whether that 20% withholding tax in India is something which would deter the people from investing. So let me give you a concrete example. Let's assume that the rate of tax on GSEC is 6%. And if you have a 20% tax, then you are effectively looking at 4.8%. Now, when you look at that, most of these investors are not taxed in their home country. Therefore, they have no ability to take a credit for this in the home country. So this amount becomes a dead loss. Now, many of these come from tax treaty jurisdiction, where the rate of tax does go down from 20% to say 10% or 15%. But that, as you know, is a big challenge. How will you monitor? How will the custodian of the security monitor the eligibility to treaty? Tax residence certificate. So again, we are getting into a number of things. And therefore, a representation was made originally to say that either you make the tax nil, or even if you don't, provide a fixed rate of tax so one is not subjected to vagaries of the tax treaty, etc. And I'm really glad that the government has heard these recommendations. We have a nil tax. What that effectively means is that whatever is the rate of interest paid by the government is the effective income of the investors. As the RBI governor rightly mentioned, we are increasing the tenure. Therefore, the money which is coming in is long-term money, stable money, which India would like to have, and therefore becomes fairly attractive. Again, because of nil taxation, there are no compliance issues, no need to file tax returns, no treaties, no nothing. Very, very welcome move.
Right, Dinesh, many aspects that you touched upon. And yes, a lot to discuss on that. But Neeraj Gambhir, what does this really mean for rupee in particular, and therefore the overall economic impact in terms of our forex reserves? And also the momentum has been seen from all the quarters of the government in making the debt market very robust in these trying times. Would you agree?
No, certainly. I mean, I think for the last, almost 2 years, we've been seeing very weak or negative equity flows, in the market. I've also seen net FDI turning steadily lower and lower and now close to zero. So equity flows have been weak. So it's the time for us to actually go for debt flows. Globally, fixed income markets are doing very well. Credit spreads are at their tightest levels. There is a lot of liquidity in the market. You've seen how much money, big corporations in US are able to raise for their for their AI investments. So these are clearly very, very welcome moves. As Mr. Kanabar explained, that the total amount of impact in terms of earning for the foreign investor goes up by roughly, 50, 60 basis points to almost 120 basis points. So the spread that now government bonds offer over, let's say, US treasuries, because there is no tax impact, almost becomes like 150 basis points. So, sorry, 250 basis points. So I feel that this is a good incentive for the investors to start investing in domestic market. India is one of those few markets where you have long-term bonds, where you have bonds going all the way up to 40 years. Not many economies of the size of India offer that kind of duration, which is very, very attractive to insurance companies. So I feel that you will see some real long-term flows coming in as a result of this. I would also like to add that it's not just these set of moves that you have described which will have the impact on the market. There is parallelly, Reserve Bank has announced a whole bunch of measures with regard to, the hedging cost for ECBs as well as hedging cost for the FCNRB deposits. I think those will have a much bigger impact on the capital flows into the country, particularly the debt flows into the country. And with these kind of flows coming in over the next 4 months, I do expect the rupee to start sort of, it'll have a lot of calming effect on the currency market. I do expect rupee to start having less volatility and maybe less need of intervention by Reserve Bank at the moment to make sure that it doesn't depreciate too much. And once the flows actually start coming in, it's possible that rupee may actually appreciate. Right. Of course, it depends upon what happens to the war and what happens to the crude oil prices.
That's right. Neeraj, you touched upon a very important point on the rupee stabilization and probably certain appreciation as well. Devin, it has been a chicken and egg kind of a story where FII outflows means rupee depreciating further, and rupee depreciating further also gives a very, jittery economic picture about India to the foreign investors. How much do you think rupee stabilizing and also appreciating will really impact the equity market momentum and therefore the foreign investor view on overall India foreign investments?
So here I think the two parts of foreign investment. One, of course, I think the underlying equity market in which they invest. And the second part is derivative market through which they are operating. A significantly large amount of volume is happening on the later side than in the underlying equity side. If underlying equity is the one where probably I think they're reducing their holding because they want to shift the portfolio out to some other parts of the world, given the kind of newer preferences of industries that they find in Taiwan, South Korea, or even for that matter Japan, in which I think they basically want to invest into new age universities, including semiconductors, AI at the same time, and the data centers. That's the reason for which underlying equity is being swapped into those markets. But more importantly, I think what could possibly or what is going unnoticed in the marketplace today is a significantly large amount of operations carried out into the derivative market, which is the resultant cause of, I think, taking out the capital out of the markets. I think that's where probably I think we are required to take little more precautions. Maybe I think the plot is lost at this point of time, but I think some more precautions are required to be taken. Should that happen, my understanding is that Indian market would start attracting flows back because underlying growth assumption in the business, I think, remains absolutely intact. Valuations, at least in the frontline stocks, they remain quite comfortable today. And maybe if the kind of 15% growth that we are assuming in a normal situation, maybe I think we would be seeing the flow returning back into the market. That's what my take would be.
Right. So, Devin, very important because this is a big reform and it sends out a message to the investor community overseas as well. The dollar community which we are trying to attract. Dinesh Kanabar, does it address the biggest pain point of uncertainty on taxation and also ease on even the interest income? All that is giving ease as well as higher returns, which is really addressing the two pain points that the investors have, especially in the debt market in India.
Very well said, Anisha. I think more than the tax, it's really the compliance burden and the uncertainty which creates a lot of complication. Yes. So, for example, assuming you were investing from a country with which India had a tax treaty and your rate of tax had come down from 20 to 10% or whatever be in that particular treaty, to get that treaty eligibility is a big pain. Will it be at a withholding stage? Is tax residence certificate sufficient? How will you prove your eligibility? Will you pay tax and withholding and then claim a refund? All of those becomes very, very big challenge. The very fact that you have to file a tax return in India where you have nothing, no income other than interest income on government security, becomes a point where investors become very cagey as to whether or not they should invest. So apart from the fact that the yield itself has improved significantly, the fact that there is zero compliance burden, because now I don't need to really file a tax return at all. There is no such thing. I don't need to meet a custodian. I don't need a chartered accountant in India. I need nobody to give me advice. I'm simply sanguine that the interest which I have got is my income, nothing further to be done. And I do wish that even as we look at many of the other things on equity, it's a different subject, of course, altogether, that we are able to provide better certainty and ease of compliance to investors as we are doing for government securities.
Right. So even, using DTAA, the taxation treaties, as well as also routing through safe havens, all that cumbersome structuring, all that can be done away with this clarity coming in. Very well put, Dinesh Kanabar. Deven Choksi, what is required for the equity side to really become as robust and to also attract investors on that side? How grave is the situation, and what would be your suggestions at this point?
Well, I think the majority of it is basically being spelled out. When you look at Indian equity market and the taxation, Dinesh Bhai just alluded to this particular point. And in the debt market, I think equity side, you are charging, significantly different taxes. I think the STTs, the LTCG, the STCG. And as a result of which, I think it increases higher amount of burden. Whereas I think those horizons like Singapore or UAE for that matter, I think over there, I think these kind of taxes are not levied. In fact, I think STT is only unique to India. So from that particular perspective, yes, I think we are not giving a right signal to the outside world, for sure. We definitely have compulsion to collect money because of, running the economy. But at the same time, I think the hardship which it causes to the investors is actually putting them off. And that is where I think they're swing very quickly this money out of the country and put somewhere else where they see the better opportunities. In my viewpoint, I think this procedural issue, if they can be addressed, the rest of the fundamentals are definitely remaining in place. Today, Nifty 50 at a valuation at which it is quoting, probably historically, I think it has found buyers at such valuations. And I am not having doubt in my mind that this valuation, I think it attracts fairly well, provided some of the hassles go away. And I think the opportunity once again resurface for investors to come back.
Right, more opportunity for investors to come back to India, and of course, hopefully, rupee stability will impact. Neeraj Gambhir, very quickly, the other measures which are also going to impact the rupee movement, and what's the in-house call after this particular announcement on the rupee appreciation and the levels that you're looking at? Very quickly.
We don't have a house call on rupee appreciation because I think this is a short-term measure. It will have a short-term impact.
Right.
And then over a period of time, we will default back to the structural issue that we have, which is basically we have a current account deficit, which is going to become bigger because of crude oil prices. And we don't have, long-term flows like FDI at this point in time, net FDI flows. So we don't have an appreciation call. I think we could see some short-term appreciation, but once the flows are done with, then we could sort of move back to a depreciating territory. But hopefully this time around with lesser impact and much more milder depreciation than what we've seen in the past. Typically, rupee depreciates about 3 to 4% in a year, right? But that's adjusting for the inflation differential that we have between us and, let's say, US. Right now, the inflation differential is going to open up again. So maybe the pressure for depreciation will be there, but maybe not as much.
Neeraj, stay on. Piyush, my colleague who was right there at the RBI's press conference today, is joining in. Piyush, what are the specific sharp details on how rupee can really be impacted with today's announcements?
Nisha, the whole idea behind the measures that the RBI has launched is to attract dollar inflows and of course help rupee. The RBI has proposed that it will allow FPIs to now invest in 15-year, 30-year and 40-year GSECs, as against earlier they were only allowed to invest in 10-year GSECs. They have also eased the investment limit, the concentration limits, so that more FPIs can bring in money, and also they have introduced FCNRB deposits. They have said that they will bear the hedging cost for banks if they raise fresh FCNRB deposit. This move was done I think 11 or 13 years back last time. So these are very big major moves. In terms of inflows, yes, the governor did mention that they expect significant amount of dollars and foreign currencies to pour in. However, he said there is no particular target, and this facility essentially all these measures by both government and RBI are aimed towards bringing in FII and FPI inflows.
All right, Piyush, thank you so much for joining us straight from the Reserve Bank of India headquarters. Neeraj Gambhir, Dinesh Kanabar, Devin Choksi, thank you so much for your expert take on this big set of announcement that has really come in, and more needs to be seen on what happens to attract the equity fund flows as well. That's on our radar, but definitely government has been looking at drawing in the moolah and attracting the dollars. Thank you so much for tuning in.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India's most respected names, chose India's best and brightest.
I'm delighted to be sharing with such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait.
Good evening. Welcome to The Bottom Line. I'm Vikram Oza. Now, headlines normally tell you what happened, but this show is very focused on why it matters. Here are the news stories that we're tracking on the show this evening. First up, India's GDP numbers beating estimates. FY 2026 growth is pegged at 7.7%. The chief economic advisor saying that nominal GDP growth for FY 27 could be significantly higher than the one that is estimated of 10.1%. The government scraps capital gains tax to woo foreign funds. FIIs are going to enjoy zero tax on interest and capital gains for FPIs in government securities. It's a big boost to inflows. The CEA says that measures will help narrow the current account deficit going ahead from here. In the currency markets, the rupee has made a sharp comeback, erasing all its losses for the week after the RBI unveiled fresh measures to attract foreign capital. The rupee sees its best performance in 2 months. The RBI keeps the repo rate unchanged at 5.25% amidst the oil price shock. The RBI opting for caution as the inflation outlook rises. In the equity markets, we've ended above 23,000, slightly changed after a volatile session as investors digest a slew of measures by the government as well as the RBI governor's remark on policy. The Nifty and Sensex have both shed 0.7 percentage point each for the week. Prime Minister Modi says that while fuel prices swing globally and gas supplies strain, the government has kept oil flows steady, boosting solar push and also ensuring energy security, staying intact despite all the turbulence. The price of crude oil has eased slightly amidst uncertainty. Prices steady since yesterday. Trump now signaling optimism on ending the conflict with Iran. Brent holds around $94 a barrel. In the automotive sector, VinFast-backed Green SM has entered India with its all-electric taxi services. They've launched in Delhi NCR and they're betting big on EV mobility as the ride-hailing battle heats up in key urban markets that have been established by the likes of Ola and Uber. Up front, here is the top line, the big news that we are tracking this evening. India's growth story has ended FY26 on a stronger than expected note, importantly with momentum intact. And the economy has clocked 7.8% growth in the March quarter, beating market expectations, taking full year FY26 growth to 7.7%, which is higher than what economists had penciled in. So this is not just a statistical beat, it is a signal because this growth has come despite a difficult global backdrop from geopolitical tensions, elevated oil prices, weaker external demand and trade disruptions. My colleague Shrimi is joining us for a deeper dive into the numbers. Shrimi, how's it looking?
Well, India's economy grew 7.8% in the January-March quarter of FY26, slightly lower than revised 8% growth recorded in the previous quarter. But of course, the stronger than expected fourth quarter performance, which has, pushed full year growth to 7.7%, beating its estimate of 7.6%. While the FY26 number reaffirmed that India position as one of the fastest growing world economies, and in fact, CE Anant Nageshwaran indicated that FY27 could be more challenging year, of course, due to rising uncertainties. CA said that Finance Ministry would not provide a separate FY27 growth forecast and would instead, refer to RBI projection, which is, now 6 and below actually the 10%. He also noted that nominal GDP growth could be significantly higher than the budget estimate of 10.1%. A key concern, however, according to Nageshwaran, is that evolving West Asia crisis, which could perhaps pose both a significant supply shock and a potential demand shock to the global economy. Even so, high-frequency indicators such as domestic demand and economic activity in India have remained fairly resilient so far, and that's very important take from the CA. And on the external front, India's merchandise and overall trade deficit widened in FY26. That's also concerning, as CA said a similar trend could continue in FY27, potentially putting pressure on the current account deficit. However, this tax relief which we have seen by the government on FPIs will definitely improve the situation, he underlined. Government also flagged emerging inflation risk from supply side pressure. However, Nageshwaran remained confident on the fact that India's policy framework and ongoing reforms would help cushion the impact of global shocks if growth falls below 7% because of external development. In fact, government policies will help bring it back to around 7% is what the anticipation from the CA is coming. So overall, of course, it's a strong number, but we need to wait and watch for FY27, how that will pan out.
Certainly, that remains to be seen, Shrimi. Thanks very much. But the bottom line coming through is this, that India is still the fastest growing major economy. It's outperforming expectations, but the real challenge now is not growth momentum. It is how durable and how inclusive that growth can be in what is clearly a more uncertain world. And that's exactly what we put to the chief economic advisor, from growth resilience to capital flows and policy choices as well. This is what we got from V. Anantha Nageshwaran in this exclusive conversation.
At this point in time, there's no point estimates coming in from the FinMin, and we should go by what the RBI is estimating when it comes to GDP growth. So does that mean that at this point it's below 7%, the estimates?
No, obviously, it is you have seen multiple private sector estimates, multiple multilateral agencies, credit rating agencies downgrading not just India's growth estimate, but world growth estimates, developed country estimates, and Asia in particular is an energy importer, and energy prices have gone up by 40-50% depending on the benchmark that you are looking at. So it is natural that it will have an impact on growth outcomes this year compared to the previous years.
And that strong growth print that we are talking about is also explaining the policy shift that we are seeing. Because if India currently now wants to sustain this momentum, it needs steady and long-term capital, not just flows that come and go with global volatility. Which is why the government is now moving to make India's bond market that much more attractive to global investors. For years, foreign investors, they have drawn to Indian government bonds for their relatively higher yields and stronger growth outlook, but taxation on interest income and capital gains has been a key friction point. That friction is now being removed. Now, the government has exempted foreign institutional investors from tax on interest and capital gains from government securities. It is a clear push to deepen the market and to widen participation as well. So the idea is simple. You bring in more stable, more long-term global capital, especially at a time when external conditions remain uncertain, and then capital flows can turn volatile very quickly. So the bottom line on this is that India is not just growing faster than expected, it is now aligning its policy framework to sustain that growth, making the debt market that much more competitive and investor-friendly in the process. Let's bring in what the RBI Governor Sanjay Malhotra had to say about this.
We are expanding the universe of specified securities by including all new issuances of 15, 30, and 40-year tenor G-Secs. Till now, only government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration, and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing.
In fact, on this subject, not just the RBI governor, we also had a word come in on the new FPI norms in that exclusive conversation that we had with the chief economic advisor. This is what he had to say about it.
A bunch of new measures have been announced to incentivize more and more foreign investment to come in. Talk to us about what went behind it, what is the rationale, and what do you make of it now?
I think the rationale is to make sure that India is in alignment with the global practices, and investors ultimately do make their decisions based on what is on offer from all countries. And on that basis, we have brought ourselves on par with what is happening elsewhere. And therefore, at the same time, keeping in mind the overall macro external stability considerations in mind, because there is an overall ceiling as to how much we want to have foreign investments in the government securities. That has been kept in mind. At the same time, within that framework, we wanted to make it smoother and easier for foreign investors to access the Indian sovereign bond market, which is what the government has done.
So those new norms really opening up something that could be that much more long-term in terms of keeping the foreign inflows going. Meanwhile, the rupee has staged that sharp comeback. It's erased all its losses for the week, and this has happened after the RBI unveiled those fresh measures to attract foreign capital. The currency has strengthened nearly about 0.8% this week, if you see its trajectory, and has slipped below that 95 to the dollar mark for the first time since Monday. While the easing of pressure from the Middle East conflict and the RBI support, both of these have boosted sentiment, the bigger picture on the Indian currency remains the challenging one. It's still down around 6% against the dollar so far in 2026 alone. It remains nearly 5% weaker compared to levels that we've seen before the Middle East war erupted. The markets are now going to watch whether foreign inflows can sustain this kind of recovery on the Indian rupee. Meanwhile, amidst continued volatility in global energy markets and the elevated crude oil prices, the Prime Minister has spoken, acknowledging that the pressure from the fluctuating fuel costs and saying that India is facing the challenge strongly. His remarks come at a time when the government is looking at shielding the economy from global energy shocks while maintaining supply stability, something that he spoke about. Listen in.
इतना बड़ा ऊर्जा संकट इसने पूरी दुनिया को अस्त व्यस्त कर दिया है। दुनिया भर में पेट्रोल की कीमतों में लगातार उतार चढ़ाव हो रहा है। गैस की सप्लाई चेन ध्वस्त हो रही है। लेकिन भाइयों बहनों, मुझे बहुत संतोष है कि 140 करोड़ भारतीयों के साझा प्रयासों से देश ऐसे हर संकट का मजबूती से मुकाबला कर रहा है।